Good morning, everybody. Welcome to September. Did you miss us? Spencer Israel, back with you for day 2 of the first ever Benzinga Crypto Festival. We went 9 to 5 yesterday. We're going 9 to like 5:30, maybe later today. A lot more going on. Justin, how are you doing today?
I'm doing great. I mean, yesterday was a really exciting day. And what was cool is that, our audience kind of hung with us the whole day. The energy stayed high and we had great content the whole time. So I look forward to today about the fact that we've got more of a focus on sort of education for the retail investor, looking at charts, being able to, dealing with new ways to be able to buy Bitcoin and so forth. I think it's going to be a really good show. And of course, we're kicking off with Ben Armstrong, the founder of BitBoy. It's going to be a good day.
Yeah, is there like a theme today that you're picking up on?
Well, going over the content, I was thinking like yesterday we had more about high-level projects and about tokenomics and the way that it's kind of affecting the economy from like a 10,000-foot view. Today, I think that we're going to have more practical advice about people who are looking to get in or people who have maybe got in just the past couple of years. So I think that'll be really useful for people.
Speaking of content and presenters, let's go over the plan, the agenda, if you will, for today. There's the agenda up on the screen. You mentioned Ben Armstrong, a.k.a. BitBoy, will be coming on in about 7 minutes from now. And then it just keeps on going from there. Neal Bergquist on after that. Stephen Ehrlich, the CEO of Voyager. You should all know that company. Grayscale. You should all know that company. We're talking Bitcoin IRA. Chris Kline, Tastyworks, John Najarian, who you should all know from CNBC. We got big names throughout today. I'm just going through the list here. Anyone, aside from our next guest, you already mentioned, anyone jump out to you, Justin?
I'm excited to have Grayscale on, of course. That's a $500 billion fund. So that's they've just gotten huge over the past 6 months, particularly. Really look forward to hearing what they have to say. I think that this is going to be great. It's going to be a great day of content.
Yeah, I'm excited for this hour right here, the 2:30 and then the 2:50 panel with mining. CEO of HUD 8, CEO of DMG Blockchain, CEO of Marathon Holdings, Fred Thiel, and then Chief Mining Officer of Bitfarms. That'll be moderated by our crypto editor, Captain Ross. Just a ton of great people presenting, speaking, discussing today all about the world of crypto. So that's the plan for today. Do me a quick solid, everyone, if you will. I promise I won't bug you too many times to do this today. Well, I might bug you, but smash that like button. Smash that like button, please. Yesterday we got to a pretty good number of likes. We were over 500. So just go ahead and hit that thumbs up. Hit it with your elbow. Hit it with your pinky. It doesn't matter how you hit it. Just go ahead and do that there. We appreciate that. Hey, while you're here, you want to subscribe to our channel? That's cool too. I'm not going to say don't do that. Thank you very much. Okay. A few housekeeping items to get to before we get to our first guest. I mentioned the like and the subscribe. I want to mention the Slido. We did this yesterday. We're doing it again today. We are giving away a free 1-year subscription of Benzinga Pro. As I share my screen, all you have to do is scan the QR code on the screen onto your phone and just participate in the questions. You don't even have to get them right. You just have to answer them. And at the end of the day, probably around 5:30 or so Eastern time, we are going to randomly give away a 1-year subscription of Benzinga Pro to the one person who participated in the Slido today. I'm going to keep this up. I'm going to keep it going throughout the day. I'm going to bring it up periodically and just, bring it up on the screen and encourage participation. And you could be the winner. Yesterday, our winner was like A-Chan, something like that. I think A-Chan was our winner. So A-Chan, you're not going to win again today. I promise. We have a new winner. So stay tuned for the Slido throughout the day. As I said yesterday, we encourage participation. We're not doing this for our health. We're doing this for you. Drop questions in the chat all day, right? Just any question you have of a speaker. We have like an army of people moderating or watching the chat like a hawk.
Right.
And their job is to funnel the questions from the chat to us. So we will do our best to answer or to ask those questions, get them answered for you. It can't hurt to ask. It can't hurt to ask. That's what I'll say about the chat. Yeah, Justin, just again, super excited.
It is a participatory event. Part of what was nice yesterday is that there was strong participation throughout. Lots of people asking questions. So please, but as Spencer said, drop your questions in the in the YouTube comment section, and we pick them up here and we review them. You're helping to actively make this a better event with your participation. So we appreciate it.
That's exactly right. And let's just take a moment to and I did this yesterday as well, but let's just applaud the month of August, right? I mean, shout out month of August. Great month for Bitcoin. Great month for Ethereum, right? I mean, finally, Ethereum broke out of that range yesterday. I'm sure our next guest has thoughts about that.
Not half bad for NFTs either.
Volume on the NFT front, went back to where we were earlier in the summer, right? I mean, it's just a great month for August. We can only hope that it continues. And everyone's saying September, everyone knows, people in the stock market know September is historically the worst month of the year for stocks. Maybe that means a great month for crypto. We should be so lucky. That's kind of all I have to say. I think we should bring on our guest. I see him here in the green room or in the backstage here. I think we should bring him on. It is a minute early, but who cares? Our next guest is today's keynote speaker. You all know him. He was named the #1 Bitcoin influencer on YouTube. BitBoy, aka Ben Armstrong, aka BitBoy. Your legal name is not BitBoy. Last I checked.
You could get it changed. You can get legally changed, Ben.
No, not yet. Unfortunately, we still go by Ben. Even though it's a little awkward to be known as BitBoy as a 38-year-old man, but you know what? I'll take it.
Well, yeah. I mean, you could just go with Bitman sounds weird though, so you don't want to. Yeah, it sounds weirder than BitBoy probably.
The pronunciation would be weird. You have to pronounce it like Bitman.
It sounds like a comic book. We can make an NFT out of that. We could do The Adventures of
Bitman. Anyway, okay.
I don't know if I'm feeling it, guys. I got to be honest.
I don't know. Ben, what are we talking about today?
Yeah, well, I was listening to what you guys were talking about how, yesterday was kind of high-level view of the economics of crypto, tokenomics, looking at high-level projects. And today you were going to talk about the theme kind of is like practical information on how people get into crypto. I'm going to tell people a little bit about my crypto journey, how I got here. I wasn't always the #1 YouTuber. In fact, at one point, I had made big mistakes in crypto and lost a lot of money. And so thought I'd share some advice with people on that front. And, everybody who's new to crypto can relate on that level. You're new to crypto and you're wondering how to get in. So I figured we would go down that road today.
That's great.
Awesome.
Well, we really look forward to it. And thank you for joining us today, Ben. We very much look forward to the presentation. Guys,
smash the like button for Ben. Let's get to it. The floor is yours, sir.
Okay. All right. Well, I thought I would talk about, like I mentioned, to everybody that's new in crypto. I want to give you guys my experience getting in because I've been on a long road with crypto. The first Bitcoin I bought was back in 2012. And so people hear that and they say, man, you must be like really rich. You got all the Bitcoin. You got so much money. You're so lucky. And no, I did end up there, but that's not exactly, it wasn't a straight line. So a lot of people know my channel. We obviously have the most viewed channel in all of YouTube in terms of crypto, the #1 crypto community, the Bit Squad. We've got today or tomorrow, we're actually hitting 5 million total followers across social media. So a giant milestone that nobody's been able to, even come close to. But it wasn't always like this, and YouTube wasn't always easy for me. So I'll go back to I was getting my beginnings in entrepreneurship. So back in 2011, I worked at a car wash. That's what I did. I was making $25,000 a year as an assistant manager. And, I was newly married and I felt like my life was going okay, but we were struggling financially. And I just figured, I got to do something different. I got to start a business. So I decided to start a ticket business where I sold concert and sports tickets. That was in January of 2011. And that was going so well. So first year I made 6 figures. The second year I was absolutely crushing it. But something happened near the end of that first, or near the end of the second year in 2012. Basically, I was using a software to post ads onto Craigslist to sell my tickets. But what happened is Craigslist didn't like that service. And so they shut the guy's website down and his payment processors. Visa wouldn't work with him. And so, he didn't know what to do. He shut down his payments for about 3 or 4 months. And he came back and said, hey guys, I found a way to keep the business going. Is this thing called Bitcoin? And I was like, what is this? I had done like some online gambling before. It sounded like some kind of cheesy currency they would use on like an online casino or something like that. So I was like, Bitcoin, all right, sure. I'll check this out, see what happens. So complicated. It was so hard to use. We had to use a site called Mt. Gox, which later on would be the biggest hack in crypto history. And then we also use something called BitInstant. If you've watched Banking on Bitcoin, you might know about that. Charlie Shrem, one of the, kind of founding members in crypto, I guess you could say. He had this thing called BitInstant. You would work with BitInstant to
Looks like we may have lost Ben there for a second.
We're having a little bit of a storm with some possible flooding here in the Northeast. I wonder if maybe he's having connectivity issues.
I think BitInstant did not like where he was going with that. I think that's what happened here.
This is why we need decentralization, because they can control our access to Ben from BitBoy.
We are working on getting Ben back. As soon as I see him back, we'll just bring him right on. I think in the meantime, this is an appropriate time to do our very first crypto update of the day, brought to you by Voyager. Let's get that going, shall we? As I said at the top, it was a great end of the month, especially for Ethereum. Bitcoin starting the day in the red, kind of the same story as yesterday. Ethereum continuing the theme. Hey, no sooner do I get going, does Ben come back? Screw the. We'll get to the Bitcoin update later. Let's get Ben back. There we go.
Oh, sorry about that. Had a little Wi-Fi issue. We think I switched over to my phone. So
all right, we're back. So
running an internet business is difficult when the Wi-Fi goes down.
We were talking about BitInstant is where we left off.
Yeah. Right. So I was using Mt. Gox. I was using BitInstant, and there were no websites really telling you how to do it. You had to figure it all out, and it was very slow and it was very clunky. But I was able to get the Bitcoin over to the guy. The name of the website was Clad Genius. That was the name of the software, and it worked pretty well. And so over the next year, I would use Bitcoin. I would over about $10,000 worth of Bitcoin transactions using Bitcoin as it was originally meant for, which was as a currency. Now we know that Bitcoin has really shifted towards digital gold. And the reason why it shifted to get digital gold is because of stories like mine. $10,000 worth of Bitcoin bought between about $12 and $50, somewhere in that range, mostly between about $12 and $25, used as a currency instead of used to appreciate in value. Now, if I would have taken that same $10,000 and not paid for the service, well, in the short term, it would have been bad. I wouldn't have had the software. Over the long term, that would have been worth, well above 7 figures. And I just kind of threw all that away. And here's the key point. The reason why I should have had so much money in the beginning, but I didn't, was because I didn't understand Bitcoin. I didn't understand crypto. We did not have the education resources around in order to educate ourselves on truly what this new technology was. And so what happened is about a year later in November of 2013, that was really when the 2013 bull run was, heading towards its peak. Bitcoin went up very considerably. I think it was around $200, somewhere around there. I had some money left in my account, and that money turned into thousands of dollars. And it was just money I had sitting there, to make payments with. And so I was like, man, what an exciting thing. So I used a website called localbitcoins.com, and I met a guy at McDonald's, and over the Wi-Fi, I transferred my Bitcoin over to him, and he transferred money over to me. And it was about $2,000 to $3,000. I paid some bills. I took my family on vacation. I think we went to the beach, and it was really fun. Now, fast forward to 2017, when I'm watching the price of Bitcoin go up $1,000, $2,000, $3,000, $6,000, $10,000, $20,000. I'm sitting there doing the math on how much money I should have, but I didn't have. In between 2000 and the end of 2013, really 2014, in February 2014, that's when Mt. Gox crashed. And I thought at that time that was pretty much the end of Bitcoin because that was all anybody was using at that point, really. I didn't even know what self-custody was. And so when Mt. Gox got hacked and crashed, I kind of thought Bitcoin was over. I bought and sold it a little bit over the next couple of years, but it wasn't something I paid a lot of attention to other than just checking the price every couple months to just see where it was. Now in 2017, I'm watching the price go up and up and up. And I'm thinking, man, I really missed out. I missed out on this opportunity. And as I'm thinking about the millions of dollars I shouldn't have while I'm struggling to buy Christmas presents for my kids because my business had already folded by that point that I was originally running, I was just kicking myself on how stupid I was for not getting the education, for not learning about what this was. And I said, you know what? Even though it's 2017 and I feel like I missed it, I feel like I'm late, I feel like I had the best opportunity, I threw it away. I'm going to go all in on crypto. I'm going to go full-fledged to the hilt. I'm going to take all my time, energy, and resources, and I'm going to put it into learning about crypto and becoming an expert. And, a lot of people, they see the money that YouTubers make in crypto because it is a considerable amount. And they're just like, man, these guys, all they do is they get on here and they talk about crypto and they do this and all these projects come to them. And, the money seems so easy. I'll tell you, for many, many years, it was not easy at all getting that YouTube channel. I started in January 2018. The worst possible time you could start a YouTube channel because that was the peak of the market. I didn't start making regular videos until deep in the bear market, about March or April of 2018. But here's what I tell people. People judge people that get into crypto and make all kinds of money, whether it's a founder of a project or whether it's someone that runs a community or a paid service or a YouTube channel. The smartest thing to do in any business, in any industry, is to get involved in that industry. So when it comes to people getting new to crypto and wanting to jump in, my number one piece of advice to you is don't just figure out how to learn about crypto, because that's definitely a key component, but figure out how you can get involved. One of the highest guys over at Tokenmetrics, a company we work with, one of their executives, he started out as an admin, a moderator in their Telegram group. So you don't have to necessarily go get a blockchain degree in order to jump into crypto and get a career, but you got to do something. Just start somewhere, start doing, a little thing here, reach out to somebody, say, hey, do you need any help? Whatever it is, because getting involved in crypto is the most lucrative thing that you can do. If you just as an investor, you're going to make money. But the more that you get involved, if you create content or you get involved with companies or you start working with tokens, those are great ways to really make a lot of money in crypto, and you're doing positive stuff and you're playing a role in the ecosystem. And I think all of that is extremely important. So a lot of people know this story. It's kind of a meme at this point, but Wells Fargo, a lot of people know Wells Fargo. They're a bank. They're our enemy. I hate banks. If you guys, haven't watched my channel before, I cannot stand banks. It's a long, complicated history with them, but I really do genuinely hate banks. And so you look at Wells Fargo, it's somebody we hate, right? It's like they're a centralized bank. They're a terrible player in crypto, yada, yada, yada. All that stuff is true. But you go back to the gold rush in the 1800s in America. A lot of people don't know this. The people that went out west, 90% of those people did not find gold. Less than 10% actually came back with something decent to considerable. Okay. Wells Fargo. I think the guy's name was actually Henry Wells. You guys can fact check that. But Henry Wells was the guy that started that company. And what he did is he said, okay, everybody's coming out here to make this money, to get this gold. You know what I'm going to do? I'm going to provide them with the resources to get that gold. So he sold the shovels. He sold the flashlights. He sold the pickaxes. He sold the helmets. He sold the mining carts. He sold the pans. He sold everything that people needed to use to find the gold. And through selling those things, over time, he actually developed a company that made more money than anyone who ever went out there to find the gold. And so that's the way that I look at the education and the resources in crypto here, is I'm enabling people and I'm helping people to find financial freedom through crypto assets. I'm giving them the resources they need to be able to carve out a niche for themselves, whether it's in the industry or whether it's just, through investing. So I think that those are the key things that we do here at BitBoy Crypto. I mean, our mission statement here is empowering people to find financial freedom through crypto assets. And that's what we do. But you got to find a starting point. You have to find somewhere to dig in. as I mentioned, as I was meeting with that guy at McDonald's to sell him that Bitcoin over the McDonald's Wi-Fi, and I think about how rich that guy's got to be now. He's got to be, a gazillionaire, I guess. But as I was waiting on him, he actually went to the wrong McDonald's. And so I remember I was there an extra 30 minutes waiting on him to arrive. And during that time, I just remember doing research. Like, you know what? Maybe before I give all this away, maybe I should know what this is. Maybe I should know a little bit more about Bitcoin, a little more about blockchain. And as I was going through these websites, they look like 1995 GeoCity sites. That's what they look like. They didn't even look like nothing like what we have today. And this was back in 2013. There just weren't the resources out there. There were not YouTube channels. I think Bitcoin Uncensored, the Krista Rose podcast, was maybe the only channel out there on Bitcoin in 2013. And I'm not, I like to say I'm not a nerd. Like, I wasn't on Bitcoin Talk Forum. Like, I don't do mining. I don't do developing. I don't do gaming. I don't do a lot of the normal things, the typical things you see people do. I'm just a normal guy. I like football. I coach my kids' baseball teams. We go do stuff as a family. We go to the park. We go on hikes. We go on walks at the park. We don't go on hikes. That was a lie. I don't know why people like to hike. I don't get it. It's hard walking. Anyways, I digress. But I'm just a normal guy. And so for me to be able to get into crypto, like, I really needed stuff laid out to get me there. And those channels were not there at that time. So now anyone who wants to get in crypto, you have all of the resources available, whether it's my channel or any of the other great crypto channels that are out there, whether it's, Cryptos R Us, or whether it's Crypto Zombie, or, or Lark Davis. Any of these guys are great YouTubers. Crypto Jeb. These guys are great YouTubers that can provide you with the resources. We have all of the crypto media out there. CoinDesk, Cointelegraph, or as I like to call them, not so affectionately, Cointellali. The thing about all these crypto news sites I would warn you guys about is some of them are very narrative driven, and a lot of times they're involved in price manipulation when you look at Cointelegraph and CoinDesk specifically. So be a little careful with that. But the fact is, all of the news that you would possibly want is out there. It's on a smorgasbord for you to go and pick through and figure out, whatever is related to what you want to learn about. We've got so many great projects out there now. We have not only Bitcoin and Ethereum that everybody knows about at this point. The XRP also been around for a long time, but we've got projects like Uniswap, or like Cardano, or VeChain, or Polygon. These are great projects, not only to invest in, but to learn about. My number one takeaway for you guys is this. I told you my story. I told you how I should have had so much money. Eventually, I got involved in the industry and was able to take some of that back. But the number one thing is, I did not understand what I was investing in. The key takeaway for you guys is, if you're going to invest in crypto, you need to, on some level, understand what you're investing in. You're not investing into 3 or 4 letter ticker symbols. You're investing basically into crypto venture capital projects, as Michael Saylor said when he was on my channel. That's what all these other altcoins are. They have certain purposes. You need to understand the purpose and the use case of where you're putting your money in. The people who believe in what they're investing in my opinion, will always do better than those who, don't really have a clue where they're putting their money. You're always better off as an educated investor. So that's my takeaway for you guys. I think that's my time. So I certainly appreciate you having me on, and good luck to everybody in their crypto journey.
Thank you so much, Ben. My takeaway from all that was all of this just comes down to somebody going to the wrong McDonald's. If that hadn't happened, then you may not be here.
Yeah, who knows? Well, that is one thing I do like to talk about a little bit. Is I missed out on millions of dollars by selling early and not understanding what I was putting money into. Yeah. But if I would have just kept all the money in there and made it all, I wouldn't be doing what I'm doing today. And I'm very passionate about crypto, and I love spreading the message. I'd probably be retired on an island somewhere. So I think it all worked out the best for every party. And usually in life, we look back, and that is what happens. Is it seems like there's a plan sometimes. Sometimes there's a purpose to everything, and that's how I feel about my situation for sure.
In all seriousness, like what Ben did not let the FOMO crush him. He didn't say, "Oh, I missed it. It's over. I'm too late forever. It's done." There will always be another train. Mm-hmm. You don't have to catch everyone. Ben missed the first one. but he got right back on the horse, right? I think in all seriousness, that is the biggest takeaway from your story. And I think there's a really valuable lesson there. So thank you so much, Ben, for joining us today and being our keynote
Thank
speaker.
you for coming, Ben. And it's turned into serious content for the rest of us. If you would have become you'd be on a tropical island, we'd be missing out on all that great content. So, by all means, we've got your URL up on the screen. Everyone go ahead and follow Ben's channel. Great videos, great practical advice for retail investors.
Well, thank you so much for having me on, guys. Appreciate it.
Thanks a lot, Ben. All right, let's go back to the crypto update that I was in the middle of before we during that rude Wi-Fi interruption here. So as I was saying, there's the Benzinga crypto homepage, right? You see the heat map. It's pretty self-evident, right? If we drill down a little bit deeper here, as far as what exactly is going on in the world of crypto, Bitcoin, it's what I've been saying like for weeks now. Call me when it breaks out of the range. Nothing really to see here. Ethereum, excuse me. Ethereum, we had the breakout. Let's go, everyone. Let's go. This is what we wanted. This is what we got. There's really no, and I'm not being like a fancy technician in saying that like it doesn't take a genius to say that this looks good. This breakout, you can see it failed 1, 2, 3, 4, 5, 6 times. And finally broke through yesterday. This looks amazing. I just want to look at the top gainer and top loser of the day in crypto. Top gainer for the moment is FTX token. This company has a valuation of what, like $18 billion or something. They're everywhere. They're everywhere. Frankly, if you're a baseball fan, you've seen FTX on the shirts of the umpires. This company is everywhere. This is the top gaining crypto of the day, up almost 10%. Your top loser of the day, this guy, Perpetual Protocol, down about 7.5% today. There's your daily. These are all daily charts, by the way, on CoinMarketCap. So that's it for your crypto update. As a reminder, all these crypto updates are brought to you by Voyager. Here's how you can get free Bitcoin, $50 worth to be exact. Step 1, you download the Voyager app. Step 2, you fund an account with $100. Step 3, you use the offer code ZING. And step 4, you get $50 free in Bitcoin. There it is, your Benzinga crypto update. First one of the day, brought to you by Voyager. I see our next guest. Our next guest is here, Justin.
Yep.
Who do we have?
It is Neal Bergquist, who is the CEO of Coinme, coming up next,
and the co-founder. Let's bring Neal on. If we got him, I think we do.
CEO and co-founder. You're right.
There we go. Neal, good morning.
Hi, good morning.
How you doing today?
I'm great. Nice and early here in Seattle.
Well, yeah. Well, thank you for waking up early. I hope you got some coffee before your presentation. At least you're not being flooded like us in the Northeast. We've got a terrible rain here. But thank you so much. We look forward to your presentation.
Yes, absolutely. Well, happy to be here, and thank you so much for the opportunity.
Yeah, you should just be glad that we chose not to start this at like 6 a.m. our time.
I appreciate that.
You're welcome.
Definitely. So.
All right, let's go.
All right. Well, good morning, everyone. Really happy to be here to talk about why cash access is important for global crypto adoption for cryptocurrency. I'm Neal Bergquist, co-founder and CEO of Coinme. Coinme was founded in 2014 with a mission to be a gateway to digital currencies and a better financial future. Our first product was a Bitcoin ATM. It was one of the first in the world, the first licensed in the US. And from day one, we've been focused on creating this physical gateway that accepts cash into this new magical world of digital currency. Just a little bit about Coinme before diving in. Like I said, we believe that having that physical gateway where physical cash can be converted into electronic cash, such as Bitcoin or other digital currencies, and then thanks to the interoperability of blockchain, can be sent to any phone in the world. This is really the revolutionary opportunity here where we have the opportunity for an internet currency to be distributed peer-to-peer in an internet-connected world. And this is what's extremely exciting about the opportunity that digital currency creates. And us as a business are very focused on being that trusted and secure on-ramp. And then once you build the platform for supporting the world's internet currency, you're then able to develop the ability for individuals to trade between currencies, to earn interest, to pay, and be able to live a multi-currency life, which is the macro trend here that we believe people are going to be transitioning into over the decades to come, not just living in one fiat currency, but truly living multi-currency lives and living their financial lives in those various currencies. Just want to rewind a little bit. If you are a Bitcoin hodler, or if you're just new to digital currency, it's really important just to rewind to the Bitcoin white paper, which was written by a pseudonymous Satoshi Nakamoto. And I just want to highlight a few things in here. One, this is obviously the protocol and the explanation for Bitcoin and blockchain technology. I don't think Satoshi thought that this was going to be a white paper about a protocol that could be modified to support altcoins that are influenced by social influencers and memes. The initial vision for the Bitcoin white paper, which was written during and published during a time of the 2008 financial collapse, was really about this idea for a better system. And the headline of this white paper is a peer-to-peer electronic cash system. The idea is similar to what I outlined, in the sense that we can take cash online, have it be trusted through a distributed, decentralized network, and through code that cannot be manipulated by any country, person, or organization. But in order to make this vision a reality, we literally have to bring the analog world of cash into this magical new world of electronic cash in order to create this system. But we have an access problem, as we are not currently at crossing the chasm for global crypto adoption, and we still have this access problem today. Just looking at a little bit of the numbers, there's a few different reports on this, but about 14% of people in the United States own cryptocurrencies, including Bitcoin, which on one hand you could say is quite impressive, considering we're only about 12 years into this. It's one of the fastest adopted technologies ever. Globally, though, we're below 1.5%. So we still have a long ways to go. And then if you look at ownership of Bitcoin specifically, a lot of people accumulated Bitcoin early on, and even today, 90% of all the Bitcoin is owned by less than 10% of Bitcoin addresses. So there's definitely been some lopsided adoption in terms of who is actually owning Bitcoin and then shares in the benefits of having that as a store of value. But solving the access problem distributes access and financial prosperity. If you look at the cash sector and the existing financial institution and how they do miss large populations even today, looking at just under 2 billion people are considered underbanked or unbanked. And even in the United States, you have almost 80 million people that live in cash. For a developed country, that might even seem high, but it is high. But as we know, the existing financial institutions have not addressed the need of people, all people. In looking at cash, I think it's important for us to I'm not sure exactly where you're from, but there is this kind of Silicon Valley mantra that everything is digital, everything's online, that is the future. And while I don't disagree, we need to be cognizant of where people are at. And the reality is that many people are still in cash and stuck in cash, and need to be met where they're at with a cash on-ramp. And so looking at some data, there's over $1.2 trillion of US currency in circulation. If you were to ask any entrepreneur, is $1 trillion market big enough for you, they'd say yes. And that is a lot of cash that needs to go into digital currency. According to IFAD, you're looking at remittances, about 90% of remittances are cash originated or received as cash at the pickup. There's some other reports that say it's close to 80%, but the reality is the majority of the $700 billion annual remittances that go cross-border are cash. You look at payments. Europe, 70% of payments in Europe are cash-based, even 30% in the US, and it's the primary payment method in many developing countries. So if we truly want to build an electronic cash system, we need to actually have a way to get that cash into this new system. And specifically within remittances, if remittances are being sent as cash or picked up as cash, you look at this as a significant impact to GDP for certain regions in the world. And so you can see how with these particular regions, how they would be more inclined to live in cash if they're receiving cash as a large portion of the money flowing into those countries. Again, digital currency has the opportunity to be a cross-border internet currency that's peer-to-peer and can be near instant and very low fees and be distributed. So being able to have those types of opportunities go after these cash markets will really help get people into digital currency and adopt a digital currency life. So really the need for ubiquitous access, in looking at digital currency and fast forward, I hope that we don't end up in a situation like we are with stocks in the United States. Reality is that stocks are owned by a few people. So you have 52% of families in the US even have stock. And it's obviously much, as you see here, disproportionate to higher income families. And this has traditionally been because for a lot of reasons. One, you had to have a separate brokerage account to even own stocks. You had to be able to have enough money to buy a stock. You couldn't buy a fraction of a stock. And then even being able to use cash to buy stocks. And then you also have the literacy aspect of the complication of stocks. And so when the United States has monetary policies of quantitative easing or being able to have bailouts for companies that benefit the shareholders, really only a small portion of the United States is benefiting from those. And everyone else that holds cash, well, their cash is now worth less. And so it only accelerates the divide between the rich and the poor, which we've seen only accelerate dramatically, particularly since the 2008 financial crisis. So we don't want to end up in a similar situation. Another reason, which probably the most important reason, is that fiat currencies are inflating. In fact, they're inflating faster than ever, particularly today in response to many of the monetary policies that have come after COVID. In the United States, believe it or not, 35% of all of the dollars in supply have been printed in the last year and a half. So you have this massive increase in the supply, which decreases the spending power of those dollars. And the United States is actually faring fairly well compared to the rest of the world. And so inflation makes your money worth less. Another reason for why Bitcoin and other digital currency access is extremely important. I don't think I need to convince or share much about the value in Bitcoin as a store of value. One way I've always liked to look at it is just by looking at the lowest price. People always say, oh, Bitcoin's volatile. Well, just look at the lows. Don't look at the highs. And every year, Bitcoin has not dropped below its previous year's low, except for 1 year in 2015. It has roughly a 220% annual compound rate. It's tripled in value over the long term. Bitcoin has proven to be a store of value. It's also proven to not be correlated. Thanks to our investor at Pantera Capital, they put together a lot of great data on the correlation of Bitcoin with other common assets or alternative assets. And Bitcoin has proven to not have correlation to stocks, bonds, oil, and other assets. So when the economy goes south, all of us digital currency holders will actually have a true hedge, where really all of these assets tend to move together with the macro economy. And looking at Bitcoin as money, money actually has a definition and some clear characteristics with it. Is it divisible? Is it shareable? Is it secure? Can it be counterfeited? And Bitcoin and Ethereum and other digital currencies score extremely high as a better form of money. specifically on it being able to be divisible up to 8 decimal places. You can buy a fraction of a penny of Bitcoin. It is decentralized, which helps create trust and to be able to have it be globally available. Chargebacks and frauds, easy to verify, free to store, depending on how you choose to store it. 24/7, no blackout periods. And so as companies like Coinme build the infrastructure, the ability to use Bitcoin and other digital currencies to pay for goods and services, we're seeing a lot of growth in that area. There's now over 15,000 merchants globally that will accept Bitcoin for payment. I'm sure if you met someone on the street and said, hey, would you like my Bitcoin? They would say yes. So there is a social perceived value in Bitcoin, which helps prove that it can be a better form of money. So it scores very high. So really cash gateways to Bitcoin are necessary for achieving the vision of a global peer-to-peer electronic cash system. And just real quick, just a little bit about Coinme. That's what we're doing. We've grown to about 17,000 cash locations in the United States through partnerships with Coinstar and MoneyGram. MoneyGram has over 350,000 locations globally, and our partnership is an opportunity to activate the entire map, depending on regulatory approval across the world, which is always a changing landscape. So this is a way for now the majority of people in the United States, including Alaska and Hawaii, which isn't mapped here, the majority of people in the United States now have the ability to conveniently buy Bitcoin with cash. And so it's taken 7 years, but we've been able to solve that access problem. Now it's mostly around awareness and education. And now with our mobile app, we're literally bridging a digital world with a physical one in order to enable people, more people, to have access to digital currency, to be able to not only hold it as a store of value, but also leverage it as a medium of exchange, and then soon be able to invest and trade between different digital currencies and be able to then eventually spend natively. So really ushering the analog cash world into a digital future. And we believe that when digital currencies are accessible globally, that in a crypto-enabled world, we can all rise up. And this is the promise of having equal financial prosperity be available globally, where developing countries don't have an unfair advantage, so to say, because of their fiat currency performing better, or because of their access to financial products. And so this truly is a revolution and an amazing opportunity in time to be able to distribute an equal financial system for people all over the world who actually have cell phones but may still transact in cash. If this is a mission that fires you up, we are hiring very quickly. If you go to coinme.com and go to the careers page, there's several different positions that we're hiring for, and please check back if there's not a position there that you think makes sense. And we're always posting new ones, and we welcome you to joining and helping build the future of money with us. So thank you so much for the time. Looks like we have a few more minutes here, so happy to take any questions that you all may have.
Yeah, here's a question from Delia Mendoza. I hope I'm saying that right, Delia. Do you think the initial vision for Bitcoin will ever be realized, and how close are we?
Yeah, I don't think we're very close, although I do think that it has made a lot of progress in just 12 short years. I think we'll see. I think that's kind of what is motivating, is the idea that it is a vision and it is an ideal, and I believe that there's opportunity there. But I think unfortunately there's governments that particularly communist governments that are really preventing their people from accessing digital currencies, and that will ultimately become the biggest headwind to global realization for the vision.
And then here's another one. So much has been said about the digitization of finance. Do you think this will ever shadow the need for cash access to crypto?
Yes. Yeah, I think that's very likely. particularly as you're seeing, mobile phones and the ability to have money native on the phone that's more convenient and faster. And as we see global internet be rolled out, eventually with satellite internet, internet access won't be a problem. So there's a few barriers, internet access, reliable power, and then being able to have a mobile phone that can truly be a wallet. Yes, eventually digital cash will be better than physical cash. But it takes time, and that's going to take decades. I don't think it's going to happen overnight. I definitely believe it's going to happen, but that's what we're doing, is to be the reason why people are going to move from cash to digital cash through our infrastructure.
And then here's an interesting one. What do you think about quantum computing? Will that be of value to Bitcoin?
Potentially. I've heard it go both ways. Whether it might be able to be a threat to Bitcoin. I think, one thing that maybe gives me some confidence is, the blockchain does have a governance system to evolve. I think that's been one of the bigger challenges to see to date of how it evolves. We've obviously seen different coins and offshoots, with different theories. But I believe that now that digital currency is worth so much, and as companies take positions, and as hedge funds and even governments, that there's such an incentive to protect it, that will ultimately drive, where the adoption for quantum computing gets applied across the industry.
Here's one that I'm not sure you can answer. They're asking which crypto you think will be the future de facto, whether it's Bitcoin, ETH, or something else. I don't know if you have any opinions on that.
Yeah, I think it depends on the use case. I think what's really cool about digital currency is you have different currencies for different use cases. Whereas with like fiat currency, it's kind of all blended as the same. I think some will be looked at more as like a digital gold or an alternative store of value, and I think others might be leveraged more as a medium of exchange. But I'm still bullish on Bitcoin because, for example, there's ways to overcome the technical limitations of Bitcoin. Then Bitcoin has the greatest global brand awareness. I think that a lot of people will move into Ethereum and other altcoins more from a speculative perspective, but payment platforms can be built on Bitcoin fairly easily and process transactions not on the Bitcoin blockchain, but on side chains or through the Lightning Network, or even through a centralized processing engine, and then it settles, on the Bitcoin blockchain in batches. So there's ways to overcome some of the Bitcoin limitations. I think just because of the brand that Bitcoin has, that's probably going to be the leading one for the foreseeable future.
Last one here. Is Coinme expanding into different countries, and do you plan to list other cryptos?
We're currently working on listing other cryptocurrencies and look forward to rolling that out probably in October of this year. And we are working on expansion, and the near-term expansion plan for us is Latin America. By having a cash on-ramp from the US into Latin America, not only is there high demand for digital currency access, there's obviously a high cash market in Latin America, and then corridors like US to Mexico, $36 billion a year, and the majority of that is cash. So being able to literally follow the money as it flows through in and out of our system into those markets really helps drive our international strategy.
All right, Neal Bergquist, the CEO and the co-founder of Coinme. Thanks a lot, man. A lot of insights here. Thank you very much.
Thank you. All right. Take care, everyone.
All right. It is time to move to our next portion of the day. It's actually an exclusive interview with Voyager, and I'm going to introduce Craig Salm from Grayscale, and he'll be talking to Steve Ehrlich, the CEO of Voyager. There's Craig. Craig, how are we doing? And let's get Steve on here as well.
I'm sure. How are you?
We got Craig. We got Steve. Everyone is here. How are we both doing today?
All good. Crappy weather in New York, but all good.
So I hear. I hope it clears up because I'll be there in a couple of days. All right. I'm going to see my way out and let Craig take the floor here.
All right. Thank you, Spencer. So hello, everyone. My name is Craig Salm. I head up legal at Grayscale Investments. Grayscale is the world's largest digital currency asset manager. We manage about $40 billion across a family of 15 different investment products. And our mission is really to provide access and exposure to the digital currency asset class in the form of a security. I'm joined here today by Steve Ehrlich, CEO of Voyager Digital, a very popular cryptocurrency trading platform. And let Steve further introduce yourself.
Thanks, Craig. Yeah, happy to be here today. Thank the Benzinga staff for including us again. Always appreciate that. But Voyager is the leading agency brokerage in North America, focused on creating wealth for retail consumers through the digital asset, ecosystem. Today we have over 60 different coins on the platform, and more than half of them allow you to earn rewards on an annual basis, paid out monthly, so that you can create wealth through this digital asset ecosystem. We've grown quite a bit. Public company, traded on the CSE. Happy to say that believe next week that we will be on the Toronto Stock Exchange, and we're also on the OTC markets with a goal to get to NASDAQ. So and join you guys there. So we're happy to get there, and just a growth business, and looking forward to our conversation here.
Awesome. Likewise. So, Steve, I think one of the more popular acronyms we hear a lot about today, other than NFTs, is ETFs. Every couple of years we go through these sessions where the likelihood seems very high and people get very excited. And historically, we've been let down. But this year, there have been comments about the likelihood, and we're hearing, some sentiments from the SEC, the U.S. regulator that approves these types of products, that maybe they're at a place where they are ready to allow this type of vehicle to be listed and accessible to retail and other types of investors. But I think to start, it'd be good for us to sort of break down what an ETF is and why investors find it to be useful. Your firm provides exposure to cryptocurrencies through the spot physical cryptocurrencies. My firm at Grayscale has products that are more structured vehicles, not quite ETFs, but we're trying to get there. So I think to start, why don't we break down what an ETF really is?
I think we that is we slightly differ in our products and so forth, but I think the ETF, the exchange traded fund, allows people that exposure without having to actually go buy the spot, just like we have in the gold market today. Right. That you can go buy the ETF, and it is the ETFs that are being discussed are tracking the most popular one is the tracking of Bitcoin, and the Bitcoin price is the ETF. And I think that is important for that, evolution of the marketplace too, because there are a lot of people that just don't have that comfort level yet in buying the spot market. Plus, investment advisors really can't put their customers into products into the spot today, and we all see a lot of that, and we get a lot of inbound on that. But I think that's what you started to talk about here is that ETF market, that exchange traded fund, that people get to participate in the Bitcoin market or other assets without having to buy the spot.
Yeah, I think that's exactly right. I like to think of ETFs as sort of a mutual fund plus a stock. It's like a mutual fund because it's a structured vehicle that allows you to invest in an asset or a basket of assets with a manager that allows you to buy in at a set price and then sell at a set price. But one of the issues there is that you can't really get in and out of your investment at any time throughout the trading day like you can with a stock. So with a stock, you can buy and sell anytime. And with an ETF, it's like a mutual fund because it gives that exposure, but it's also like a stock because you can sell it at any time throughout the trading day. And one of the really interesting things about that mechanic is it really just allows access for all types of investors, institutional, retail, on an exchange.
Yeah, and I think it's a really, it's hopeful that it comes out. As you alluded to, there's, Commissioner Gensler has talked about an ETF when it comes to the, backed by futures, which I kind of don't really get yet. I understand the spot side, and I think you and I are in agreement on this one where, there could be a really good evolution for more adoption of Bitcoin and cryptocurrencies, but I'm missing the point where it says, like, let's do it off the futures and the futures pricing, because the underlying pricing is still driving the futures pricing. So right. Why not just go straight to the spot market and do it that way and start with the ETF, which probably is sometime in 22, although the futures might come in 21 here, but the spot in 22.
Yeah, and just to dive in a little bit deeper on the historical context of where we've seen the ETFs come since as early as 2017 to today. Grayscale has been very much involved in that process since 2017 we're 100% committed to converting, our Grayscale Bitcoin Trust, which is a publicly traded Bitcoin trust, largest in the world, to an ETF eventually when permitted by the regulatory environment. So we've been very much involved in that process. And I think the SEC has been very clear about what they've wanted to see to get comfortable with this type of product that would be available to all types of investors. And again, the SEC is very focused on investor protection. So that's really their primary focus when approving any of these types of products. And to date, they've been very clear that what they would like to see is development in the underlying Bitcoin markets that's similar to what you see in other developed markets where you have trade surveillance, guardrails, protections, preventing things like manipulation or potential fraud. And if you can't prevent it, then you can detect it when it happens and then prosecute it and things like that. And I really think that's simply a matter of when, not if, and it's just going to take time. So, the statements from the chairman recently about being excited to see filings where the product holds Bitcoin futures versus Bitcoin spot, I think is just a good development showing regulatory engagement, that they're looking at these applications, trying to see where they can implement appropriate investor protections while also allowing investors to gain access to what we both agree is a very exciting asset class with a lot of potential.
Yeah, I think, it's the starting of the regulation, and you and I, talked offline. When you start thinking about regulation related to crypto, the SEC is really focused on customer protection, which is great. But because when you start digging into regulation and you start digging into what it means, when you hear the comments about, security tokens and what all that means, you and I were going through that the other day. It's like the vast number of things that have to be put in place when you say that is so broad. And I think the ETFs and the futures, good place to start. But we need this whole framework around crypto, and especially when the comment about a security. I think Commissioner Gensler said like everything is a security, but then okay, give me the framework where that works in, because we have built rules that relate to the securities market, and they all come with customer protection rules. Those who are aware of 15C33 reserve rules. People have to then go in and take Series 7 tests to be able to sell that. And does that mean our Series 7 tests and all those regulations now got to get updated to include digital assets? How does the custody work? Because we have centralized custody in the securities and options world through NSCC and DTC. SIPC is a big one I like to throw out there when we talk about regulation, that securities are governed by SIPC. And I'm not sure some of the big brokerage houses and FINRA regulated firms are going to want to fund SIPC when it comes to digital assets as well. So there's a whole litany of items. And then last, obviously, but not least, is GAAP accounting for digital assets, because it's not consistent with what some of the comments that come out of the SEC. It's an inconsistency across that. So, and you guys are seeing a lot of that related to parties. It's just hard. That's right. It's a good start regulation wise.
Yeah, and I think all the points you're raising are reasons why, there's a certain class of investors that certainly would love to just buy their crypto, even mine their own crypto, store it on their private wallet, and handle all of those different features in terms of custody and reporting and accounting and tracking for capital gains and losses and things like that. But there is a whole other universe of investors that much more prefer to go to a central platform like Voyager, where it'll track your positions and report for you. Similarly, with Grayscale, we handle all of the custody and the reporting and the audited financial statements and disclosing all of these different facets about cryptocurrencies to our investors. And I think the success of both Voyager and Grayscale goes to show that while regulators are getting comfortable with an ETF, which is certainly a very optimal and efficient way to invest in digital currencies, there's other ways investors are getting exposure: the Grayscale products, the Voyager platform, and things like that. And, I think our firms are really doing what we can to make these products as transparent, as regulated, as safe and secure for investors as possible. So in the meantime,
I think you hit a key point there. I think, our firms get aligned, we're significantly aligned in the fact of just bringing customer education, security, transparency to the markets, right? I mean, there's not that many of us that are public companies in this space that do bring that transparency to the consumer about everything we're doing. And, we all have publicly filed financial statements. And I think this really brings a point where we're already kind of self-regulating ourselves when it comes to bringing products to retail consumers and institutional consumers for that matter. We're bringing that transparency. We're doing all the proper, KYC that needs to be done. But there's not a lot of us that are, abiding by this extra set of public company rules that you get rather than just the traditional financial, money service business rules, FinCEN rules. And that's where I think where we started with was the oversight and the customer protection, and where the SEC sits. That's a really good area for them to focus on, is the KYC, the AML, and customer protection. And like I said, the two of us and one other, I think, are in this space and doing it at a really highly regulated level.
Yeah. I mean, I often say that I think regulators have a tough job, and I think that's especially the case for a new innovative technology like digital currencies, because they really do present new use cases, new innovations, but then also a new set of risks. And what's really important is that you come to the table in a thoughtful manner, acknowledging that this is new, but also has some of the same types of concerns that you want to protect against in the name of investor protection. And therefore, as policy and regulation is crafted, to really keep those things in mind. And I think we've definitely seen a lot of good engagement from US regulators as they want to become educated and learn more about this so that it can be regulated in the proper manner.
Yeah, I mean, I think it's where it's going, right? I think there's no doubt about it. We're leaning that way. We're heavily leaning that way. More could be done, obviously, and I think that's what the SEC is looking for. And I'd like to see a little bit more framework around, around the coins and some comments that come out of it to help us, guide us there a little bit more. And I'm sure, if you turn back the clock 70 years when the original SEC rules were put in place, and was it the Act of 33 and Investors Act of 40 and all those, they were probably debating the same thing for years before they put things in place. And a lot of that came out of the Great Depression and the stock market crash of the late 20s. So you could see how long it took. So I go back and I look at those things, and then people tend to forget too that we didn't get to a commission market. I think it was in 1972 or 73 when all of a sudden there was commissions became free, meaning not free in that you didn't pay any, but it was an open market to charge whatever you wanted. There was a set commission market there. So that took years to happen. So the regulation itself, when it can't happen overnight because there's too much to learn, and you have to take all the past learnings with where we think the market's going in the future to really develop a proper regulatory structure for digital assets, because it's just not there. And I don't think we could take it and just put it into the existing rules. It just can't work because technology wasn't there when they were written almost 100 years ago.
Right. The technology didn't exist then. Digital assets certainly did not exist then. I think another really important feature is that markets were not as global and accessible as they are today. And within the cryptocurrency world, there is no single central, order book or marketplace like what you have with traditional securities. Apple trades on NASDAQ. Even gold has, very centralized markets in the US and the UK and Shanghai. So you talk more about how, given that cryptocurrency is so decentralized and distributed, there's no single, global marketplace. How does that impact or should impact regulation, things like surveillance, or the ways that different marketplaces like Voyager or others are sort of, interfacing with those different platforms?
Yeah, it's a really solid point, when you think about it, right? I mean, the equity markets in the States have the national best bid and offer. So as a retail consumer, when you're putting an order in through any online broker, you're supposed, based upon order size, you're supposed to get the national best bid or offer at that time when the order goes through. We don't have that consolidated tape or consolidated book in the crypto market, which drives a lot of more price discovery for people across the different marketplaces. Kind of why we fit into the mix is because we connect to those places and are looking at that and trying to get that price discovery to bring that back to the consumer. But as long as there's no NBBO, I think it's hard to put that structure in, in the US for that, because then what would happen is, we'll get back to the payment for order flow conversation, because I don't believe it's there yet in crypto. Clearly we don't get it, so I don't think it's there. And I don't really think that structure is there for almost all the players. if it's not going to be the brokers that can make, it's going to be the market makers that are going to have to pay for the order flow. And I don't think we want to go there either, because we see that coming under a lot of scrutiny as well. So I think that's one of the things that are going to cause a little bit longer to get a more, full regulatory structure around the trading. But we do have surveillance, right? I think that's the other thing that's important here,
Right.
is we're all using, tools that allow us to manage and see the order flow to make sure it's, related to different items like rush sales, et cetera, just to make sure that it's actual trading going on and it's not trying to dupe the market, because we saw that happen 10 years ago in the equity market. There are companies that got in trouble for that. So we all have surveillance tools. I know we do surveillance tools to manage that as well. And I think those are just going to get better and better.
I think that's something that's not really appreciated, at least with respect to the US cryptocurrency markets, that, there's a view that potentially those marketplaces should be regulated more like a national securities exchange, like a New York Stock Exchange or NASDAQ, because of the protections that come with that. But at the same time, there is, as you mentioned earlier, self-regulation happening. And I think a lot of the market doesn't appreciate the fact that the types of trade surveillance tools being used by Voyager and the Coinbases and the Geminis of the world are the same tools being used by the NYSEs and the NASDAQs of the world. And so even without formal legislation around how cryptocurrency markets should be regulated, a lot of the same protections are still being put in place through self-regulation, which I think is really great and goes to show that despite a common misconception that the cryptocurrency world is anti-regulation and anti-establishment, there is a large prominent segment that really does want regulation and protections, to protect their consumers and their clients and their investors, while also allowing for the promises of Bitcoin and other cryptocurrencies to be fully realized.
100% accurate, I think, is that it definitely goes. I don't believe the general public, I don't believe everybody understands that we put ourselves through all this regulation. Now, there's a lot of rules that we have to abide by under FinCEN and money service business and so forth, but there's a whole other level of regulation we self-regulate ourselves on to make sure, and that's to make sure that our customers are protected and to make sure that we're protecting every customer in the way coins get traded. And it's a really important step. Again, as I mentioned, I hearken back to the equity world before there was any of these, regulations. The higher quality brokerage firms back before there were regulation were doing these things anyway. And there are those in this industry that look for that extra because we want to give that comfort. Obviously, there's bad actors wherever you go, but there's a significant portion of us that are self-regulating, that want to be, in a structure to satisfy customers and give them that transparency.
Yeah, I mean, absolutely. I can certainly speak to the Grayscale side. 7 years ago, we started with an unregistered investment vehicle only offered to accredited investors with our Grayscale Bitcoin Trust. After that, we obtained a public quotation under the ticker symbol GBTC, which is how a lot of investors come to know and learn about us. And that added, additional public company reporting on the over-the-counter markets. And then the most recent thing we've done in the last couple of years is seek something called SEC reporting status, which means that GBTC, the Bitcoin Trust, reports its disclosures and financial statements to the SEC and files things like 10Ks, 10Qs, the subject to Sarbanes-Oxley. And really, those are all the types of things that you would normally see with any other publicly traded company, whether it's something like Apple or an ETF. And we really are doing that in the name of raising our hand, wanting to go to regulators, become more regulated, more transparent, so that investors can come to expect the same protections with us as they do their other investments. And I think, as you were talking about what you're doing in Voyager, what we're doing here is really emblematic of that type of self-regulation, which I think is just really great for the space, really great for adding legitimacy and credibility to this industry we work in.
Yeah, like I said earlier, there's three of us, I think, that are in the space as public companies, putting ourselves through that regulation, and whether it's the 10Ks, and we do it in Canada, the quarterlies that have to be filed and reviewed by auditors, and that's a lot of work, a lot of cost, a lot of work, but it keeps us focused on that transparency that we totally want and need in this space, and that's how we're going to drive more adoption. Retail, institutional, whether folks choose to do that in a ETF world, or they do it in the spot world, or do it in the trust world like you guys, any of those places, we just want more adoption, right? We just want more people entering the space, because both of us are in this business because we think we're changing the world. We think cryptocurrency is absolutely going to change, a lot about what's going to happen in more than financial services. And that's why we're here. And we just want to make it transparent.
All right. I think that's a great note to wrap this conversation up. Steve, thank you so much for your time. Great insights. And hopefully everyone enjoyed our little fireside chat.
Thank you both so much. One quick question for Steve. This is from the chat. Does Voyager allow business accounts?
We've started.
Okay.
You can send an email to institutional@investvoyager.com. And we started to accept small to mid-sized businesses because they want to get some rewards on their USDC and BTC.
All right. Craig Salm, Steve Ehrlich, thanks both of you so much for coming on today on the Benzinga Crypto Festival.
Thanks, guys.
Thanks, Spencer. Bye.
All right. It is time to play a quick game. And the name of the game is How Long is Neal Hamilton's Hair? Let's find out, everyone. Neal Hamilton is, it's down to his shoulders. If you guess down to his shoulders, you win nothing. Just knowledge.
Okay, okay, Spencer, I just want to say unfair game. You gave zero time for people to give their guesses.
I didn't bring you on. That was somebody else.
Okay. So you blame the Benzinga events team, who works very hard to produce these events. All right. So Spencer, thank you so much for that intro. I'm so glad to be here with you guys. Where are my traders and investors at? Are we in the chat? I see some names that we recognize. I'm very, very excited to get into the nitty-gritty of technical analysis of cryptocurrencies from the perspective of an investor, or as a trader, a scalper, even. What do you think about that, Spencer?
We're talking charts, aren't we? We're talking hardcore charts.
It's the only thing I know. I don't know anything else.
Well, clearly you know how to take care of your hair. It's looking pretty good.
Yeah, you're right. I do know. I know how to take care of this hair. All right, guys. It is my extreme pleasure. And by the way, guys, it is the second day of the Benzinga Crypto Festival. Give me a 1 in chat if you guys are enjoying this great lineup of speakers that we've got for you. All of this interesting information that we're getting at a pivotal time for cryptocurrency. I mean, y'all go back a couple months, we were starting to hit that sort of bottom with our top cryptocurrencies and most well-known names. And boy, have we been on a run. So give me a 1 on chat if you are still wide awake and absorbing like a sponge, all this content that we were giving you. Lots of sponges in the chat. Let's see. We got Vernon, Veronique, Crypto Morning Show. Obviously, Crypto Morning Show is going to come.
Obviously.
Nasty Nate. No, Nasty Nate, watch it. All right. We talked about the nasty side. All right. So just watch it during the session. All right. I don't want you getting out of hand. All right, guys. Now that we've got like a bunch of ones, everyone's wide awake, feeling good. They've got their caffeinated beverage of choice. Spencer, I think we've got a really special guest today. I'm curious. Do you know who it is that we're about to bring on?
Well, I see him in the backstage, so yes, I know who it is. But why don't you enlighten us, illuminate, elucidate, if you will?
I'd be happy to elucidate, everyone. Our guest that's coming on right now to talk about how to invest and trade cryptocurrencies is Mark Putrino. Mark Putrino is a chartered market technician. There he is, CMT, and he is the instructor below on your screen. There's Mark, and he is an instructor. He's racing. Yeah, there you go. He is the instructor at the all new Benzinga Trading School. Mark, how's it going, man?
It's going really well. How are you?
I'm feeling pretty good. I just got a lot of compliments, I think, from Spencer. Spencer, how are you holding up so far?
Yeah, I'm doing great. I'm on the upswing from this like congestion period I've been going on, but I'm on the upswing now, so I'm feeling good.
Spencer's the type of guy when you ask how he's doing, he tells you how his allergies are every time.
It is whatever. Okay, I'm gonna see myself out of this conversation.
All right, thanks, Spencer. Hey, Mark, it's really, really good to have you here and have an audience of folks that are very interested in cryptocurrency, because I think a lot of what you and I talk about applies very directly to cryptocurrency. In fact, I mean, since I've met you, we've talked a lot about Bitcoin. We've talked about Cardano. We've talked about what you would call shitcoins, smaller coins. We've talked a lot about Dogecoin, of course, everyone has. And a lot of what you do, and I would love it if you could explain, applies directly to being successful as an investor in these assets. And I was wondering, Mark, if you could give a brief introduction to yourself and what it actually means to be a CMT.
Sure. Well, my background is in the institutional trading world. I was there for about 20 years. My first gig, so to speak, was with Mario Gabelli, and then I spent some time over with Steve Cohen at SAC. And that's where I really got my interest in charts and charting, because at SAC back then, I mean, pretty much everyone was surrounded by screens with 10 charts or so. After I was there, I was the head trader at 3 different institutional hedge funds, which were all big, all managed in excess of $1 billion. As the head trader, I oversaw junior traders, and we had all different kinds of strategies and so forth and so on. About 5 years ago, I made a decision to get out of the institutional investment business. Spent about a year trying to figure out what I wanted to do. And then I decided to get into this online publishing and teaching, because there's so much misinformation out there. There's so many theories and myths that just aren't true. So what I want to do is teach my students in the school how institutional traders look at the market, like real hedge fund traders. I'm not talking about day traders. I'm talking about guys that are trading for funds that are managing billions of dollars. And I ended up at Benzinga, and so far it's been great.
Yeah, I'm really glad. I think since the day that we've met, and we really started started talking about markets overall, cycles. We met at about the time that the stock market was making a big shift and the crypto market was making a big shift. Big top out on Bitcoin and a lot of the other available cryptocurrencies that folks can trade. Folks that are watching this can trade on the popular brokerages, the popular cryptocurrency brokerages. Had a little bit of a top and then a little bit of a dip, but that dip turned right around. So I'm really excited that we're at a really pivotal time right now to be talking about this stuff. So Mark, why don't we ask chat, guys? Chat, this is for you. What questions do you have about, from an investment, from a trading perspective, about cryptocurrency? No wrong questions. Bring in that participation. All right. We love it. First, what we want to do is just field some questions from you guys, back and forth, conversational style. And then Mark, I'm pretty sure that you've got some really cool charts with some potential setups that we can get into after that.
Yes, I do.
All right, great. So this is an exciting time for the folks that are ready to trade some cryptocurrency. So get those questions in. There's like a 15-second delay. So I'll give you a minute. Elbow cough. Excuse me. So still getting that delay there, guys. Come on, drop some questions. Surely you have questions about specific. Let us know if you have a excuse me, if you have a ticker for a specific cryptocurrency, drop it in here. If you have a question about how cryptocurrencies are tied to other market events, drop it in here. If you have a question about the market structure of institutional versus retail folks that are actually driving the price change in the cryptocurrencies, drop it in here. Okay. So Samsara, thank you for coming through. Now, Mark, would you mind sharing your screen? And I'm pretty sure that you have your charting tool. I can pull it up. Your charting tool is open, right?
Yeah.
Okay. So we want to look at Ethereum Classic. So that's going to be ETC/USD. If I'm not mistaken, I'm pretty sure that's Ethereum Classic. Yep. ETC/USD.
Okay.
What do we think? What's your initial impression on the price structure for this asset?
Well, the first thing I see is that it's in an uptrend.
Yep.
Okay, so as long as it stays in this uptrend, you should be good if you're long. And here's the thing about charting. You need to look at every chart in the context of what does it show about the supply and demand dynamics that are going on in the market. They're not secret or mysterious or magical or anything like that. They're illustrations of supply and demand dynamics. When a market is in an uptrend, the bulls are in charge. They're overpowering the bears. And this line illustrates that. So if you're long this, you basically just hold on to it as long as it keeps staying above this line. If it breaks below the line, that could be a sign that the bulls are losing control and the bears might be about to overpower them or at least equalize with them.
Beautiful. Yeah. And you can see that uptrend really pivoted. What was that late, like very end of July?
Yeah. July 21st is right here.
Yeah. And what's that? Can you zoom in on that candle? It looks like that we had that pretty big, that blue candle is a big bullish engulfing candle signifying a nice reversal. So we're in an uptrend. All right. So that's question number 1. Thank you so much, Samsara, for that one. Let's get into it. Let's check out ADA Cardano. And the question is ADA in a downtrend, Mark?
Well, that depends on your time horizon. I tend to look at the market with a weekly or maybe monthly perspective. From that point of view, it's still in an uptrend.
Mm-hmm.
Okay, see that? If you're a day trader, it looks like it's starting to trend lower. So I would say we're in an intermediate uptrend and we're in a short-term downtrend.
There you go. And then if you look at how this stock, or I'm sorry, not the stock, how Cardano ziggy-zagged up to where it is today, those were mini downtrends all the way up, right? Stock.
Yeah, and this is actually in my presentation, which I put together for this.
Okay, no spoilers. All right, so let's take a couple more questions from chat. Keep the questions coming. Keep them thoughtful. Stuff that other folks might have questions about. So let's see. Let's go through it. So this one's interesting. So Myron Hubbard asks, is it too late to enter the crypto market? Also, are the indicators the same as stocks, like EMAs, exponential moving averages, or SMAs, simple moving averages, etc.?
Yes, the indicators are applicable now that these cryptos have had a trading history, period where they've been trading. When things first come into the market, it's not the same, but now there is enough liquidity that the same principles that apply to stocks and stock charting apply to cryptos. In terms of, is it too late to get into the market? I don't think so. I'm sure some of them will perform very well from here and some of them probably won't, but I don't think it's too late to get in.
Very good. Very succinct answer. So we've got another one. So it looks like Peter, what is the minimum amount, maximum amounts to put into a trade? And it sounds like Peter's new to the idea of trading. So this is a great sort of foundational question. How much do you put on any given trade?
The answer to that, Peter, is if you're just getting started, put in as little as if you lost it all, it wouldn't ruin your day. Okay. Don't put your retirement package into it if you don't really know what you're doing. If you're just starting out and say you can lose $1,000 and that doesn't bother you and that doesn't ruin your day, then $1,000. If it's less than that, it's less than that. If it's more than that, it's more than that. So I would work under the thought of if I lose this all, will I still be okay?
So there you go. So it really varies by person. All right. I am scrolling through the questions. We're not talking stocks. We're talking cryptocurrency. And then Tiny Pie has a great comment, which is to learn about risk management, which is exactly what that question was about. So thank you guys. Yeah, we've got a good mix of new traders and some veterans in here. So I really like the back and forth conversation that's going on in chat. All right, guys. Mark has some setups, meaning he's got some potential entry and exit situations for making some profitable trades if things go the way that his educated forecast dictates. So give us a 1 in the chat if you would like to see some of those charts and some of those setups for some potential trades with cryptocurrencies. And we already gave away a little bit of a spoiler. One of them's going to be Cardano, if I'm not mistaken, Mark. And Peter, you're welcome. You're welcome. That's a great question. I'm sure a lot of people were wondering the same thing. And here they come. The delay is up. All right, Mark. I think that folks are ready. 1, 1, 1. Okay, and then there's the people that give us the 11 billion number, which works. Dylan, I'm not sure what this is. Robert, it was a rat emoji, which is odd. Love it, 100. All right, Mark, if you would not mind, I would love to pull up that little presentation you prepared for us, and then I'm going to get out of your hair for a little bit.
All
Sound
right.
good?
Yeah, we can see this.
And there you go.
Okay, so we're going to start off with Bitcoin. One of the things that institutional traders look at is which price levels are important. There are certain price levels that are more important than others. Sometimes the reason why is obvious. If it's a nice round level, like $100, for instance, most of the time the reason why isn't. But you don't need to know that. Now let's take a look over here at Bitcoin. Okay, the 49,200 level has been important. As a matter of fact, back here in April, it was clear support. After a downtrend, there were enough buyers that came out of the came off the sidelines that they put an end to the downtrend and they took it higher. We can see also that the same level, here we are, what are we, 5 months later, has become a resistance level. Now there are a lot of sellers at this level. Back here, there were buyers. Now there are sellers. This is one of the important things to understand in trading, is that what was a support level can become a resistance level. The reason that's traditionally given for this is buyer's remorse. The people that bought Bitcoin here thought they did a great job when it went higher. But now that it went lower, many of these investors experience buyer's remorse. They think they made a mistake and they decide that they want out. So they decide to sell, but they don't want to take a loss. So they put their sell orders at the same price that they bought at, which is 49.2. So this concentration of remorseful sellers trying to get out of their positions has caused this to become a resistance level. How does this benefit you? When you're trying to decide what your price targets are on something, look for previous levels that were important, because when the stock or the crypto gets back to them, they're going to be important again most of the time. For example, if you bought Bitcoin down here and you thought to yourself, well, where should I sell it? Well, you can look at the last important support area, and that will give you a clue as to where it's going to run into resistance, like we did here. So that's Bitcoin. And then this is just SOS, which is a crypto-related stock, but I just wanted to show you the same thing, is how support here turned into resistance here. So just remember, this is because of buyer's remorse, and this is something that we're going to be talking a lot about in my trading class, which is going to be starting soon. This example of XRP shows the same phenomena. Okay, support here becomes resistance. What else do we see? Resistance can also turn into support. So support levels can turn into resistance. Resistance levels can turn into support. This is due to seller's remorse. People sold it. They thought they did a good job when it went down, but then when it went higher, many of these sellers decide they want to buy it back. But they don't want to pay a higher price than they sold it at, so they put their buy orders at the same level that they sold at. So we can see here, clearly you don't need to be a market guru or a master trader to know that this 105 level is important. So if I was long this, I would be watching this 105 level. And if it breaks, we could see another downtrend. But what I wanted to convey in this chart is how there are certain levels that are more important than others. And what was support can become resistance, and what was resistance can become support. So this chart here teaches some very valuable lessons about stocks and cryptos and the way financial markets work. This same dynamic turns into and explains the head and shoulders pattern, which I'm sure everyone has heard of. I see a lot of analysts that spend a lot of time arguing over, oh, is this a head and shoulders pattern? Is this not a head and shoulders pattern? If you understand the dynamics that I'm explaining, you don't need to really know or say, well, this is a pattern or this isn't. You got to just identify the dynamics. Now, when markets are rallying, resistance will become support, like I just explained, because of the remorsefulness. So we can see here that for Ethereum, levels, I don't know, I'm just going to guess, but around 1,300. I'm sorry, I should have marked that out. Levels here that were resistance became support. Okay, that's healthy action. That's how financial markets that are rallying work. The same thing happened again up here around the 2,000 level. What was resistance became support. Then the same thing happened up here around, I guess this is probably 2,200 maybe. Resistance became support. In market rallies, levels that were resistance convert into support. The head and shoulders pattern illustrates that this dynamic is no longer occurring. What was resistance did not become support. So this is your warning sign. So if you were to really define this, you would say that this would be the left shoulder, this would be the head, this would be the right shoulder. But that's the key to understanding when a rally is going to start coming to an end. When the resistance levels stop turning into support levels, there's a good chance that the rally is coming towards an end. And clearly, this was the case with Ethereum when this last little piece of resistance here did not become support. That was a signal that the tide had turned and the bears were about to take over. Okay, now this level here, or this is Ethereum as well. I just wanted to show you this to show that, again, the importance of levels. The 1780 level has been clear support. Okay, so if Ethereum does go back down there again, it would probably be support again. There was resistance at 4180. So now Ethereum is breaking out of this little rectangle pattern. And if it rallies, there's a good chance it's going to run into resistance up here. That doesn't necessarily mean it's going to roll over and go down. It could spend some time consolidating or trading sideways. It could form a pattern like this rectangle consolidation pattern we have here. Consolidation just means something is trading sideways or it's getting back to normal equilibrium. The charts reading is about equilibrium. It's about understanding when something is in equilibrium and when something is out of equilibrium. If something is in equilibrium, the buyers and the sellers are equally powered, and the thing is just going to trade sideways. So we can see after this big run up here, the buyers decided to kind of maybe take a break to see if it would come in and they could get a better price. And then that set us into this period of sideways trading. So again, we're breaking out of this. This chart is from last night, but I believe today we're moving higher. So again, this is just another example. Every chart could give a lesson, okay? And this lesson here is, well, we have a clear resistance level. Will it be resistance again? We have a clear support level. Now, if Ethereum breaks this resistance, then we'll have to see if the level turns into support. And that will be the sign of a healthy market. If it breaks the resistance and comes right back down and the level doesn't turn into support, well, that could be a sign that we're getting close to the end of the rally. The same thing applies here with Cardano. We can see that there was a clear support level around 105. Again, you don't need to be a master trader to see that. And the thing about technical analysis and charting is that it doesn't really need to be complicated. I know people that have made literally millions and millions and millions of dollars because they can identify which level is important in a market. If you're a market maker, people might have heard that term. It's a particular type of trader. Their whole career is based on what level to sell at and what level to buy at. They have very short-term perspectives, usually daily, but it doesn't need to be hard. It can be simple. Common sense, supply and demand dynamics. There's nothing mysterious about charts. They're just common sense illustrations of the supply and demand dynamics. So now if this thing rolls over, we'll have to see, will the 230 level become important support because it was important resistance? If it does become important support, that could set the stage for another leg higher up in the market. Markets don't go up straight, unfortunately. They're kind of like a stairway where each resistance level in the range becomes a support level in the next range. It's like the golden staircase to profits, was someone I know used to call it that. Markets go down a lot faster than they go up, unfortunately. That's because people sell when they're scared and they buy out of hope. Being afraid is a more powerful emotion, so it makes people do irrational things. So we frequently will see markets go down much faster than they go up. Another thing that traders look at in the institutional world is momentum. And this here is the Grayscale Bitcoin Trust, which the previous presenters were speaking about. This red line here is what's called a Bollinger Band. John Bollinger was a legendary market technician, and he was the one who developed this. This band is 2 standard deviations below the 20-day moving average. Now, a lot of automated trading, if not all of it, but most of it, is driven by probability theory and statistics, okay? Statistics and probability theory say that 95% of all trading should be within 2 standard deviations of the mean. So, therefore, if a stock or a ETF or a crypto exceeds that threshold, these programs are going to be looking for a reversion to the average, and they're going to come in and they trade for the reversion. So this red line is 2 standard deviations below. So the algos and the computerized programs are going to be expecting this thing to revert to the mean. So as we can see, every time it touched this red line, it was a good time to buy because of the reversion. This one wasn't that great, but most of the time it has given really good buy signals. So again, very common sense. Well, not that statistics and probability they're common sense, at least not for me, but it's very simple. Bollinger Bands is in Benzinga Pro. We're going to be teaching a lot about them in my class. Just something good to look at. This is what we call momentum in trading. Momentum is a measurement of how far something has moved in a given period of time. This uses the 20-day moving average. So that's just a quick look at momentum. Here's another momentum indicator, which I use. And again, we're going to be going over this in detail in the class. This is what's called the RSI, or the Relative Strength Indicator Index. And we have Dogecoin here. And we can see that when this indicator showed it was overbought, that means it was time to sell. When it was oversold, it's time to buy. So we can see this simple, basic RSI indicator, which is in Benzinga Pro, which is set to the default, has given very accurate signals on Dogecoin. So again, it doesn't need to be hard. You don't need to do all these complicated charting and harmonic charts and this, that, and the other thing. Just common sense. Think about the supply and demand dynamics that are underway in a market. And if you look at the charts through that context, it'll be much easier to understand them. Here is this BNB professional. This is the futures contract. But anyway, I just wanted to show on this one how a lot of times big volume marks turning points. Okay, so we can see this thing rallied, and then right up here, it had this huge volume day, way bigger than the previous volume days. This shows how much is trading in each day. Each one of these bars is a day's trading. So this really big volume spike here kind of told us, all right, this is coming to an end. The buyers are just throwing in the towel, just saying buy it at any price I can, and that causes big volume to trade. Same thing on the way down. This big volume point here marked that this sell-off was over. So that's a couple things that professional traders look at. We look at which levels are really important. We look at momentum. We look for signals coming from volume. This here is just a simple flag pattern, which, because this is like a textbook example, I just wanted to include it. Flag patterns basically just mean that something is consolidating or trading sideways. It's a break in the uptrend. And think about it like this. Say on Monday, there was a bunch of people that were buying something, and they're really aggressive. Just buy it, buy it, buy it. I don't care what price I paid. They tell their brokers they just want to own it. So the thing is going to go up. So say again on Tuesday, it's the same thing. People want to buy it, buy it, buy it. It goes up. So now Wednesday comes along and they look at the chart and they say, well, this thing might have gotten a little bit ahead of itself. Let's step back. Let's leave the market. Maybe the sellers will knock it down a little and we could get a better price. So on Wednesday, there's very little trading. Thursday morning, they say, well, you know what? We really want to finish this buying. I'm done with it. So we buy it, buy it, buy it. They just want to own it. They just want to get it in. They do the same thing on Friday. Now, on a chart, that would appear as a flag pattern. The Monday and the Tuesdays would be up. The Wednesday would be a little bit of a flag pattern. And then the Thursday and the Friday would be up. So a flag pattern or a pennant pattern, they're the same thing. Just shows it's a little break of the trend. And the way you can identify this is you can see the volume here is much lower. See how there's big volume on the way up? Then when the buyers decide to take a break to see if it'll come in a little bit, there's much less volume in the market. But then when they decide to get back in, the volume spikes back up and then it moves higher. So flag patterns are like a rest pattern. The stock or the crypto is just taking a rest in the trend. And I think that's it, actually. So I guess we could take some questions now.
Any questions about patterns? I think we have a couple questions left over, so hold on. So I've got an answer for this. So what's a good platform for trading crypto is the first one I'll address. There are a lot of great platforms. Find the one that suits you, gives you access to the cryptocurrencies that you are interested in using. Voyager is a fantastic platform. And I believe that you just saw a presentation from the founder of Voyager. Voyager is accessible in the US and other countries. Very good. But find what works for you. And then a lot of that's going to come down to what type of investor are you? What type of trader are you? What currencies are you interested in? So there you go. And then charts for trading crypto. So Mark here is using TradingView. TradingView is actually embedded in Benzinga Pro, which is our news service, and just overall research, which covers cryptocurrency. It's also in, I'm just going to share my screen really quick. You can get this charting tool in the new Benzinga Trading School. So I'm just going to show you guys that really quick. So, I mean, just based on what you've heard from Mark so far, I did a little bit of a poll earlier, asking folks if they felt confident being able to use levels in their trading the way that Mark was describing them. And about 75% said yes, and about 25% said no, I need to learn more. So I think that this is a really good time to share our new trading school with you guys. So there is a link in chat if you want to check it out. And I just want to show you guys, Mark Putrino is our lead educator there. He's your instructor. We have a complete syllabus for college style classes that you can attend live or watch the recordings of afterward. And this is just a preview of that platform right here. And it's really beautiful. This is one of the most, this is the product that I'm probably the most proud of here at Benzinga. And it's brand spanking new. Classes start this month. So you get access to Benzinga Pro. You get access to, let me go through this presentation. It's got full mobile capability or compatibility. You get access to charts. So live classes are conducted similar to what we're doing right now, where Mark is up here teaching. You have access to a chart so you can follow along, and you have chat with your classmates and with Mark. Little mobile. You've got your ongoing chat along with access to things like past videos and downloadable materials like cheat sheets on the patterns that Mark was talking about, or anything that will help you understand the universe of cryptocurrencies and how to look at them differently, guides, any type of material that you would imagine getting in a class. And of course, you get access to the fully loaded Benzinga Pro Essential Plan as part of the platform. Here's another view of an alternate chart view. You get live support. So you can see here we've got some Trustpilot reviews. If you're not familiar with Trustpilot, Trustpilot is a review site where you can't put up like fake reviews. It's better than Google reviews because it's like a very vetted system. For example, companies are not allowed to take down reviews or anything like that. Everything there is just the reality. And we have just a fantastic track record of putting out great products and listening to folks and making sure they're as good as possible. So what I want to do is offer to you guys today, folks that are watching the Benzinga Crypto Festival, the opportunity to not only join Benzinga Trading School at a great discount and get access to everything that I've shown you and more. This is another view of the chat room that you'll have with your fellow students for ongoing trading, cryptocurrencies, any other asset you're interested in as well. So that's futures and stocks, as well as this great sort of social networking aspect where you'll be able to direct message folks and create your own profile. The idea is that we want you to graduate from classes, so you're all speaking the same language, and then get into this ongoing trading and investing environment where you're surrounded by like-minded folks. So I want to give this to you for a great deal, about 70% off. I also want to give you a laptop if you sign up today. Before midnight, if you sign up, we will give you a laptop. Because Benzinga traders are fully ready to trade. And that's our commitment to you, is that we want you to go from wherever you are. If you're a beginner, if you're intermediate, even if you're advanced, we want to make sure that you have all of the tools that you need to start having more consistent success in the markets. Those tools are the technology itself, the hardware itself, like the laptop, as well as the right mentorship. So we start off with these courses. That's literally like Tuesday is technical analysis or levels 101. You've got this calendar here. And then we get into principles and stuff like that, foundations of trading and investing. And after that, it's ongoing mentorship. So you're trading along with Mark and going out into the markets with a team and trading together. And this discount is going to apply for the lifetime of your subscription. And also, normally we do a 7-day money back guarantee on our subscription products. We're doubling that for you guys today and offering a 14-day. So you get a full 2-week money back guarantee. You'll instantly get access to Benzinga Pro. If you don't like it, which I guarantee you won't, not like it, then you can get your money back. No problem. No questions asked. But this deal does expire at midnight. And there you go. I recommend, I'm going to give you guys the link. Go to Trustpilot and just check out the reviews on our products. This is a link directly to Trustpilot, putting it on the YouTube chat. Make the decision for yourself. The link is already, if you have questions, so a couple of you folks already use Benzinga Pro. That's no problem. That's no problem. If you would like to switch your subscription to Benzinga Trading School, contact Rodrigo. So Rodrigo is going to be your sales and a sort of account manager person inside here at Benzinga, who you can talk to figure out like a special situation for yourself. And then here's the link one more time so you can join in there. Any questions about that subscription? We've got about 5 minutes left with you guys. Do you have the date the classes start? The date, it's loose right now, but we're looking at the second week of this month, and we're releasing the syllabus today. So the syllabus will go out today. it's just like if any of you have kids that are in college or in school, or if you remember getting syllabuses from any past educational institution you went to, it's that format. Because the idea here is that we hear from a lot of folks that they're looking on YouTube, they're following people on Twitter, and they're kind of pulling together different bits and pieces of education and trying to make themselves better investors and better traders, and ultimately they don't succeed. That's just statistically what we see. So we've put this all together in one place, so that's not the experience that you have. The idea is that we want you to come out of this fully prepared, confident, with a coherent idea of how to approach the markets. Okay, so any further questions, guys? We got about 4 minutes here. We're not going to do a Razer laptop, Pao, but thank you. Okay, so any final hold on.
Wait. We have one.
Okay.
This is from Swifty. Should we focus more on altcoins, stable coins, or the main cryptos?
Totally up to your appetite would be my answer to that. Mark, what do you think about that?
I would probably focus on the main ones, but that's
if you're a beginner.
That's just because there's such a wide variety. You have to do a little bit of research on all the altcoins because they're all a little bit different.
Yeah. But I mean, it all depends on your confidence level and your awareness of what you're getting into.
And I mean, stable coins are stable, so you're not going to make any money if it doesn't move.
Good point. Very good point. Is this suitable for investors? It's a very good. It's suitable for investors to give you a baseline of how to look at the assets that you might be choosing. My recommendation would be to try it and see if it works for you, because just being an investor can mean a lot of things. All right, so I'm gonna pull these back up on the screen. Can we, for Anik? Yes, we're gonna release the syllabus today, so you can review the lessons. Absolutely. So you're gonna see exactly the lessons, and they're gonna be scheduled out Monday through Friday. We surveyed all of our current students to find the best times of the day to conduct classes, and everything matches what we got from those survey results. And as this thing goes on, we'll continue surveying students so that we're always matching exactly what works for you folks. We know that everyone has something that they're doing during the day. You all have lives, you all have professional lives, personal lives, and so forth. So we want to make sure that we're able to accommodate that by giving you a lot of quality education in a way that you can actually consume and keep up.
Let's just do one more here, and then we got to wrap it up. But does the max volume have anything to do with price? Shiba has an endless amount, so will that ever reach new highs? So let's stick with the first part of that question.
Mark, do you want to take that?
Does max volume have? I'm a little unclear, but what I think, what I can say to that is, when there are capitulations, when there are really sharp bottoms, when people really want to sell, like for instance, like last March after the COVID crash, there's huge amounts of volumes for the capitulation. And what that means is that all the sellers are cleaned out. So there's a dearth of supply in the market, and that results in a rally. So if something is going down after a long, nasty downtrend, one day there's huge volume, way more than average, that could be a sign that the downtrend is over.
Okay. I think it's a good place to wrap it up. Neal, Mark, thanks a lot for coming on and talking charts with us, guys.
All right. My pleasure. Thank you, everybody.
A lot of fun. Trading school is a brand new thing for us. Very exciting. We are we don't quite know what it's going to be yet. This is a brand new thing, and we're super excited to launch this. Super excited to have Mark leading it, and yeah.
All right,
that's it. All right, okay. Neal, Mark, thanks a lot, guys. I gotta keep the train running on time, so let's move this right along. to our very next speaker, presentation, whatever you want to call it. Chris Kline is here. There he is. Bitcoin IRA. He is our COO and co-founder. Chris, welcome to the show.
Good morning, Spencer. Thanks for having me today.
Thanks for coming on today. I'm going to pull up your presentation right now. We were talking a little bit yesterday about crypto IRAs with one of your competitors, and it's such an important topic. We thought let's do it both days. So yeah, let's go. We're talking about long-term. For everyone that hodls, if you really are a hodler, then this is for you. Literally, this is the definition of hodl right here. Retirement accounts. Chris, I'm going to hop off. The floor is yours.
Thanks, Spencer. And even further than hodlers, it's about the believers. If you believe Bitcoin is going to continue to grow in value, there's no better place to have it than in a retirement setting. And that's strictly just because of the infrastructure and the design of retirements are meant to build up an overall retirement strategy for us and find those tax advantages that we need to save for our future. So thank you again, Spencer, and the Benzinga family and the Crypto Virtual Conference here, the festival, for having me today. I wanted to just go through, I get asked a lot of questions. We've been through almost 6 years now of crypto IRAs, which is crazy to think about. When we first started this, they say if a tree falls in the woods and there's nobody to hear it, does it make a sound? Long time ago when we built the first crypto IRA, a lot has changed since then. I wanted to share some of what we've learned and seen over the years with the audience today, and then hopefully open up to more even wonderful questions from you folks today. So a little bit about me. Oh wow, the old marketing team used an old picture. I don't know if the hair was better back then or not. Also, you guys will see here on the right-hand side, bottom right-hand corner, a QR code. If you scan that at any time throughout the presentation, it's going to take you straight to downloading the world's first crypto mobile application. It's custom built for education, price monitoring, and then also ultimately to open up your own Bitcoin or crypto IRA account. But as for me, I hail from the Midwest, or I guess the West. I'm from Denver, Colorado, born and raised on the hard streets of Aurora, Colorado. I am the co-founder and COO of Bitcoin IRA. We first designed and built this back in 2015 and put our first account together in 2016. I studied international finance and leadership back in the college days at the University of Colorado Boulder. I remember distinctively one of my classes was all about making enough money in Forex trading and you could leave class. I maybe spent 15 minutes max in that class every Monday, Wednesday, and Friday. Since then, I've been contributing to Forbes Finance Council, the FX Empire. We're pretty much commentating all the time here at Benzinga. I've been at a few interviews with the audience here and was just recently on Power Lunch. That was a tough one. The bank regulated or bank bot CNBC certainly had some tough zingers for me and multi-part questions. So just got to throw out what are the things that make us Bitcoin IRA. So surprisingly enough, not a lot of folks know that you can do this. Even if you're a crypto person or if you're a retirement person, the fact that you can put the two together in a world is actually commonly unknown so far. We were the first, as I said earlier, in 2016, we did our first account in June. Our first account holder was actually the former director of the United States Mint, Edmund C. Moy. So I always find that somewhat ironic that the individual building managing the greatest production of fiat money, the US dollar, was also grabbing a little bit of Bitcoin and Ethereum for his retirement account after his retirement or after he finished as a Mint director. We've grown to 100,000 platform users. We just hit that mark earlier this year. We also just broke $2 billion of assets inside of our platform and inside of our custodian. Our growth as a platform is 1,000% year over year, and that was in Q2. I would say that we're probably getting closer to about 15,000% year over year growth. And we're pretty much everywhere. As you can see behind me, these are like, those time capsules you want to bring with you when you get to your age of retirement. We were featured in Forbes as well as in the Wall Street Journal. And pretty much anywhere and everywhere in between. If you search us and look at the news, you'll see that we've been around for a long time. So a lot of times, folks, the first question I get when I talk to folks is they're like, how did you guys think this up? How did this even start? Where did it manifest itself? It really started with going and finding and forging the correct partnerships that were critical to make this happen. You have to have a trustee or a bank to have an IRA. So that was check number one. You also have to have an exchange or an OTC partner. And then most importantly, you have to have somewhere safe to keep these coins and these digital assets. We were able to interact with regulators. I remember going back and forth for almost 6-7 months in 2015, trying to build parallels of comparing it to how precious metals work, how other assets work. You got to remember, this was 6 years ago, back before a lot of people were even talking about Bitcoin, and you could get laughed out the room, especially with regulators at this point in time. What we found from our clients was the most critical piece that they continued to survey when we asked them what would be the most important or what is the most important part of your retirement savings was security when talking about crypto. Makes sense, right? A lot of people don't understand, especially 5 years ago, how wallets work, how keys work, how all the functions of a crypto investment or holding works. So it became a primary focus for us in building our platform. Those surveys drove us to partner with BitGo, pretty well-known name. I call them kind of the Goldman Sachs or the Brinks of the industry. We joined with them early on and tied them in as an exclusive provider for our platform. We built a completely custom cold storage configuration of the likes that had never been seen before back in 2015 in order to make it so that the banking partners, the OTC partners, and the wallet partners all understood how this function and platform were going to work. Now, obviously, they've grown just like we have. We have up to $700 million of custody insurance, the highest in the market today available for those looking for security. And they're processing $30 billion of monthly transactions. So as the world leader, we love having them on our platform and being our exclusive partner for the security of your retirement, which is foremost and fundamental. As we grew past our meager beginnings in 2015 and 16, we had almost a responsibility to set an industry standard. Back, if you joined us, which a lot of the clients that started in 16 bought at the levels of like $250 of Bitcoin, some 500, so they're looking at 10,000x returns. They were our guiding light of what should we do next. So as we moved into the years of 2017 and beyond and into the crypto winter, we made a primary focus to always be the industry leading crypto IRA platform. We kind of have a buzzword about being the world's first for everything. We were the world's first Bitcoin IRA. We wanted to be the world's first 24/7 trading. When we first started, we had a very manual process of executing trades because, again, it had never been done before. Now you can log in or download the app and go on your phone and access your account and buy, sell, swap at any time, 24/7, even on Christmas, even on Jesus' birthday, whenever you'd like to. Then we continued to grow from there. We built, just this year, we launched the first interest earning program. It's called IRA Earn. Clients can earn up to 6% interest on their retirement account. So as Spencer was saying, if you are a hodler, why not hodl and make some more crypto with your crypto? Those interest payments are paid back in kind. So if you have Bitcoin, you're making interest in Bitcoin, or Ethereum in Ethereum. Just on Father's Day this year as well, we launched the world's first custom mobile IRA application for crypto IRAs. It's available both on the Android and on the Apple Store. And then this year, we're completing the end-to-end fully integrated platform process. There are a lot of other groups that have looked at building a similar platform, but we brought it end-to-end with a vertical integration of our own trust company, which came to market approved about 2 or 3 weeks ago. So we just haven't stopped growing, evolving, innovating, and we're not going to stop anytime soon. There are so many amazing things happening in the crypto industry that should be a part of the retirement industry, and we feel we have an obligation to be the pioneers of such. I've already mentioned the $700 million of insurance keeps you safe behind military-grade wallet security, but most importantly, and you'll see on every slide, there's a phone number you can call. And you can call it right now, and there are people that will answer because we have a standard of 90 seconds or less. You know how pizza places have the 30 minutes or it's free? We have the 90 seconds or less service level standard. That means that if somebody, whether it's a quiet day, a high velocity trading day, a day when Elon Musk decides to tweet something about Bitcoin, if you're not on the phone with one of our agents in 90 seconds or less, then we failed our service level. And we hold ourselves to that very high standard because unlike most of the crypto space, there's not a lot of folks where you can go and talk to somebody. There's a lot of FAQs, there's a lot of chat bots, there's a lot of those things. And even some groups that have phone numbers, when it gets crazy, they're not going to answer. It's proven. And they're going to put you on schedule and appointment options, which are 2 to 3 weeks layout. So that's a big thing we try to focus on is what we call our instant customer phone support. Especially when it comes to retirement and crypto asset investing, it's critical to have a human being there for you. What made us do this? That's kind of like the second question is how'd you do it? And then why'd you do it, right? What made us do this was we recognized, I know myself personally recognized early on that there's a struggle for retirement in this country today. And so our main mission is to help Americans retire and hopefully help them retire earlier. There is a retirement crisis happening today. It may not be the pandemic we see on the news every day like COVID, but there is an underlying pandemic happening that's been happening since I was a kid. I remember when I was young, there were friends of mine that had grandparents working into their 70s, late 70s, early 80s. Because they had to, not because they wanted to, but because they had to. They hadn't been able to grow up enough value in their retirement to be able to comfortably rest for those final years. And then I started watching with my own parents that they were planning on having to work even later years. We're living longer, we're working longer, and we're not saving much. And some of it's to our own chagrin, but some of it's also that we're in an economic system, especially our generation. I'm 36. That has basically not seen much greatness since we were born. It was born in the USA with Bruce Springsteen. It was awesome. It was the 80s. We weren't old enough to enjoy the high 90s, and it's been kind of rough ever since. And so when you look at that and you see that 64%, I think Yahoo Finance had in February, article about that, are not ready for retirement, and it's getting worse every year. Imagine those that are still suffering and making their way through on stimulus or unemployment, and they're getting into their 30s. What are they going to do to catch up? And what we have next macroeconomically is there will be an era of inflation that we will all remember at some point, and we'll tell stories about. You can't simply print trillions upon trillions of dollars. While you may have to, it does have ramifications. More supply, or what they call M1 supply of currency into the marketplace, is what causes products and goods and services to cost more. It dilutes the purchasing power of the dollars that you've saved. And this is one of the main reasons why folks are looking other directions. We also have something very unique happening. The boomers right now, as you can see in that icon, are holding about $48 trillion worth of personal wealth. And the boomers are getting older, and that will be handed down in one of the largest wealth transfers in history. But what are we going to do with it? There are going to probably be some that just blow it and FOMO and go crazy and pop bottles. And then there's going to be other prudent and more pragmatic folks that say, hey, maybe I should put some of this into Bitcoin, or at least into a retirement setting, and think outside the box. And thinking outside the box is the new evolution that's happening in today's marketplace. Alternatives. And it's not just crypto. Crypto is the newest, hottest, sexiest, sizzliest. But there has been, beyond stocks, bonds, mutual funds, which some folks call our grandfather's economy, there are things like real estate, private equity, precious metals, and of course, digital currency and Bitcoin. And why you build these into a modern portfolio as opposed to a traditional one is this is your chance to catch up, build up more value, and get yourself exposure to new and emerging places. Back in the 1990s, the first self-directed IRA was created, and it was done by a bunch of rich guys that wanted to use their retirement funds to get access to real estate. They wanted to be able to take that capital they had and buy real estate. Then it manifested itself further into private equity. We've heard a lot of conversations about Peter Thiel and his $2 billion IRA that he has. It's because he placed himself into alternatives like that. And precious metals have been very strong. Although this was the perfect storm for gold, Bitcoin is taking, I think, a little bit of that luster off with its portability and transportability components, where you don't have to ship and store and insure the metals. You can Bitcoin is a lot easier to move around and to function as a means of exchange and as a means of monetary policy. Now, how are fiat, gold, Bitcoin different from each other? There's this really great chart, which I don't think I was able to put it up there, but it basically there's about 15 critical characteristics of what is money. And you look at the US dollar, it's driven by sovereign central governments. We don't know how much is in supply. We don't know how much is being diluted. We're not in control of it. It is an oligarchy, so to speak. The Federal Reserve, I used to have a guy work with me that he always would ask, what do you know about the Federal Reserve? And that's a good question, because since its inception in 1913 with the Treasury, the purchasing power of the US dollar has dissipated 93%, probably maybe even more since the COVID ramp up of stimulus printing. And Bitcoin is different than that, right? It's got a finite characteristic to it. This is a perfect storm in an economic environment to get yourself unhinged from dollar-denominated assets like stocks, bonds, mutual funds, and put yourself into real tangible assets like real estate, cryptocurrency, in-wallet, etc. So you take this and you're like, okay, I get Bitcoin. I'm sure everybody here has been listening to some of these amazing speeches and amazing presentations the last day and a half. Yeah, I'm down on crypto. I love crypto. Let's do crypto. But why would I put it in my IRA? Taxes, taxes, taxes. It's that simple. Right now, the average capital gains rate is 23.8%. So if you went over to Coinbase or any other open exchange and you bought Bitcoin and you have to sell it at a gain, you're going to get eaten by almost 23, 24% of those gains. That is estimated to grow under our current administration and beyond to pay for what's happening as far as the printing of dollars to stimulate the economy up to 43, maybe 44%. So now every dollar you make, imagine half of it's going away in a non-IRA setting. Once you put yourself inside of this beautiful umbrella of an IRA, we use a self-directed IRA that has Roths, simples, traditionals, and SEPs, as well as other kind of lesser known options. You're now in either a tax-free or a tax-deferred setting. Tax-free is the best example is a Roth. You put $5,000 into a Roth, and 10 years from now, it's worth $5 million because you bought all Bitcoin and you just sat it and let it grow. Maybe used our interest program to see it grow even further and expedite it. And now when you take that out at that ripe age of 59 and a half, you're going to have no taxes on taking that income in. If you're tax deferred, which is a traditional setting where you're getting the benefit of taking that, putting the money away early, then you're going to have your ordinary income taxes on it. But you're not going to have capital gains. It's just whatever your ordinary income is. And a lot of folks wait till they're later in life when they're not making a lot of money to take these monies out so that they aren't at a very high tax bracket. Crypto, since 2015, when we started it, is becoming a part of this retirement planning for that reason. And it's a trend that I think is going to continue to grow. You can see from the icons there's $90 trillion in the global equity markets. 12.6 trillion is inside of traditional IRAs. And right now there's about 362 billion that are in some version of a crypto IRA out there. Lots of room for growth. And if those folks start opening their eyes to it, you're going to see some significant increases in price that we already are anticipating with Bitcoin and other digital currencies. I was just on CNBC Power Lunch. That's a great photo, right? The marketing team really loves me. They choose the best snips. But why is it here to stay? I make no mistake about it. Bitcoin, cryptocurrencies, digital assets are here to stay. 5 years ago, there would never even been a virtual conference like this or a festival by Benzinga. And now it's not just for the young investors anymore. Everybody kind of assumes it's millennials, Gen Zs, Gen Xs that are doing this. No, 3 out of 4, 75% of our account holders were born before 1976. And I know that seems, that makes them like 45 plus, but before 1976 seems like a long time ago. There's also a wide range of governments, major corporations, and millions of investors like you that are simultaneously looking at this, which is embedding crypto into the fabric of our economy. And it's here to stay. It's not going anywhere. And we're being here at conferences like this is a smart move to get yourself educated. Again, like I said, if you download, grab that QR code, you can download our app. All kinds of amazing information there to get yourself up to speed and a human being you can talk to in 90 seconds or less. And I think with that, I see Justin jumped on here.
Yes.
Let's open it up to some questions. How's that sound, pal?
To physically represent that it's question time. Well, thank you so much, Chris, for presenting all that information. I just wanted to start out with a few basic questions. What types of IRAs are you finding are most popular with your users?
Traditionals are the largest chunk because that's what most folks have. A traditional IRA usually comes from a rollover of an old 401k. So when you're working at a job, you're growing, your company's matching, you're getting this 401k. When you leave that job, you normally roll it over into a traditional IRA. The second most popular are Roth IRAs. And those are the ones that have that tax-free setting. And there's a lot of opportunities to do what's called a Roth conversion. You'll have to check with the tax advisor to make sure you're eligible for it, but you can take traditional funds and convert them over into Roth funds. You do have to pay the taxes now, but a lot of folks are doing that in order to not have to pay larger taxes in the future.
And is that primarily what people are new entrants into the space are getting into IRAs for? They're looking for like tax shelters, but within a crypto setting?
Yeah, absolutely. A lot of the accounts holders that we have are opening their first retirement account. They're doing that annual contribution. And where else would they look to put it? You know, stocks, bonds, mutual funds, not as sexy and sizzly as what they used to be. And the younger generation is starting to step up and say, it's time for me to think about my future. And Bitcoin makes sense for it.
I mean, definitely we've seen kind of a groundswell of more involved retail investors, certainly from like from Gen Z and from millennials. I mean, like obviously they're going to start way earlier than my generation ever started in terms of all kinds of investing, including crypto. But you had mentioned this is something that older Americans are getting into in order to be able to retire faster or retire more securely. You know, how much activity have you seen around that? What do you think they're primarily like? How is that? Who's your best user in that particular case? The
average demographic is, like I said, 75% are over the age of 45. There's a catch-up component. They're looking at, hey, you know, I'm getting old and it's not growing as fast as I planned on it growing. And they've also endured to the stock bubble in 2000, the 90s .com crash, and the 2008 crash. So it's very hard to continue to have to start back 30, 40% backwards. So they're having to do that. And they're looking at crypto. Obviously, they see the gains. It's outperformed the S&P 500 and everything else is the best performing asset class for 5 years running. That's a big part. But also, inflation is a real conversation. You know, it used to be one of those things that people would say, oh, yeah, inflation. Oh, yeah. You must be a gold bug. You think that inflation's coming the end of the woods. But now they feel it. You go to Target to get one thing, you end up forgetting that one thing and walking out with $200 of stuff you don't need. And inflation is real. It's in front of us. And there's a lot of conversations about it. Those are the two driving factors the most, I think.
Right. You know, and Americans don't save statistically. So maybe, you know, all this talk of passive income and investing is a way to make up for that shortcoming, which has been the truth for decades. Well, hey, thank you so much for taking the time to speak with us today, Chris. I really appreciate it. We're going to have to move on to the next session. But thank you very much. And of course, your URL is up on the screen, and we appreciate you taking the time to share with us.
Thanks for having me. I love the Benzinga audience. Enjoy the rest of the festival, guys. It's great.
Thank you. We love them too. All right. Well, we will talk to you soon. And I'm going to go ahead and introduce the next guest, who is Tom Sosnoff, who is founder and CEO of Tastyworks. Hey, Tom, how are you?
Hey, guys, how are you?
Good. I'm glad you could be here today. So you've got a charts to kick off with, and I will go ahead and leave you to your presentation.
Okay. Can you see my screen right now?
I can indeed. Yep. Are you running it yourself?
Yeah.
Okay. Good. Excellent. Thanks.
Right. Much appreciated. Thanks, everybody. Thanks for having me. And I was told today I am focusing 100% on crypto. So I'm going to have a little fun here with you. So Tastyworks, which is our brokerage platform, is one of only I think it could be the only platform, but maybe there's others, but one of the only platforms that supports virtually all products, meaning that we support futures, stocks, options, futures, options on futures, and also crypto. And there are not too many, online brokerage platforms or brokerages in the US that support all that. Why is that interesting? Because from a single account on the front end, you can trade anything you want. You can trade any strategy, you can trade any combination of strategies, and you don't have to worry about passwords or digital wallets or transfers or anything that happens on the back end. We take care of it all. We execute and clear through a digital settlement company with digital assets called Zero Hash, of which we happen to be the largest shareholder of Zero Hash. So we kind of have a pretty large say in what happens with respect to what blockchains we write to. So right now in the Tasty world on Tastyworks, we have 13 different tokens. We will be adding 5 additional digital assets within the next couple of weeks. And then in October, we'll be adding Cardano. So we're in the process of writing to that blockchain now. So if you are new to crypto, or you're wondering, hey, how come this brokerage firm only has, only has 4 or 5 choices, or how come they have 10 choices, or how come Coinbase has, 150 choices, well, that's their entire business. We offer virtually everything, like I said before, just to put it kind of clean into perspective. So if you want to trade futures, go ahead and trade futures. If you want to trade Bitcoin, like the micro futures in Bitcoin, you can do that as well. Just as an example, on my watch list right here, these are the micro Bitcoin futures, the / MBT. So if I wanted to just trade a future in Bitcoin, I just click on the offer. And if I wanted to sell a future and go short, just click on the bid. In the world of crypto, in online brokerages in the cash markets, I'm put up for you on this page here. We only have a short amount of time, but I put the 4 largest cryptos that we offer, which is Bitcoin, Ethereum, Litecoin, and Polkadot. Those are probably the 4 most active on our platform, with Ethereum being the most active. The cool thing about Tasty is we are open 7 days a week, 24 hours a day for the cash crypto markets. We actually offer 12 coins and 1 physical token for gold, Pax Gold. So you can trade gold around the clock 24/7, and you can trade crypto the same thing, which is very nice. There's no other kind of product choices that you can do that with. Also on this platform, you can trade as little as $1 and from the upside as much as you want. And the cool thing about what we do is we cap the commissions on crypto at $10. So whether you're trading, if you're trading up to $1,000, it's just 1%, and over $1,000, there's a cap. So you pay no more. So whereas you might pay $50 or $100 to buy, or $500 to buy a full coin on Coinbase or Robinhood, on Tasty you pay $10. So we have the lowest crypto commissions in the world right now, with a cap of $10. Nobody has anything like this. And the cool thing is, lowest commissions, you can trade anything you want, and you can trade a combination of cash crypto, like I have set up here on this screen, or the futures themselves. So just to give you a little example, and I'll show you how easy this is, just to go from potentially from one source to another. If I wanted to go up here and I just wanted to trade, let's say, a micro future in Bitcoin, I just click on the offer to buy, I click on the bid to sell. Now, you can't short in the cash market, you can't short crypto. So if you want to short it, you have to use the futures. But if you want to buy it, you can use the futures or the cash. So this is 1/10 the size. So figure right now it's about $47,400, in that range. I can adjust my price up or down if I want. And if I want to, just click there. I'm filled in less than 25 microseconds. Take a fill, and I bought, that's at trade at the CME. And I bought 1 micro future. If I wanted to sell it back out, and again, I'm only showing you this just to show you how fast the platform is, because Tasty's built on high frequency technology and nothing else in the world is. And then if you go down, oops, I'm sorry, wrong slide. And I wanted to trade crypto in the cash markets, I could just come over to this page. And for example, depending on which crypto I want to buy, if I wanted to buy Bitcoin, I just choose buy, and I have $500 set in here. You can set it to $1, you can set it to $100, you can set it to 5,000, you can set it to 50,000. Doesn't make any difference. Or you can do it by the coin. But I set it to $500, and you just double click, filled, and I bought $500 in the cash market. And again, this has the cap of $10, but that would have cost me $5 in commissions total. And that's it. There's no other fees. There's no transfer fees. There's no gas fees. There's no moving it to a different blockchain. Everything is consolidated, and all the money transfers and everything happen on the back end. You as a customer, this is the simplest way. And the reason I did the future first was to show you how easy it is from the same layout to go from a futures trade to a cash market trade. So let's say I wanted to trade Ethereum. I wanted to buy $500 worth of Ethereum. Double click, filled. Let's say, to the naked eye, you have no idea that this order is being routed to a market maker somewhere else in the world, and for example, the futures market's being routed to the futures exchange here in Chicago. One's a listed exchange, one's a non-listed exchange. All that stuff takes place in the back end, and there's no trust factors because you're able to route it through us. So you're not having to keep your money at some crypto exchange that you've never heard of before. let's say you wanted to go and move it down, just as an example, to, you know, I wanted to buy some Litecoin, same exact thing. Or if I wanted to buy some Polkadot, same thing. So in the matter of just a couple seconds, I bought and sold some crypto futures, the micro future from the CME. We could do the big future too, but the big future is 5 coins, and 5 coins times $50,000 is $250,000 just to make that trade. If you want to do it using the micro futures, it's only, you know, the 1/10 the size, so it's only $4,700, so it's a little more reasonable size wise. Or you can go down as little as, like I said, $1. But in a short period of time here, and I also have a working order up here, and just to show how easy this is, if I wanted to replace the order or just cancel the order, boom, it's gone. And that's the slick thing about the Tastyworks platform. And there's no other piece of technology in the world like this that's built on high frequency middleware. So there's no lag time, and you compete directly with the high frequency firms that are doing the market making. The platform on the front end, it's one simple platform. And on the back end, it goes to multiple places, exchanges, and everywhere else. And then all your money gets moved for you on the back end, and you don't have to do anything. You just trade them up. Unfortunately, right now, there's no options on the cash markets in crypto. Hopefully that's coming soon, but there are no options in the cash markets. And the cash markets, like I said earlier, all you can do is buy crypto. The advantages of using the cash markets are that they're open 24 hours a day, 7 days a week. The advantages of the cash markets are that there is no leverage and no trust issues. The advantages of the cash markets are that you can trade as little as $1. And that's essentially, those are the takeaways. The advantages of the futures markets are that they are leveraged by about, let's call it, you have to put up about 60%. So there's about 40% leverage in there, which is smaller than most futures, but it's still decent, and you don't have to put up all the cash. So the futures markets are a bigger contract. They have a smaller commission, and they have a slightly higher leverage. And that's the advantage of the futures contract. Oh, I'm sorry, one more thing. You can short them. And you can trade the futures contract in an IRA account. So the cash crypto, you can't trade an IRA account yet, not with us and not with any other brokerage firm, but you can trade the futures in crypto in an IRA account. So that's just something nice to know. And the nice thing about this too is I've been kind of simplifying it by just using the futures markets. But if you wanted to go to an individual equity that is that's highly correlated to the crypto markets, you can do that as well. So for example, if I wanted to just type in an underlying that's like a synthetic crypto play, like let's say, for example, you wanted to trade Coinbase. So in this platform, you type in coin at the top, and here you have an option layout for Coinbase. This will move almost tick for tick. You know, it's very highly correlated with the crypto markets, Coinbase. If you wanted another underlying that's highly correlated with crypto, you could go to something like Riot. And so on this platform, and this is, again, what makes Tasty so special, you can trade Riot, you can trade options on Riot, you can trade the futures on the micro Bitcoin, or you can go right up here and go to the crypto cash markets. And it's all from the exact same interface. It's all the mechanics, all the tools, all the features, they look virtually the same. And so we don't care what product you trade. We don't care how much or how little you trade. We don't care what strategy you use. And we don't care how you integrate or how you commingle all of those different underlyings. Makes no difference to us. So in other words, if you wanted to sell like some notional amount of Riot, let's just say, for example, it's a $37 stock. So you wanted to go out and sell 1,000 shares, just 1,000 shares of stock, and create $37,000 worth of Riot. You can go out then and buy, 10 micro Bitcoin futures against it. It's almost a perfect hedge. Or you can buy $37,000 in cash if you wanted to use options in Riot. This is the only platform in the world that lets you do all that stuff. You can't do it on Coinbase. You can't do it on Robinhood. And you can't do it on any of the global exchanges. That's what's fascinating. And again, I don't know how deep everybody wants to get into today with respect to cryptos, but we are being very aggressive with adding all new crypto functionality as it comes. And we also we will be offering the new small exchange crypto products that are coming out, hopefully within the next month or so. And one of the few brokerage platforms that have that. Some of you will ask, do you have an ETA on Cardano? And the answer is no, we don't, but we are writing to that. And if you can Google and just watch an interview I just did with the founder of Cardano, and that is up on YouTube. And I think we did it about 2 weeks ago, just talking about, the future of different blockchains and the future of digital assets. If you are a digital asset buff as well, and you wanted to see some research on digital assets, we have an extensive amount of think tank like research. So we've researched digital asset correlations. And it's all free in our archives on tastytrade.com. So if you want to go visit Tastytrade, you can read all about digital correlations. You can read about how digital assets impact portfolios. You can read about how volatility in digital assets is so much different than volatility in, let's say, equities. Just as a little sidelight, for the most part, most crypto assets are highly correlated, and most crypto assets have about 4 times the implied volatility of the S&P 500. So when you're thinking about things in terms of risk, you only have to do about 1/4 the size in the crypto assets to have the same expected move or the same kind of expected potential profit potential when you're using digital assets. And that's what really makes them attractive. They have 4 times the implied volatility of stocks. All right, I'm going to take you back on a little bit of a mission here to show you some other things that are kind of neat about this. Can you enter orders based on price? The answer is yes. Can you enter orders? Can you see your working orders in here when you're doing it? And the answer is yes. Do we have other charting platforms in here that you can also see crypto on? Yes, we have a charting platform here. You can see crypto. We also have something called Tasty Charts where you can see multiple cryptos if you want to. All right. And you can also set this up with the underlying stocks that you want to see. We have in our trade page, although like I said before, we don't offer options on crypto yet because they don't exist in America or in the US markets. They haven't been approved by the regulators. We do allow you, if you want to, I'm going to show you something really fast here. I'm going to go over to Riot. I am going to potentially open up something like options in, these are options in Riot. This line here is where the stock is currently trading. Let's take a few smaller number of underlines to look at. And let's just say, for example, you wanted to go out, and I'm just giving a little bit of example. You wanted to get long, a little bit long crypto. Now you see Riot's unchanged today because crypto is basically unchanged. And let's say you wanted to go out or something and create a little bit of a long position here. So stock's trading for 37. I'm going to go out and sell the 35 puts, which are just out of the money. And if I wanted to come in here and sell like a $4 put with a let's call it a 35 or so delta, so it's the equivalent of 35 shares of stock on this platform, I can do it. I'm just going to raise the price a little bit and offer the puts. And if I get filled on this 5 lot of puts, which I'm working here, I'll go over to the cash markets and do something about it and just kind of show you how that works. When you think about this, if you're thinking about, and I'm giving you just a quick little lesson here, but this is let's say a $37 stock. And if you sell a 5 lot of 35 puts out of the money puts, and you're thinking about that notionally, it's kind of the equivalent of, let's call it about $17,500 worth of notional stock. And if I got filled on that, I can easily go out and then this would be a short premium play. Let me lower the prices so I get filled to show you how to do this. It's a little bit of what we call kind of like trade arbitrage. Okay, so I moved it a nickel. I got filled on a 5 lot of puts in Riot, right? And then that's the equivalent right now of, let's just say, $17,500. And if I wanted to, I can go out to the micro Bitcoin here, and I can divide this number, that 17,500, by this is about just under $4,800. So I can multiply this number by 3 contracts, and I'll come up with just about $15,000 worth of notional. So I'll go 1, 2, 3, and I'll lower the price here. Let's just see. I'll lower the price just one more tick. There you go. And let's see if we get filled. And if right now I'm working this, and if I get filled, it's a completely neutral short premium position. And it's a way as a workaround to have a short premium position on to collect. It's kind of like, think of it like a little bit of a covered right to do it in crypto, and something that you can't do on virtually any other platform. There, I got to fill. So now I have on a covered right in crypto using crypto futures and using a stock that is highly correlated, about 75%, to the crypto marketplace. And again, that's really neat because you can't do that anywhere else. Like I said, if you went to Coinbase, you could not do that. If you went to FTX, you could not do that. If you went to Robinhood, you could not do that. But what we just did was a really unique trade. We sold puts in Riot, high implied volatility, so we're collecting that premium, and then we bought the futures against it to offset almost all the notional risk whatsoever. And then we come back to the cash markets and take a look here. We could have done it in cash as well. But again, I'm going to show you some things in the cash markets, which I showed a little bit before, but it may have been maybe heavy at the time. So if I wanted to go out right now and buy Bitcoin, same thing, 47,300 and change, $500 worth, just click on it, take a fill. If I wanted to turn around and sell that, just to show you how simple this is, there you go. Boom, boom. And this is open all the time. We just never shut down. Very, very simple interface. You don't have to do anything. You can set these to default to what number you're comfortable with, and you can just come to this page, and whenever you want to make a trade, just a simple click. So again, there's no shorting yet in the cash markets, but you can short using the futures and you can short using the options. So we give you all of those opportunities. And if you wanted to do the futures and sell the options against it in an IRA account, either puts or calls, we let you do that as well. So even though they don't match up and they're 2 different underlyings, we let you put those positions on naked in an IRA account. So regardless of your account type, you can trade any of these products, and regardless of the amount of money that you have, you can trade any of these products as long as you have the capital available to make the trade. So we don't limit you by the strategy you select, and we don't limit you by the amount of money that you have. So everybody that opens an account with us can trade all of these products and all of those strategies, and all of them in an IRA account and all of them in an individual margin account. There's no other offering like this. And we're the only place, again, with capped commissions. So you get all the advantages of knowing that your rates are the lowest rates in the industry, and you have the greatest product selection and the greatest strategy selection. That's why the Tastyworks platform is the top rated platform in America. And that's why the Tastyworks platform, also because it's the newest technology, is the fastest platform in the US and also the most stable. So you get all of those things right at your fingertips. And the one last thing that's super nice is when you open an account with us right now, we have a crypto promotion going on. And if you deposit $2,000 when you open the account, you get your choice of $200 of whatever crypto you want. So you get a 10% return when you just open an account. I mean, we give that if you wanted stock, you can have stock instead. It doesn't, we're indifferent to what we give out. But if you open an account for over $2,000, a regular margin account, you get a $200 crypto gift, and you can pick the crypto that you want. If you open an account with $200 just to trade crypto, you get $50. And that's our kind of a special offering since we launched crypto a couple of months ago. If you look around the rest of the industry, you'll find in very short order, none of these features exist anywhere. If you have an account at Fidelity, they don't have any of this. If you have an account at TD and you're trading on TOS, they don't have any of this. If you have an account at Schwab, they have none of this. If you have an account at Interactive Brokers, they have none of this. Okay. If you have an account at E-Trade, they have none of this. If you have an account at Robinhood, they offer crypto, but they don't offer futures and they don't offer any of those option strategies. If you have an account at Webull, they offer crypto, but they don't have futures and they don't have any of those option strategies. So we are the only platform with the complete offering and with technology that's, this good on a fully integrated, pure Java platform that is completely free. Okay, so I know I have a couple seconds. I was supposed to leave 5 minutes to answer some questions, and I'm not exactly sure. So let me give you a couple seconds. Oh yeah, you know what? If you have any questions, just to make this simple, you can email me. I'm Tom at tastytrade.com. Just Tom at tastytrade.com. I'm happy to answer any questions you have about crypto, or if I can't answer them, I'll send you over to the right people. We do have crypto experts, on our team. So if you have any questions about new things that we're offering or that that we will be offering, like for example, what cryptos are coming on board, happy to give you that list and other things like that. Or if you have any other questions about crypto. We currently don't support crypto in an IRA account, but that's coming very soon. Sure, go ahead.
Tom, seems like we're getting a couple questions here about availability outside the US and Canada and elsewhere.
Canada, we don't support yet, but we're in the process of getting licensed. In the US, we are licensed everywhere but Hawaii.
What about, I don't know, the UK, for example?
No. Right now we are not. Right now we are US based only, and for moving money around, it's we don't think there's going to be any problems in the UK, but we're in the process of going through the regulatory process right now. Okay.
So biggest takeaway, because we got in several questions about UK, Canada, international. So just US.
Canada's a much bigger challenge because we have to go through the whole regulatory process there.
Right.
So we are 2 years into our Canadian regulatory process. That's how long it's taken. We're hoping to be up and running by the end of this year, and crypto will be included in the offering.
Okay. Yeah, guys, seriously, any questions for Tom? It's very rare. Tom does a lot of stuff on the Tasty Trade Network, but it's rare to get this kind of access to him. His email's literally on the screen right there, right? So now's your chance to drop a question for Tom.
You can ask me anything. I'm fine. Nothing's off limits. So I got like 2 or 3 minutes left here. Nothing off limits. Ask me whatever you want. Crypto's been a big part. I've been studying crypto. I'm a fan of digital assets. I believe tokenization is here to stay. We are definitely making it a big part of our future. And, whether you want to call it, however you want to define this. I don't really like to use them as cryptocurrencies. I like to think of them as digital assets, but I don't care how you define it. We're all in.
Let me ask you this, Tom. Of all the functionality, features, cryptos or digital assets, whatever, what is your favorite asset to trade, feature to use on the platform, whatever?
I probably trade more Polkadot and Ethereum than anything else.
Okay.
I'm sure I'll trade a lot of Cardano. When it comes to the futures, I definitely use Bitcoin. It's the only one you really can use. And so I guess if you were talking about the top 3 for me, it's on our platform, it's Bitcoin, Ethereum, and Polkadot. Our customers trade more Ether than anything else, but I think that customers will trade a lot of Cardano when that eventually comes up. I think those are the top 3 or 4, and they're also the top 3 or 4 as far as market cap goes anyway.
Here's a question from Sasha. I guess I didn't realize this. Sasha wants to know if you will have hotkeys functionality available soon. I didn't realize that.
It's not part of our short-term game plan, Sasha. So
okay.
We probably won't, but we do offer crypto now on all our mobile devices, and we do have a brand new iPad coming out and another mobile platform about to release. So we have crypto on everything, but we won't have hotkeys on our software. I'm guessing that's not in the short. We don't get that many requests for hotkeys.
This is from John Moore, right? Yes. No, it's from Jut. How much money do you need to have a margin account?
It's set by the regulators. It's $2,000. It's set by the SEC and FINRA. Margin accounts in the U.S. are $2,000.
Yep, I'm going through. We got Kevin, a few people in the chat answering questions. John
Sure.
Moore seconds the request for hotkeys, so that's 2.
There you go. That's 2. I like it.
Two more than usual. So you went through a couple of the your favorite things to trade.
Sure.
What though do you see as like in terms of your clients and your users are like the most used features? Maybe not most trade securities or assets, whatever, but like the most used functionalities within Tastyworks.
Well, I mean, if we're talking just about crypto,
yeah,
there's not a lot of, remember, you can't short it. There's no options. So there's not a lot of like, integrated functionality other than buying or selling. There's not much you can do. And so crypto is very basic right now, unless you get into individual stocks, like, for example, Coinbase, Riot, Mara, Block, Robinhood. Those are all stocks that we think are kind of like very crypto centric. So those you have a lot more options on because there's, they have derivatives, there's different strategies you can use, things like that. In the futures world right now and in the cash world, you are very limited to what we call static or directional plays in crypto. And so outside of a pure directional play, there's not that much in the crypto world right now. In the US, there's more around the rest of the world, but in the US, we have a different regulatory system than everywhere else.
Any plans on adding Decred?
I would have to check. I don't know.
Okay. Here's one that I think may stump you. I don't know if you can answer this. They're asking if crypto is going to be added to the Doge platform.
The answer is yes, it is.
Oh,
yep.
Did not stump him.
No. It's
okay.
being added to the Doge platform, and Doge is being added to the Tasty world. So Doge will be available through Tasty starting in about 4 to 6 weeks, and it will have crypto on it. All
right, guys. Tom Sosnoff. If you don't know him, I find that hard to believe, frankly. He's everywhere in this space. Has been in this game very long time. Done a lot of things. He's the co-founder and CEO, or the founder and the co-CEO, excuse me, of Tastyworks. And always great to hear from you, Tom. Thanks a lot for spending time with us today.
Hey, thanks for having me, everybody. Good luck out there. Thanks.
All right, from one Chicago person to another, we must bring on. Well, let's get Neal back, and then let's let Neal introduce who he's talking to.
All right, cool.
I see him backstage. This is going to be exciting.
Yeah, this is going to be really exciting.
Our next guest celebrates July 4th better than anybody else, I think. We'll have to ask him about that.
Yeah, we can ask him about that. I have a feeling he celebrates a lot of things better than a lot of people. I've met him a few times. He's a fun guy.
Yeah.
So guys, up next we have John Najarian, Market Rebels. He's going to be here. Oh, he's already here.
There he is.
Leave it to the Benzinga events team to no cue necessary. So, yep. John, I saw you backstage. You're partying a little bit. You got a cup of coffee, and I'm pretty sure I saw you with a jar of peanut butter. Caught him red-handed. The man.
Oh, I love peanut butter.
All right. Yeah. So
that's the only carbs I get, man.
I like your style. All right. So guys, give us a 1 in the chat if you like peanut butter. 1's in the chat if you like peanut butter as a yummy snack during the trading day. We got the thumbs up from Mr. Najarian. And I just want to give a little bit of an intro. So, John, you and I spoke a couple days ago. And I got to tell you, some of the things that you were talking about doing with cryptocurrency gave me like some aha moments where I was like, oh, you can do that. Like that kind of thing, like exciting stuff. Like a lot of what I'm doing is just very directional or static, as our previous speaker would put it. So I'm really excited. And the ones are coming in. Like Swifty loves peanut butter. We all know that. We all know that. Born to be free. Absolutely. Bald Eagles, peanut butter. We have great representation here. Nutella peanut butter, Dylan. Little funky. That's okay.
Yeah, little funky.
All right. So, I'm really excited for the stuff that you're going to talk about. This situation is totally freeform. We've got a bunch of investors here. We've got a bunch of traders, and we got a bunch of folks that are just interested in like blockchain and the actual tech side of how this will evolve, the economy, how this will evolve, other and like industries themselves. So there's a lot of ways we can attack this. And I know that you have a little bit of a presentation, and I also have some questions that I'd like to ask you. So why don't we just start off with some introductory questions, and then we can roll into some of that content that you have ready for us.
Love to do it.
Okay, so I'm just going to go to absolute beginning. And I want to get you've been in the market for a long time. You've been on the floor. You're an options guy. You have a lot of experience looking at financial markets, and you've seen a lot of evolution over decades. So I want to know, from the unique perspective like your own, what was your first intro to cryptocurrency? And if you could walk us through the evolution of your attitude and perspective toward it.
Sure. Well, Neal, it's a pleasure to be here. Thank you very much to all of you for tuning in on the Benzinga network. I first traded it probably in 2016 and ran away scared because it moved too fast.
Yep.
It was just crazy. And that was when it was in the hundreds of dollars. So I wish I could say right now that, and we wouldn't even be talking if I did. If I did just hold on to all the coins I bought in 2016, we wouldn't be talking now, Neal.
It goes both ways, bud. Both ways.
But nonetheless, I had and it wasn't a trial by fire. It was that I just couldn't believe my good luck on that given week that I bought some coins and how quickly they moved. So I backed off because I'd been reading about all these people, about hacks and this and that, about, software wallets, hardware wallets, and all the rest. Yeah. So I backed off. We were also in the process of selling Trade Monster at that point, which we sold to E-Trade. Don't need to get into that, but because of that, it took my focus off of crypto for a while. Then in 2017, there's a lady, brilliant lady on the Fast Money show named Karen Feinerman. And her brother is also a trader. I think he was a hedgie as well, a hedge fund manager. And one of his best friends was Peter Brigger. And at I think it was a fundraiser for Lyme awareness and so forth, Lyme disease, he paid like $10,000 or $20,000 to have dinner with my brother Pete and I in New York and get a tour of CNBC and all that. And he did it not because we're anything great, but because he was a generous guy, still is. And his sister was obviously involved with CNBC. So anyway, flash forward, we're having this dinner with Peter Brigger, who is, of course, the chairman, the founder of Fortress. And he's telling me, John, you gotta buy and just hold. He didn't say hodl, he said hold. And he said, put it in a hardware wallet, take it offline, and just don't look at it for a decade. And so in 2017, that was September 11th, 2017. I know it was September 11th because, of course, that's a date none of us forget. And it turns out that actual day, he was at the filming or at the live shoot of Fast Money. And so we went out to dinner at the Hunt and Fish. He convinced me I should be in. So that's how it happened, Neal, that I got in. Since then, I'd say an awful lot of traders. You just had a friend of mine, Tom Sosnoff, on. An awful lot of derivative traders like me and like Tom Sosnoff have looked at crypto and said, oh my God, the edge here is huge. The fact that people are trading on technicals almost exclusively, fundamentals and technicals. The fundamental part we could argue about perhaps, but the technicals, people really focus in on that. And for my money, a lot of people don't take into account the risks in the derivatives. And for that reason, it creates huge opportunities, Neal. So I think an awful lot of former floor traders are upstairs and there's no edge in trading options on Apple or anything else anymore. I mean, many of us position ourselves using like our algorithm, our heat seeker algorithm, we'll position bullish or bearish. But when you talk about crypto, you get real edge. And that's what we all loved when we were on the trading floor. and crypto has the best edge of any asset that I've seen in the last 20 years.
So there you have it, guy. That is a powerful statement. So I wanted to ask you, it's the best edge. How has cryptocurrency and what you're able to do with it currently changed the way that you look at the financial markets, like in the pre-Bitcoin days? Like what does that look like to you with hindsight?
Well, it's, when I was first on the trading floor, we had 4 U.S. options exchanges: San Francisco, Philly, Amex, Chicago Board Option Exchange, which was the first and biggest of all of them. And then the ICE came along, the International Securities Exchange. And that was all electronic. There were no traders, per se in pits and so forth. So we have grown now to perhaps 16 options exchanges since 1981 till now. But when you look around at how many derivatives are traded around the world on these crypto exchanges, it boggles the mind. Not only are there 11,000 coins out there that people used to call altcoins or shit coins, but there are now dozens of exchanges, from Deribit and FTX and Binance to whatever, where you can trade with up to 100-to-1 leverage. And when you're talking about exchanges, that diverse offering of exchanges creates opportunities. I don't arb one exchange against another because, quite frankly, that's this much edge. I'd rather really pile in, Neal, to where the real edge is, and that is when people are caught leaning too long or too short. And we've seen both play out in the last 2 months. Absolutely. So for our trader audience / investor, could you dig into more of what you mean by that? Perhaps from like a beginner intermediate perspective, what exactly is that edge you're talking about? All right. Do you mind if I put up some slides? Because I think they'll show it better than me. Perfect. Or at least it'll help in the description. Yep. So I'm just going to pull up the slides right now, folks. Give me just 1 second. Let's see here. Yeah, and you'll want to go to the bottom of your StreamYard screen, like zoom again to share again. It's in the bottom middle. Oh, that didn't go up. Sorry. It was up and it's gone. I don't know why. All right, I'll do that again. Let me see. Here, share, and yep, now it's sharing, and let's present. So is that up there for you, Neal? Boom, we got it. Cool. All right. So I don't need to belabor that. That's just a sexy Bitcoin screen. This is also just a screen that I frequently use to describe trading in Bitcoin. And these are the ones I want you guys to concentrate on. So if you're a long-term trader like me, this will be my 40th year in the markets, by the way, because I started in 1981 here in Chicago. So I'm older than most of you, but crypto futures saw a record $10 billion worth of liquidations on Sunday. That was a headline from CoinDesk. What does that mean? That means that people were over-levered. How were they over-levered? Well, maybe they, instead of just trading with the 5,000 or 20,000 in their account, they levered that up 10-to-1, made it trade as if it was 200,000. And they're getting too long, for instance, or too short, because it works both ways, and I'll show you that. When that happens, that's when I'm really putting on big derivatives positions. Here's another example, 900 million in crypto short positions liquidated as BTC breaks 39,000. So that's after that first one was an example of when people were leaning way too long, and they're either doing that by being short puts, bad idea, because you're already getting leverage with a derivative like a call or a put. But when you're also getting 20-to-1, 50-to-1, 100-to-1 leverage in the actual coins or futures, that's exceptionally dangerous. And that first screen with the 10 billion liquidation, that was longs. This one that you see here, this was for shorts, because after the June, tsunami passed, we went from 29,000 through 39,000 like that. And that also was a squeeze, and it took out a lot of the people who were leaning short in either short calls or short Bitcoin. So I wanted to show you this one, Neal, and then I can get into the nuts and bolts of why I pull the trigger on these trades. So look at those exchanges. This is BTC, Bitcoin Open Interests. And you see that Deribit is where all the volume is, really. I mean, max 8 billion, last 7 billion. These are open interests. Look at that compared, for instance, to the CME, 253 million. When you're talking about 7 billion in open interest versus 253 million in open interest, you're talking, 25, 30 times more open interest over on Deribit. And then you look at places that some of you trade on, I'm sure, LedgerX, Bit.com, OKEX, all of these, they're all in the same relative space as the CME. And the big one, of course, is Deribit, which was one of the first with decent options. And this one is option volumes. And again, you're looking at Deribit, where you see $1 billion, average 554 million. These are option volumes, folks. And you compare that again to the CME with 33 million or 11 million, those kinds of numbers that you see across the bottom of the screen there. This is not me making fun of the CME. It's just a fact, though, that they have a lot less leverage, so they're a lot less attractive to many of you in the audience because you can't trade them as big. You can't make that $20,000 trade like 200,000 or even $1 million at the CME. Can't do it. So that's when you look at those volumes there, Deribit just dwarfs everything, right? Everything else is just that little top piece on there, and Deribit is the big one. All right, so this is the clue for trading, I think, Neal. And this is the same thing that my brother Pete and I do all the time. This is what we did when we were traders on the floor as well. We talk about 3 V's: volatility, volume, velocity. All 3 of those are really key to making trades like I do and like my brother Pete does. So look at that. On 6/20, the volatility of Bitcoin was 103, which is like 6.3%, 6.4% or whatever. But to take it into the same parlance that we use when we're talking about the VIX, when I say the VIX is 16, as it was early this morning, that's versus 103 for Bitcoin on June 20th. Then look at how rapidly it came down from 103 to 52. It gets cut in half like that from the end of June through the end of August. I had that data through yesterday. So now it's like 3.3%. And again, all of you know that 16 is what we use as it's the square root of 256. And that's the approximate number of trading days in a year and so forth and so on. So virtually every pricing model is using 16 as a 1% move for the VIX or for Bitcoin. Doesn't matter. Now look at where we were in Bitcoin when June 20th was around. 29,150. Pull it up on your own graphs if you don't believe me, folks. And then look at how rapidly we moved to 50,000. So again, my triggers are volume, volatility, velocity. It met all 3, which meant that when we were trading at, let's say, 30,000-ish, between 29,000 and 30,000, volatility was extremely high. What do I want to do when volatility is high? I want to own the asset and I want to sell those pumped up options because I think they can't justify a 6.5% volatility or 102 in VIX terms. So look at how well that worked out. And this happens time and time again. So what do I do when we get into a situation like that? I am long the underlying, short upside, which is basically, if you want to view it as a covered right, Neal, or anything else, that's as simple as it gets. I'm taking that really pumped up premium out of the Bitcoin options market and putting that premium right in my pocket. And what I might do as well is put on spreads in there where I'm buying at the money calls and selling twice as many out of the money calls. But I also have long Bitcoin. So that's one of those trades that I've done for years. We call it a stock replacement strategy and so forth, or a repair strategy, where you've got a stock, it's fallen down, and instead of just getting out because the setup is too good, I buy the at the money along with the underlying. So now I have two underlyings, if you will, and I'm short twice as many of the upside calls against the calls that I've purchased. But I'm not short net anything because, again, I have the underlying as well. It gives you a turbo between the strikes that you've picked. So between basically 30 and 42,000 or so, we killed it to the upside as vol came down and as our underlying ran to the upside. So those kinds of gifts, that's just, I can close this out now. Check it out at marketrebellion.com/get started.
Go there, guys. I mean, so John, I just want to jump in and say that is just a glimpse of what we talked about, which I would say, guys, give me a one in chat if you knew that you could use options trading techniques, tactics, strategies with cryptocurrencies. Give me a 2 if this is completely new and your mind is blown. And they're on a 15-second delay, so we're going to wait for that 15-second mind-blowing experience.
Cool.
So, John, we are at time. I want to thank you very, very much for coming on here with us. And I want to really implore everyone to get on over to marketrebellion.com. The link is on the screen. We'll drop it in the chat so you guys can follow up with what John and the rest of the folks in Market Rebellion are doing. So, John, thank you. It's been a great pleasure.
Neal, my pleasure. You guys are putting on a great show. Thank you, sir.
Thank you very much. And I think that's my time as well.
Yes, thank you, Neal. Thank you for leading us through that great conversation. Fantastic practical perspectives on investing based on decades of experience. Really, really wonderful to have John on the show. And thank you so much for moderating. I'm just going to go ahead and introduce our next upcoming guest. So I believe we have coming up Charles W. Allen, who is the CEO of BTCS Incorporated. So welcome, Charles, to our show.
Justin, thank you so much for having me. I'm thrilled to be here.
Hey, we're thrilled to have you. I'm going to go ahead and leave you to it. Thanks for joining us.
Okay, great. So I'll kick off with our presentation. I'll just take a quick moment here so everyone can review our safe harbor statement. Table of contents. So BTCS, we're actually the first U.S. public company focused on blockchain and Bitcoin technologies. We went public in early 2014 and have been kind of a pioneer in many sectors in the space. Right now, the core focus of the company is on securing disruptive proof-of-stake blockchains. So we're currently securing Ethereum's 2.0 beacon chain, Cardano's blockchain, and recently announced that we're also securing Tezos. The other project we're working on is developing a data analytics platform to allow users to connect to multiple exchanges and deploying a digital asset treasury strategy. So we're actually the first to do that, first US public company to do that as well. Just some key highlights for where we are today in 2021. Our blockchain infrastructure solutions segment, which is basically the staking or securing the disruptive proof of stake blockchains. We kicked that off at the beginning of this year. In February, we did about 72,000 in revenue for Q1, and that grew 425% to 380,000 in revenue for Q2 compared to Q1. And we're planning to broaden that out by securing additional blockchains in addition to Tezos, Cardano, and Ethereum, as we also work on a non-custodial staking as a service platform to allow others to delegate to our blockchains. The data analytics platform I talked about, we're continuing development there. We engaged a team in the Q1 this year to help push it forward and have basically completely redesigned the back end and are making the front end more modernized. And something I'm super excited about is our digital asset treasury. We've grown that over 2,000% year over year. As of the quarter ended Q2, we had 21.5 million in digital assets, and as of August 28th, we had 34 million of cash and digital assets. Given the last couple of days, that's probably up slightly more than that. Some of the huge goals for 2021 is uplist to a senior exchange, i.e. the NASDAQ. I'll talk about that a little bit more. Secure additional blockchains and launch our staking as a service and data analytics platforms. Moving on, I'll take a couple minutes to talk about the industry. Having been in the space since 2013, we're just really excited. Basically, the internet was allowed for the digitization, proliferation of information on a global scale, and blockchains allow for the same thing with digital asset transfer. And despite being in the space since 2013, we still believe it's the early days. I mean, I think one of our biggest mistakes is probably being too early to the game. With respect to kind of use cases of blockchains, and I know a lot of other people on the CryptoFest have talked about this, the big ones that we see getting used are DeFi and NFTs, and most of those are utilizing blockchains that we secure. We're a huge fan of proof of stake blockchains versus proof of work, though we were the first US public company to actually mine Bitcoin back in 2014, and we still own we own 90 Bitcoin. So in terms of market opportunity, obviously NFTs are all over the news. While it's a bit dated, Beeple's, every day's, image went for 69 million. DeFi is obviously growing, and the market is still small compared to US gold reserves or intangible assets or global investable assets. Excuse me. Moving on to BTCS, we're just really excited about the direction we're taking the company. We think it has the potential to create tremendous shareholder value. The first segment, which I touched on before, blockchain infrastructure solutions, we're looking at that in a couple phases. Phase one is expand the operations by running nodes for our own account, and then move on to building a staking as a service. Within what we're doing today, we're running 240 nodes on Ethereum's Beacon chain, which is about 26.5 million Ether staked as of August 28th. We've got 257,000 ADA staked on a Cardano pool, and we're running 2 Tezos Baker nodes, which is about 18,000 Tezos. One of the things we really like about proof of stake is it's environmentally friendly. It's more decentralized than some of the proof of work blockchains. It's highly scalable, and a lot of the NFTs and DeFi's solutions are getting built on top of Ethereum and other proof of stake blockchains. So we think it's an area that has tremendous opportunity. In terms of our criteria to evaluate new blockchains to secure, it's really quality, revenue and earnings potential, and technical difficulty. I won't go into all the details, but some of the ones that we're looking at next are Terra, Cosmos, Polkadot, Avalanche, Kusama, Polygon, and Solana. So we're pretty excited about bringing those to market when ready. As far as the data analytics platform, as I said, we engaged a group to help us broaden and make it more modernized, and so that was in Q1. We've got Gemini, Bitstamp, Kraken, Binance, Bittrex, and FTX currently, piped into the platform. The back end is really robust and scalable. On the front end, we're working on, a revamped look and feel that's mobile friendly with a swipe left, swipe right, user interface. And we have some previews here, which is updated from our last corporate presentation. As far as the roadmap, we're still on schedule to open the invite-only beta in Q3 of this year, and the public beta release in Q4 to Q1 of next year, with it kind of being open to the public next year. With respect to our digital asset holdings, we have a over 2,000 increase in fair market value year over year as of June 30th. Obviously, it's substantially more than that as of today. We've got our holdings on the left, so you can see both by the holdings we have on the left and in the chart, we've had tremendous growth. As of August 28th, it was 32.7 million. I think we're probably up, just if you based on public information, that's probably more like 34 million. The one thing that's really interesting to point out is that if you look at our balance sheet as of the end of Q2, we're only going to carry that at 10.9 million, and it's actually going to be split between long-term assets and short-term assets. So Ethereum, since it's locked into a smart contract until it becomes tradable, that's going to be a long-term asset, and then everything else is going to be a short-term asset. But we mark our cryptocurrency down to the lowest price it's ever been since acquisition, and we never mark it up unless we actually sell. So our balance sheet really doesn't reflect the true value of what we have, because it's done in accordance with US GAAP, which really doesn't have the right accounting regime to deal with cryptocurrencies. It's a long-lived intangible asset. So I would encourage investors and prospective investors to really read the MD&A section of our filings, in addition to the the financial statements. Just some key highlights. As of the 6 month ended June 30th, we ended the Q2 with 24.4 million in cash and crypto, 3 million in realized crypto gains, 10.6 million in unrealized gains. That's up substantially if you just looked at today's values and the prices from our the past slides. Management has a huge long-term commitment to the company. We've got over 14.4 million in shareholders' equity. We, as a team, on Jan 1, we invested 1.1 million. I personally invested $810,000 into the company. That accounts for 41% ownership collectively as management. We're very bullish on the company and what we're doing and where we're going. As far as operations, we've expanded to 3 blockchains that we're now securing. For the first half, revenue is 453,000, and we expect over $1 million for 2021. Very high margin business, 84% gross margin, and we plan to continue to grow going forward. With respect to the team, myself and Michael have been with BTCS since 2013 and have been deeply involved in the space since then. We recently added Andrew Lee as our CFO. We've also expanded the board. We added, in addition to David Garrity, who's been CFO of a couple public companies, including Interclick. We added Charlie Lee, the creator of Litecoin and the managing director of the Litecoin Foundation, and a former Coinbase engineer, as well as Carol Van Cleef, who's a very prominent lawyer within the money transmission and cryptocurrency space. So we're really excited to have a independent board of this caliber. Just to kind of wrap it up before I open to questions, just some kind of key investment highlights. We're right now the only pure play US public company focused on disruptive proof of stake blockchains. We were the first US public company to begin staking Ethereum. We were the first one to mine Bitcoin back in 2014. We were the first US public company to have a digital asset treasury strategy going back to 2017. And so we're as far as public company goes, we think we're on the really on the cutting edge. And we're pretty excited for the future. Your revenue is growing. We're working on the staking as a service and data analytics platforms. We have a very strong balance sheet compared to many of our peers. With respect to price to book ratio, and I'd probably say more of a price to book using fair market value of cash and crypto. We're trading at if it's $8, about 1.35 times cash and crypto, and about 2.3 times if you include the preferred held by management, which is substantially lower than most of the Nasdaq listed companies within the sector, and as well as the other OTC peers. We're also pursuing a Nasdaq listing. For those of you that saw the recent press release, we did a 10-for-1 reverse stock split, and while I recognize many shareholders do not like reverse splits, our stock's actually up 20% from the $6.50 pre-split price, and we don't need to do a dilutive financing in connection to uplist. Right now we're, I would say, very close. We've met all the initial listing requirements. The stock's traded above $4 for 5 trading days, and we're just waiting to hear back from the Nasdaq. Obviously, with that said, I can provide no assurances or guarantees that when and if the NASDAQ will indeed list us, but I'm remain extremely optimistic that is that things are going in the right direction. So with that said, I'd love to open it up to any questions that the people may have.
Hey, yeah, Charles, got a couple here from my end. First, you outlined a few goals for the year at the beginning of that presentation. I think there's 3 or 4. Where are you on those goals? How many of them have you accomplished, and where are you towards the completion of them?
So I think the big goals are to begin staking, which we've done, right? We started staking Ethereum, we started staking Cardano, and we started staking Tezos. The development for multiple other blockchains is in the works, and so I think we've accomplished that. Revenue has grown. With respect to the NASDAQ listing, that's a very big goal. We applied in mid-May of this year. We've answered numerous questions. We wouldn't have done the reverse split unless they'd come back to us and said, we have no further questions. Get the $4 stock price, and we'll send it on to a secondary examiner. So I think that is, I'm optimistic. Again, can provide no assurances or guarantees it'll happen, but I'm very optimistic that we have a good probability of getting there. And on that, it's very rare. I mean, there are only 50 companies on average a year that move up from the bulletin board to the NASDAQ, and the super majority of those end up having to do a financing in connection with it that are usually more dilutive because they have warrants, etc. Our last financing was at equivalent of $10 a share. So we don't need to do a financing to move up. We just need the approval of the NASDAQ. So those are the goals. The other ones we're still moving, and in the timelines, we believe we're on target.
And then as far as the balance sheet, can you speak a little bit more about how you decide what to add and how you decide to add that?
So right now, I mean, obviously we have 90 Bitcoin. That's well over $4 million. We have probably 26 million-ish in Ethereum. So we're very bullish on both of those. With respect to adding new tokens, I mean, one thing we're looking at is, and I kind of touched on this before, the quality of the token, the revenue potential from adding it, as well as the technical difficulty in doing it. And our target right now is delegated, proof of stake blockchains, so we can actually drive revenue and open a staking as a service platform. We also are looking at some other tokens that we would not necessarily be able to generate revenue off of, right? But that's kind of more of our treasury strategy.
Question from the chat on that note: if you're planning on adding, wait, I just lost it. Hold on, chat moving so fast for me. It was Decred. That was it. Planning on adding Decred. Fits the proof of stake model.
Right now, that's not on the roadmap. But we're going to look at. It takes some time to get these things launched, right? It's not. As a public company, we have compliance. We have to look at the auditability of the things that we add, right? It's not as easy. I mean, I can tell you, I would have liked to have been staking Ethereum December last year, but we were very concerned about accounting, and we actually had to go. We went to the SEC and asked for guidance or a pre-clearance on how we were going to account for staking, right? I mean, that's a long process to go through. So we're very cautious as we add new things. It's not as easy what you could do at home, right? Or what an individual could do as a public company.
John Moore, I'm going to read this question verbatim. For meatheads like me, is it fair to describe your company as the proof of stake counterpart to a Bitcoin miner?
That would, yeah. And I don't want to call you a meathead, but that is a great.
Hey, he called himself a meathead.
Yeah, look, that's a great analogy. I mean, we were the first U.S. public company to mine Bitcoin in 2014. I actually helped get Marathon started. If you go look at their public filings and search my name, you'll see that they were going to acquire a company I was involved in, Global Bit Ventures, right? So I understand Bitcoin mining very well, and I think proof of stake mining or staking is. It's just better, right? Like, you don't buy a depreciating asset as a company. Like, I want to increase shareholder value, and buying a computer that's going to be worthless in 1 to 2 years and hoping that I make enough money as the difficulty skyrockets to pay that off is not a great use of proceeds. if the difficulty on, let's say, Ethereum goes up because more people stake, well, they're going to have to buy the Ethereum to get into the market, which is going to mean the value of the cryptocurrencies we hold is going to, theoretically, if supply demand, economics hold, should go up, right? It's not a depreciating computer. So I'm much more bullish on this model, and we're the first to do it in the US as a US public company. There are a couple in Canada doing it, and obviously Coinbase, you can stake through them, but that's a different beast, right? They're multi-billion-dollar company where sub $100 million market cap. So
Michael in the chat, what percentage of your revenue do you project to come from the data analytics platform?
We haven't put out guidance on that yet, and so I'm not going to speak to that right now. I would say the engine behind our revenue is going to be the staking for our own account, and probably the next thing that would drive that would be the staking as a service.
Have you been given any guidance from NASDAQ as far as timeline? Or not really?
That's not exactly how it works, right? Okay. And I really don't want to give any specific guidance, except if we weren't very close, we wouldn't have done a reverse split. That's as far as I'll say. It's that's the last step. That's the last thing you do. We wouldn't have done a reverse unless we were very close. Again, I can provide no assurances or guarantees. They will list us, and if they will, when they will, right? That's up to them.
I think your lawyers will be happy with that answer.
Yes, I'm not,
You're well trained. You're well trained.
Yeah.
Charles Allen is the CEO of BTCS Inc. Conveniently, their ticker is also BTCS on the OTC markets here in the U.S. Charles, thanks a lot for joining us today.
Yep, thank you so much for having me, Spencer.
All right, let's move this right along. 1 second. Okay, I'm back. Moving right along to our next presentation. We have our first and actually our only pre-recorded segment of the day here. This is a presentation from Mawson Infrastructure Group. They do mining, they do asset management, similar to the company we just heard from, BTCS. So we have that video queued up. It was pre-recorded video. Let's roll that, producer AT, and if we're ready. If not, I will just sit here and do some more schmoozing.
We started this business in 2019 as a way of leveraging energy. With a view that Bitcoin would be a logical way to monetize stranded and distressed energy assets. Our focus is on Bitcoin mining and high-performance computing, and it's a fully integrated model where we're looking to leverage a long-term strategy to transition the world into a decarbonized society. Mawson, at an overview, $778 million market cap at $11. We're rapidly expanding our hash rate from 0.2 of an exahash in Q1 2021 through to 3 exahash in Q2 2022. Different to a lot of other Bitcoin miners, we've got a really high proportion of the business owned by insiders. So as a founder of the business, we're highly concentrated and focused on ensuring great shareholder returns. The management team currently owns greater than 30% of the business. Importantly, we're a net zero carbon Bitcoin mining operation with a really high operating margin at 80%. Looking at our business overall, we've got a really broad and diverse management team with a highly experienced board. Our chairman is a guy named Greg Martin. He is the former CEO of the largest energy company here in Australia, and he's built a wealth of experience for us as we've been locating sites and doing PPAs with stranded distressed energy assets. We currently have 2 operational sites in the US, and we've been building additional sites around the world, and specifically one in Australia, which we'll be releasing to the market shortly. Our existing operations have about 400 petahash online, and as earlier indicated, we'll be moving to 3,000 petahash online by the end of Q2 2022. All that equipment is locked in secure contracts and ready to be delivered and deployed in incremental stages over the next few months. We're highly disciplined in our capital raising strategy and allocation of capital. To date, we've only raised $72 million. And with a target of 5,000 petahash in 2023, we're looking to really ensure that our shareholders have phenomenal performance. ESG is a core part of our business, and it's not just about the environmental aspects. We're highly focused on the social interaction, the license to operate, and our good corporate governance. Critically, 80% of our energy mix is non-carbon emitting, and we have a lot of community engagement. One of the key advantages that Mawson has is our low-cost rapid deployment via our modular data center and our low-cost power infrastructure. Since our launch in 2019, we've only done $72 million of capital raising, but it's enabled us to get to 3,000 petahash online or 3 exahash. And we've strategically done that at times when we've seen the market opportunities, had the right opportunity to acquire equipment, and we've found an opportunity to leverage that equipment purchasing. More recently, in August this year, we completed a $37 million pipe and purchased an additional 17,352 miners for 1.5 exahash of hardware. If you look at our business today, it's operating out of 2 sites in the US with 400 petahash. That's producing just over 3 Bitcoin a day and with just north of 100 megawatts of operating capacity. Looking forward to the end of 2022, we'll have both our mining business and a hosting business. We'll have 2 sites in the US and 1 site in Australia with over 3,000 petahash online. 3,000 petahash online equates to approximately 23 Bitcoin a day. And against that, we'll have about 400 megawatts worth of operational capacity. Rolling forward to 2023, we see 3 sites in the USA and 2 in Australia with approximately 5,000 petahash online, producing just around 39 Bitcoin a day and over a gigawatt worth of pipeline for energy capacity. Having a look at our infrastructure, which I think is one of the key differentiators between us and a lot of the other operators in the space, is that we've targeted sites that are in great jurisdictions. So we have very strong relationships with our peer group, and we're looking for sites that have got stranded or distressed energy in regional locations. And what that's led to is a business with a sub 4-cent cost of power across all our sites. Critically, that combines with our modular data center to allow us to rapidly deploy in each location. We have the opportunity to be able to build these facilities and building the energy infrastructure in these facilities while simultaneously building our modular data center to ensure that we can get them deployed and located on site quickly. Key to that is our site in Georgia. The lease expires in 2038, and we've secured a couple other additional sites that we're in the process of building out. All of this is surrounded by and encompassed in our framework of net zero 2030. And core to that is the idea that we'll ensure that our energy mix is always greater than 80% non-carbon emitting, and we'll use offsets and credits to ensure that we get to 100% net zero. This is one of our modular data centers being installed in our site in Georgia. They're a highly modified 40-foot shipping container that have capacity up to 2.5 megawatts. Each container holds 588 ASICs per machine, and it costs us approximately $150,000 a megawatt to deploy. And this is really a highly advantageous price to deploy per megawatt and gives us a great competitive advantage as we deploy capital out into the market. Our Georgia facility is in Sandersville, and we have a lease there until 2038 from the Development Authority. Phase 1's been built and it's 25 megawatts, and that's actually up and running and fully deployed. Our power cost there is 3.5 cents a kilowatt hour. Phase 2 is currently being built at the moment, and there's 75 megawatts with additional capacity to go on there, bringing the total site to 100 megawatts. Combined, the 100 megawatts will be 80% non-carbon emitting. Our target for 2023 on the site is 400 megawatts, and we'll be operating a north of 80% GP margin. One of the great things that Georgia allowed us to do is expand into hosting. And we're targeting to have 100 megawatts worth of hosting capacity at the site. with the current market dynamics around energy and in Bitcoin mining, we're seeing an average margin of 2 cents a kilowatt on our existing hosting customers. And if we can get the full 100 megawatts up and online, you're seeing annualized revenues of approximately $52 million and a GP in the business of about $17.5 million. We currently have 3 hosting customers online, and the margin is about 33%. So it's a great little operating business. So for those that aren't, au fait with Bitcoin mining, revenues derived by our hash rate over the global hash rate, times by the block reward, times by the Bitcoin price, less our operating costs. So with 400 petahash online, our annualized revenue approximately $47 million, and that's our current run rate in the business. Our GPs are greater than 80%, but we explained to the market we're greater than 80%, and it's our approximate number. The end of 2022 with 3,000 petahash online, annualized revenue of $350 million or 80% GP. Our target for 5,000 petahash online or 5 exahash would see an annualized revenue of approximately $580 million, again with a GP north of 80%. And this is all based on Bitcoin at $40,000 and the difficulty in mid-August. As I alluded to earlier, a highly experienced board and management team is key to our business. And we've always been focused on having a genuinely independent and well-governed business. Our chairman, Greg Martin, was the CEO of Australia's largest energy retailer. And then our non-executive directors bring a wealth of experience in both NASDAQ and Australian listed companies. Our CFO, Hetal, comes from PwC and has a wealth of experience in listed companies. Liam Wilson, our COO, is based in New York and oversees all the US operations. Nick Hughes-Jones is a commercial officer, and he oversees investor relations and new site development. And Andrew Judge, our company secretary, has a legal background, obviously, but specializing in emerging technology, infrastructure, and financial services law. Looking forward to our business, where do we see ourselves in the next 2 to 5 years? We'd see ourselves 100% carbon neutral. We hit carbon neutral in 2020, and we see approximately 600 megawatts worth of managed infrastructure online with a power cost around 3 cents. Looking further out to between years 5 and 10, we'd like to be in a zero carbon business. And we see that transition occurring as we move our energy mix to wind, solar, and hydro, ensuring that we no longer have to rely on offsets and credits to achieve our carbon neutral stance. We'd like to have a gigawatt of installed infrastructure and see the power costs at between 2 and 3 cents. ESG is core to our business and core to our focus. And in 2021, we planted 25,000 trees and sequestered 22,000 tons of carbon. But it's not just about how you plant the trees and where you plant them. It's all about how you engage with the community as well. And key to that is our view that, being a good social citizen, it gives us the right to operate in the space. And core to that is how we interact with our local community. And there's a great quote here from Judy McCorkle, the administrator of the city of Sandersville, where we have our core site, where you're seeing our impact in the community is reducing power costs for the overall community. So we've enabled the city to get lower costs overall for all its residents. Bitcoin's being adopted rapidly, and I think everyone on the call will know these names. There's no point beating around the bush. It's rapidly being adopted, and we like to facilitate that. And as a Bitcoin miner, we see our role is really to provide the infrastructure in the space that underpins the network running. One of the questions we often get asked is what happens if the Bitcoin price pulls back? And we ran some real world data based on 100 petahash online between April and July this year, and at Bitcoin price 61,500 on annualized revenues on 100 petahash, you'd see Bitcoin at 61,000. The price change would have removed about $5 million if you fast forward to the 11th of July on an annualized basis. But against it, you've seen the difficulty move as well. So what we're really seeing here is that trend, that the relationship between energy, the Bitcoin price, and the network difficulty responding to price overall. And so what you see is a similar annualized revenue of $11.8 million. It's never been a better time to be a Bitcoin miner, and Bitcoin mining profitability has been phenomenal. Based on our current equipment that we're looking to deploy at the moment, our operational break even is approximately $3,680 based on 100 terahash equipment with 3,400 watts worth of power. And that gives us a lot of operating leverage to the upside. So as we expand our business with 2 exahash online, we see, $40,000 Bitcoin. We've got $19.7 million worth of operational GP per month. And at $60,000, you're seeing $30 million worth of GP a month. Where's it put us? Well, ultimately, it puts us on the podium in our view. The growth profile of Mawson means that between today and in the future, we'll end up being up there with the riots and the marathons in our deployment schedule. And our 2023 target should see us as number 3. What's it mean for us as a business today? Well, we're currently looking to uplift from OTC markets to NASDAQ capital markets. And if you were to look at the businesses, Mawson's business compared to our peer groups, Bitfarms, Hut 8, Hive, Greenwich, Riot, Marathon, there's a large valuation mismatch between our current market cap and everyone else in the market. So we also observed that there's a difference between miners with facilities primarily located in Canada and those with facilities located in North America. All our facilities are currently located in North America, and we'd like to see that value uplift as we migrate to NASDAQ. And that's us. Thanks for watching Mawson Infrastructure.
All right. Thanks to Mawson for that. Again, as the banner says, right, recorded earlier. So in the future, our goal is always to provide live programming, but can't always work out with people's schedules. So that's our solution. We have technology to record and play things later. Let's move on, though. It is 12:41, and actually, whoa, we're running early. Oh man, we're running so early. All right, so here's what I'm going to do. Before I bring on our next speakers, I see them in here in the green room. Let me just do one quick thing, a couple quick things actually. First, I mentioned this at the top of the show today. Slido, scan the QR code that's on the screen right there. Participate, answer these questions, and you can win there it is. A free 1-year subscription of Benzinga Pro. We will choose that person at random, probably around 5:30 today, Eastern time. You don't even have to get the questions right, frankly. You just have to pick one, but you can try to get them right if you want. So again, Slido, scan the code on the screen. I see some people think they know the answer. We'll see if they're right. That's the first thing I want to say. Excuse me. The second thing I want to say is it's 12:42. It's been about 3 hours since we've done a crypto update, and I think we should, seeing as how this is a crypto festival. We never want to stray too far from what's actually happening out there, right? So let me get my screen up. There it is. Let's do a crypto update brought to you by Voyager. Yeah, I mean, kind of the same. Actually, no, not the same story. Bitcoin, which has been lagging ETH for the past couple of days at least. Well, really for the whole month of August, but specifically, ETH turned around the other day and Bitcoin didn't really. But Bitcoin is in the green, is my point. Bitcoin is in the green. That's my big takeaway, the biggest change from this morning, from our last update. Bitcoin in the green. Ethereum, we talked about this, guys. It broke out of that range finally, up 8% again today. Just building on that Momo from August. Ethereum, huge day. Cardano, Binance Coin in the green, Doge in the green, XRP in the red. I know there's some. I think I saw some headlines related to their hearing or lawsuit with the SEC going on. I think that was yesterday. I saw that. Luna's in the red. Most things in the green, though. This is encouraging to see. Again, it's the first day of the month. You want to start the month off on the right foot. So good to see more green than red on the screen on this, the first day of September. As a reminder, you can get $50 in Bitcoin for free by going to the Voyager app, downloading it, funding an account with $100, and entering the code ZING, Z-I-N-G. And that has been your crypto update, brought to you by moi and Voyager, but also me. Okay, I know we're running early, but that's okay. That's okay. We're allowed to go be early. Let's bring on our next speakers here. And I'm going to bring on our moderator first, Mr. Logan Ross, a.k.a. BZ Logan.
How are we doing today, Spencer?
We're doing, Logan. This is one of the parts of the day that I'm most excited for. We are heading into the Polkaverse. We're diving headfirst into the Polkaverse. Am I right?
You are exactly correct, Spencer.
Okay, tell us who we have on this esteemed panel.
Yeah, for sure. So, hey, everyone, welcome to the Polkaverse. This is going to be a panel all about the Polkadot blockchain and its surrounding ecosystem. Today, we're joined by some incredible people from some of the most cutting-edge teams in the blockchain industry. So we have Cassidy Daly, who does token design and research at Centrifuge. We have Christine Mohan, who's the VP of Business Development at Kilt Protocol. And we have Dan Reeser, who's the VP of Growth at Akala. Thank you all for joining us today at Benzinga. So starting with Cassidy, could each of you go around, introduce yourselves and your project?
Yeah, thanks for hosting, Logan. So my name's Cassidy. I work on token design and research at Centrifuge. This is the team behind our Kusama project, also called Altair. My background is in economics and international finance. Also worked briefly as a consultant for the Federal Reserve before I joined the crypto space. So Centrifuge is really real-world DeFi is how we frame it right now. So enabling users to tokenize their assets that exist in the real world and finance them on-chain, plugging into DeFi liquidity in places like Maker and very soon Aave. We just passed that governance proposal there. So Centrifuge Chain is already live today. We currently have a standalone substrate-based chain, so part of that Polkadot ecosystem. And we have a financing dApp called TinLake on Ethereum that has over $30 million in TVL. So Centrifuge Chain will be bidding for a parachain slot soon on Polkadot once they go live. But Altair, the experimental boundary pushing little brother to Centrifuge that's focused on these sort of fringe use cases, is currently bidding for a parachain slot on Kusama.
Great. And Christine?
Hi, I'm Christine from Kilt, VP Business Development. So I work across biz dev, marketing, PR, ecosystem partnerships. I came from Polkadot and Web3 Foundation, where I was CMO there, doing a slightly different role and really involved in the launch of Polkadot last year and through the decentralization phases, which was really good training for Kilt. And before that, I was a co-founder of Civil, which was a blockchain syndication platform out of Brooklyn, which was a spoke of consensus. So I've been on the Ethereum side as well. So Kilt is an identity protocol. Our goal is to put the control of your personal identity and your data back in your hands. And we do that through issuing on our protocol what we call verifiable credentials, self-sovereign credentials. So really, one of our top goals is to help people understand that digital identity is broken right now in Web 2, and that Web 3 offers a way to improve this and actually make people autonomous and have them be able to disclose data when they want and how they want. And we are built on Substrate. We are launching soon as a Kusama parachain, and we're partnering with folks like Akala and Centrifuge to do that. And good to be here.
Thanks, Christine. And last but certainly not least, Dan.
Hey, Logan. Yeah, it's great to be here with a couple other great panelists and friends, Cassidy and Christine. I'm Dan Reeser from the Akala team. We're also building Karura on Kusama. My background, I've been at Akala for about, I think, 7 months now. And prior to that, also worked at Web3 Foundation with Christine, launching Polkadot and Kusama prior to coming over to Akala. We are building a kind of multi-chain DeFi platform for the Polkadot ecosystem with Akala. And then we're building a very similar platform kind of centered around KSM and the Kusama community with our Karura platform. Karura, we are already live. We're at, I think, around 70 million TVL and have our DEX stablecoin live, and then liquid KSM staking just went live yesterday. And then we'll be, just like the other two teams here, we'll be gearing up for the Polkadot parachain auctions as soon as those get started. So thanks for having me.
Yeah, awesome. So a little bit of background on Polkadot. A lot of projects have gained mainstream popularity recently after being labeled so-called Ethereum killers, like Cardano, Solana, and Polkadot is sometimes referred to that as well. But Ethereum co-founder and Polkadot founder Dr. Gavin Wood says that Polkadot is not an Ethereum killer, but a bet against single blockchain maximalism. So Dan, could you talk about how Polkadot aims to expand decentralized product offerings and what specific challenges it was built to overcome?
Yeah, for sure. So just to kind of set context, we came from a world where Bitcoin and Ethereum were, prior to Polkadot, the two kind of biggest innovations in the crypto space. And both of these are single layer one blockchains that were kind of isolated from everything else. So Gavin, after building Ethereum, realized that there needs to be this system or architecture to connect multiple blockchains together instead of everything kind of being built on its own. So right now, we're seeing a lot of growth in the layer one space. So when I say layer one, I mean independent blockchains like Solana, Ethereum, Avalanche, and what have you. But these are all independent chains. Polkadot is in a different category. If you know about ETH 2.0 and what the plans are for that, Polkadot's first comparable network will be ETH 2 when that launches. At the current moment, there's actually no comparables for Polkadot because it's this layer below connecting multiple blockchains together. What Polkadot is primarily doing, or will do when parachains launch on Polkadot, is it will secure blockchains, which we call parachains, and it will connect parachains together. Besides these two, security and cross-chain, what it will also help with is another very important but underappreciated aspect is the ability to upgrade the blockchain without forking. I think many people have heard about the Bitcoin Cash fork and Ethereum forks, and this is an underestimated aspect of Polkadot. An example of this is that Polkadot's already been upgraded 25 times since launch. This is 25 upgrades that would have caused a fork with prior networks. So the speed of innovation that we're seeing is extremely fast at the Polkadot level, but this will also be applicable to any parachain built on Polkadot as well. And then the last thing that I'll mention is customization. So any blockchain, Kilt, Centrifuge, Akala, these are being customized at the blockchain level instead of being forced to kind of only be able to innovate on top of the blockchain in applications. So we were able to build our chain specifically for DeFi, and other chains are building specifically for their use cases. So the Polkadot ecosystem is kind of a bet on customization and specialization versus building something super broad and trying to build, a wide variety of applications on that.
That's perfect. Thank you. So Polkadot is basically this hub for connecting interoperable application-specific blockchains, and these are called the parachains. And there's extremely limited parachain slots available to connect into the Polkadot hub. So let's take a trip into the future. The year is now 2025. Your roadmaps are fully delivered, and you've all launched as parachains on Polkadot. So for each project, starting with Cassidy, how will the retail market use or be impacted by your product?
I would start with saying we've already seen a pretty huge impact from Centrifuge. We've been live for a little over a year. And I think let's jump to the future, 2025, I think it'll only look stronger, and especially with integrations with projects like these other two great projects on the panel, Kilt and Akala. So today we enable access to financing for all sorts of different business owners. And these are generally the type of businesses that aren't able to access financing through the traditional financial system. So for example, we have Spotify artists, Amazon sellers, and soon even TikTok content creators that will be able to access financing because of Centrifuge. So in 2025, that could look like even more secure ways of being able to say this asset is real and it exists using something like Kilt. Being able to finance these assets, not just with DAI that we're using today, but also with the Akala dollar or even other stable coins in the future, and being able to move these assets really easily between chains like Centrifuge Chain, but also directly to Akala or Kilt if you wanted, or to other different chains within the system. So I think one of the breakthrough potentials that I see in the Polkadot ecosystem is really these integrations between projects and the way that we can actually grow this to be even bigger than it is today. And really accessible financing is what Centrifuge is targeting.
That's great. And the tokenization of real world assets has been extremely like fascinating to me, just because of the potential to unlock like billions of dollars of value. I mean, from real estate to B2B invoices, there aren't many real world items that can't be tokenized as NFTs. I'm curious, how will Altair contribute to the success of Centrifuge?
So Altair is really that experimental little brother, I would say, to Centrifuge. One of the coolest use cases I'm excited about for Altair is imagine being able to finance your CryptoPunks. So really taking it to that next level of having enough flexibility on Altair that you could really push the boundaries of what asset financing looks like. So any sort of different art NFT, imagine that you could create a DAO, and that DAO is owning all of these different NFTs, and it can pool those NFTs together on Altair and access financing with different stable coins from different projects. Like in the Kusama ecosystem, that would be Karura and the Karura dollar. So I think for me with Altair, it's really like pushing what that bleeding edge looks like in asset financing.
Awesome. And so I'll pass it to Dan now. Maybe you could give us a vision of 2025 for your team.
Yeah. So 2025, that's about, what, 4 years? So where things are headed now, and this goes back, I think, a few months to an integration that we announced and we're working on and hope to launch later this year with a US fintech company called Current, or current.com. We're seeing this fintech interest in DeFi, as well as you've seen recent announcements with Compound Treasury and Coinbase had a recent announcement around these fixed yield, like 4%, for example. But I think this is where everything will be going in the next 4 years. So aside from everything that Cassidy mentioned with cross-chain DeFi applications within the Polkadot ecosystem, as well as Akala bridging to other ecosystems. So the Akala dollar will not only be the stablecoin for the Polkadot ecosystem, but there's a huge demand for another decentralized stablecoin option besides DAI. So we see AUSD, the Akala dollar, going also to Ethereum and other ecosystems soon. In addition to the kind of like crypto specific use cases, in 2025, we'll most likely see a lot more integrations with fintech companies. So just to expand on the current.com integration, what they're calling the product and the exact like yield hasn't been finalized yet, but what this will look like is there's 3 million customers in the US using Current on their phone for a simple savings account. They're probably earning like 0.5% like most other banks offer. But with a DeFi backend, this will mean that current customer dollars can flow out of traditional finance into the AUSD stablecoin and into Akala to earn yield on those funds. They don't even have to know that crypto is involved, but what happens is when we're generating that yield, the yield is then sent back into US dollars and distributed to customers' accounts, and they're magically getting maybe 3, 4, or 5% on that with a new kind of yield-bearing account. This is just one small example of what fintech could be doing with crypto. But what gets me excited about that is we always talk about mass adoption and all this stuff, but this is how we get mass adoption, is to bring crypto yield to people without them knowing it's crypto, because crypto is way too hard to use still. These extensions, the wallets, these private and public keys, the masses don't have any interest in knowing that. What they want is just 4% interest, 3% interest instead of 0.5 interest. So that's kind of what I'm excited to see over the next 3-4 years.
That's awesome. And you've already secured a spot on the Canary Network Kusama. What does that mean for your first mover advantage as like the go-to DeFi platform now on Kusama?
Yeah, Kusama has been extremely beneficial to us, and I think all other teams, because Polkadot is always going to be our primary focus with Akala, but Karura has been phenomenal experience for us. Number one, going through this parachain slot auction process, which is a process where you have to kind of bid against other teams in order to win a slot to launch. So we've already done that once. So now when we do it for Akala, we've already kind of been through this and know what worked and didn't work. In addition to that, all these products that we plan on launching on Akala have already launched on Karura or will have launched. So we will know exactly, again, how to improve everything before it gets to Akala. And then another thing that I didn't expect, but is actually pretty interesting on the DeFi side, we're working with a kind of a risk management firm called Gauntlet, who works with Aave and Compound and many of the other top DeFi platforms. And what they were telling us is that typically when they are providing recommendations on risk parameters within the DeFi platform, for example, like collateralizing crypto for a stablecoin loan, they typically had to just kind of make guesses and test based on testnet and then move to mainnet and hope that those risk parameters were accurate. But now this is the first time they've actually been able to get real world data from an experimental network on Karura. So all the data that we're going to be feeding into the Akala risk model is going to be real world data. So it's going to be super accurate when it makes its way to Akala versus just kind of making best guesses on testnet. So a few examples of why Karura has been so valuable to us.
Awesome. And now, Christine, I kind of want to start with my follow-up question and then lead that into the 2025 outlook. So how has the centralization of big tech negatively affected the internet? And what is Kilt doing to fix this problem and put users' data back in their own hands? You are on mute, by the way.
Yes. So the consolidation of our personal data is now in the hands of, those top 4 or 5 companies, unfortunately, many of which are in the US. And a lot of consumers have conceded that, right? It's convenient to sign in very quickly with one click. And so what's important for us is to be another solution to that and actually show people there's another way. And certainly identity and autonomy is key to the Web3 vision and kind of the next version of the internet. And we see ourselves as a key infrastructure for that. There's nothing more personal than identity. People get that. And I think we've had a lot of support from our community really early on because they sense there's something wrong, they want more, but don't really know. And there's not a lot of solutions out there. Anything can have an identity. So a person, obviously, machines, a machine identity, services. So what we hope to do in the next 4 or 5 years is really shift the consumer and the enterprise and the corporate thinking around this. And actually, what would it be like to have something more like selective disclosure? We are sharing only parts of your data in the way that you want. And also not having that shared and then remonetized and retargeted and all those wonderful things that the web has done to us in the last 10 years. So those are really big goals. So if we've done our job right in 4 or 5 years, we've built a marketplace. We've built a marketplace for credentials. We are working on, and we'll announce later this year, what we're calling, it's a DAO model. It's a virtual credential organization or a VCO, where people can actually build businesses around verification, around identity. The goal here is for Kilt to become like a platform like Drupal, where our CEO Ingo came from, and he was on their board. I come out of a WordPress world, worked with them pretty closely. So it's really Kilt becoming that layer that people are building on, entrepreneurs, startups, enterprises, to actually build businesses on. And that's the end game here. And then I'm actually getting very nimble because there's a lot of applications for Kilt across anything from NFTs to gaming to DeFi. We're working with a lot of partners around ways to introduce a little more KYC elements into the DeFi world, because there's a lot of regulation happening there very soon this fall. So it's really a matter of focusing on which applications work best and which regions, and a lot of different geographic areas are also taking a heavy look at data and data usage. So it's a really good time for Kilt to be launching.
That's great. We have about 5 or 6 more minutes, but I want to give each of you a little bit of time to tell the audience if there are currently any opportunities to support your project, where they can go to find out more information, and any other thoughts you might have. So I will pass it to Cassidy.
Cool. Yeah, I think we'd love for you to always jump in the conversation with us. We have a Telegram channel, t.me/centrifuge_chat. So you can always jump in there and ask us questions. Right now we have our Altair crowd loan that's open on Kusama. So you could head over to the Kusama portal directly or centrifuge.io/Altair to learn more and stake your KSM to support Altair's bid for one of the Kusama parachain slots.
And Dan?
Yep. So if you're curious to use Karura and see what Akala is going to be like when that launches, the Karura apps are live. So what I mentioned with the DEX and stablecoin and liquid KSM staking, you can find all of this at apps.karura, which is KARURA.network. Our primary place for discussion is on Discord. But where I'll send you is to the Akala Twitter. It's just twitter.com/Akala network. When you go there, there's a Linktree link, and that is the link to basically everything you need to know about Akala and all of our channels, and including all the Karura channels. So just go to our Twitter, follow us there. We're very active on Twitter. And then, yeah, just give us a follow there, and then follow our newsletter if you want to keep kind of updated on the major news.
Thanks, Dan. And Christine?
Sure. So we, fortunately or not, finished and hit our max cap today in the Kusama parachain auction. So there is not an opportunity to vote and contribute to our auction right now. So that is one thing that was an opportunity until about 3 o'clock today. But the next opportunity is to certainly support us through this process and through launch. We've got very active Twitter as well. It's handled @Kilt Protocol. We've got an active Telegram, but what we've just started is Clan Kilt, which is kind of a beginning stage to a it's not exactly an ambassador program. It's more use cases and experimentation and a sandbox where folks can meet the community and start thinking about ideas on a very consumer level on how Kilt can be used. And we've already seen pretty cool ideas being just knocked around even before launch. So that's clankilt.io. And we also have an SDK. We've got some tools that are already there that people can play with. We've got, if you go to dev.kilt.io, all the tools are there. So, but we will be launching as soon as we secure the parachain and then mainnet. And so things are really going to get busy. We've got a lot of partnerships around privacy and indexes and DeFi coming up. So depending on what you're interested in, there's going to be a lot of ways to brainstorm. So we definitely invite folks to reach out to us on any of these places. DM us if you have ideas, because it really, the use cases are endless, and we really want to go broad on this because it is identity and so applicable to many things.
Thanks for sharing, Christine, and thank you all for joining us today and sharing the information about these awesome projects. Once again, these are all Polkadot projects that are currently building on the Canary Network Kusama, as well in preparation for a spectacular and bug-free, hopefully, launch on Polkadot in the future. I will pass it back to Spencer now. We hope you enjoyed your trip into the Polkaverse. Thanks for joining us today.
Great. Thanks, Logan.
Thank you.
Thanks a lot, Cassidy, Christine, Logan. I think I'm missing someone. I apologize. Dan. Thanks. Sorry, Dan. Okay. Let's keep going here. We are decidedly in the meat of day 2 of the Benzinga Crypto Festival. I see our next speaker here in the background. Let's bring him on if we can. Sheldon Bennett. He is the CEO of DMG Blockchain, trades on the OTCQB market. There's the ticker on the screen, DMGGF. Sheldon, good afternoon. How are we doing today?
Great. How are you doing?
I cannot believe it is September already.
Neither can I.
No,
and I'm so happy to be back. I was in your conference a few months ago. I'm glad that you've got a great crypto conference going on right now.
Yeah, you know what? I'll be glad when this is in person again. So these virtual events are fun, but nothing replaces in-person conferences for me. Anyway, enough about that. I see your slides here, guys. Let's get them on the screen. I will step out, and Sheldon Bennett, DMG Blockchain. The floor is yours.
Great. Well, thank you again. Yeah, great to be back again to talk about DMG. We achieved a lot in the last quarter. Our quarterly statements just came out. So for those of you who haven't heard of us before, please take a look at us on the TSX Venture Exchange as DMGI or on the US OTC at DMGGF. And there could be some people from Frankfurt. So we're over in Germany as well as 6AX. So let me just get right into it. We have 20, 30 minutes. There's a lot to go through. For those that have seen me present before, this is the new deck. Our marketing department's been working with me, so hopefully I get it right. So I've gone through it a couple of times, but we changed the structure a little bit to better communicate some of the things that we've achieved and to better show potential investors and our existing investors and shareholders how we see the market and where we fit in. Well, as a public company, we have a disclaimer, so please make yourself aware of our disclaimer and our forward-looking statements. So just a quick overview. As I said already, DMG, we're a public company, traded on various exchanges. We have about 106 million shares outstanding. We trade about 1.5 million, some to 2.5 million shares a day. We have a 30-day average trading volume 1.5 million. We sit on net cash about 47 million, net assets around 20 million. We're headquartered in Vancouver, British Columbia, not Washington, some people have thought in the past. We have about 25 employees. We have a US subsidiary called Blockseer, which you'll hear a lot about in this presentation. And our main data center is in British Columbia in a place called Christina Lake, just close to Spokane on the US border. So recent achievements from DMG. So we started the company, myself and a few founders, back in 2016. We went public in 2018. We went public about a month before crypto winter started. So we've had quite an interesting ride. But recently, we're one of the first signatories in the Crypto Climate Accord with Argo, our partners. You'll hear more about Argo in our presentation as well. We purchased 7,850 Bitcoin miners in the last 2 quarters. We've had the first almost 3,000 now hit Vancouver. Some of them are already delivered and up and running. We're expecting to have around 300 petahash or 3,000 miners up and running in the next few days. We invested in Blackbox. It's a manufacturing company in Vancouver to help us build infrastructure quicker and be able to expand faster. We've invested $3 million Brain Capital for crypto custody solutions for our wallets and Blockseer. As well, we put $2 million into a US company called Bosonic, which is a trading company, a trading technology company, to help us accelerate the speed to market for our layer 2 crypto exchange. And we put $1 million into another crypto exchange. Unfortunately, I can't disclose it yet, as the terms of our agreement do not allow us to do that quite yet, but hopefully soon I can. And our Blockseer pool technology, which is licensed out, has hit over 2 exahash. So that's great news for us and our technology team. Moving on, the way that we describe DMG and the way that we sort of build our company is sort of 2 parts. So we have, one, our core business is crypto, Bitcoin primarily, but we have 2 divisions. One, what we should call core, which our core business is mining Bitcoin or creating Bitcoins and putting them on our balance sheet or selling them. And what we call Core Plus is everything on top of mining a Bitcoin. And that's our software, data analytics, and forensics. So we do a lot of software work, and we're really excited about a lot of our software that's coming to fruition now. So when you look at the Bitcoin ecosystem, I like to break it into these 2 parts. So I just talked about Core and Core Plus. So if you look at Core, that's Bitcoin creation. That's our data center, and that's does the compute power where we get rewarded in newly minted Bitcoins, and that's how we make money as a Bitcoin mining company. And our Core Plus is how we monetize Bitcoin. So this is mining pools we get services fees from. These are wallets you get service fees from. So these are exchanges where you get transactional fees. These are data analytics where we get fees for consulting and helping and following Bitcoin, working with lawyers, working with law firms. They pay us money for doing this. So this is how we monetize Bitcoin once it's created. So our understanding of the ecosystem, I broke into this little pyramid. And so when you take a look at what we call Core and Core Plus, our core business is based on reliable power infrastructure, which is our Christina Lake data center. It's hardware supply and ensuring that we get all the parts we need. Part of that is the Bitcoin miners. They're made in China. That's one piece of that. But the other parts of that are around other things like getting transformers, getting a lot of different parts besides just the server. And then the last piece on Core is the design and optimization. And so there's a lot around the software that automates and makes sure everything works. But on the design, there's also improvements. So we are improving our data center by moving from air cooling to immersion cooling. And there's great improvements in that, great boost in our ROI. So I'll talk about that in another slide as well. And then again, once we've made that Bitcoin and it pops out, you're into our Blockseer platforms. This is where we monetize. This is where we try and get ongoing transaction fees daily from Bitcoins that are created. And then at the very top of our pyramid, we have sort of the higher end, more expensive solutions where we're selling brain power. So we're selling analytics, and we're selling forensics, we're selling data science, we're selling investigation. And so this is how we see ourselves and how DMG sort of fits in the ecosystem of crypto. Now, I made this little picture, and I went through this with our marketing team for a little while trying to talk about this. So if you take the same thing of core and core plus, we kind of flipped it around. We put the core on the top, and we said, you know, in 1 year, how many Bitcoins are created? Well, there's about 330,000 Bitcoins newly minted and created in a year right now at the going rate of 6.25 Bitcoins per block. And there's some transactions in there, fees. So if you just take $50,000 per Bitcoin, it's about $16 billion of crypto is created in a year. And again, these are just rough numbers to give you an idea of what that looks like. So when you look at our core business, it's sort of tangible market, or it's the market that we can make money off of. It's $16 billion, give or take a little bit. So our peers in there are ourselves and as a public company, but there's other public companies, Hive, Hut 8, Bitfarms, Riot, Marathon. So I put a couple of names of other core Bitcoin mining companies that are our peers. And we all work in this $16 billion business. So we're all trying to get our piece of this through crypto mining. But if you dig below that and you look at what's past crypto mining, where do the coins go? So then you get into exchanges, you get into lending, you get into analytics, you get into custody, you get into all sorts of other services around these coins. Well, that's a much bigger business. And this is where DMG is really striving to go to with our software. So we learned as much as we can about how Bitcoin works from being a Bitcoin miner. We are now applying that and becoming a software firm in crypto. And that's why we kind of created this idea of showing you like core can only go so far. The bigger business we see in the future is this centralized finance, is getting into where all the big players are moving crypto around and making transaction fees. And so when we talk about how it's vertically integrated and how the structure and foundation of our core business works, we put a slide together of just the main things that we're doing. So one, on asset infrastructure, our facility is 60 megawatts. It runs about 20,000 miners, which is about 2 exahash. So that's our core facility. That's what it can run. We're not running that yet. We're on our way there. We're buying the miners and installing them, but we're going towards a goal of 2 exahash in our main facility. We're looking at a few new data centers right now. Some not so big, but really advantageous on price and terms. Some really big that could make a great impact on DMG and its shareholders that we're really trying to conclude some agreements. We're trying to manufacture and create as much of our equipment as we can, as quickly as we can. Supply chain is a real problem right now. So we've done our deal with Blackbox to try and expedite our manufacturing of infrastructure. And then we're moving forward with our merchant cooling. I know people that have watched me before, I've said that we're moving forward. And I've also said our supply chain's been tougher on this, but we have some movement on that. And, our goal is to convert over our Christine Lake data center to full immersion. We won't get it done by the end of this year, but we'll get some of it done this year, and we'll continue on and do this next year as well. And then, of course, we do have a lot of consulting and engineering engagements, more than we can handle. We're not, primarily in the business of helping build other data centers, but we do it where there's an advantage for us, usually through getting agreements that we can host or use that facility as well. So if you just, for those that move quick, because I know I don't have a lot of time, but this is what our Christine Lake data center looks like. It's, as I said, 60 megawatts is built out in secondary voltage, can do 20,000 miners. We own the substation on the property. It's ours. It's not somebody else's. It's a 30,000 square foot building and so on. We're very, as I said, very close to the US border, which is great for our supply chain. Blackbox, as I mentioned, helps us in our manufacturing. We can quickly design and build things in Vancouver. We recently just finished another 100 power channels, which helps us add more miners to our facility in Christina Lake. And then just on the immersion, we've done some studies on this, and those have seen me talk before. We've talked about how this ROI can be increased by 25% on your equipment, and that this fluid replacing the fans will help us in consuming about 18% less power from the studies we've done. So when you do the math on that, that turns out to be quite a savings in CapEx and in power for converting from air-cooled, which is very inefficient, to immersion cooling. Now, the really exciting stuff that we're moving into when we talk about this sort of glacier, where we had the crypto mining at the top, the core business, and at the bottom, we had this big chunk of centralized finance. And this is our Blockseer platform, which we call Core Plus. So Blockseer have our Core Plus, our Blockseer platforms broken into two parts: safety and security, and regulatory and compliance. So we were trying to think about how do we talk about all the different platforms we have. And you can see a lot of platforms there on the right. So we have Explorer, Freeze, Breeze, Wallet Score, Mine Manager, Mining Pools, and Petra. So in safety and security, Explorer, Freeze, Breeze, these are things that are really, law enforcement uses. Freeze and Breeze are wallets. People would use those. Explorer is a way to explore Bitcoin transactions. Regulatory and compliance, Wallet Score is a real-time AML product. Mine Manager is a compliance SOC 2 piece of software that manages and runs mines so that that is correct and you can rely on it. Then we have our mining pools and the Petra as a way that we work with pools and transactions. And I'll just take you through a few of these and try and move quickly through them, as I'm hoping we have a few questions at the end here. On Blockseer, just a screenshot here, we have our first client, which is Marapool. They're a great company. A lot of people know Marathon, one of the biggest mining companies in North America. So we worked with them to white label this and get this up and running for them. We're really excited at the growth that Marathon's having. And we're really excited that they chose us for the technology to run Marapool. We have a second pool called TerraPool coming out. We partnered up with Argo. Argo is a UK listed company, very much interested in sustainability and renewable energy. So we've created this new pool with them. And that pool is also part of the Crypto Climate Accord. And as I mentioned earlier, both Argo and DMG have signed that accord. With Mine Manager, this is really about automating and tracking the performance of a data center. So if you're in the crypto business, there are companies that take licenses on this from us to help them better manage their operations and understand and fix problems. Wallet Score, as I said, is a real-time AML product where it looks at the risks around transactions with different wallets based on their past history and us being able to identify nefarious characters or problems with transactions in the past. We have a whole group within the company that focuses on this type of business. Explorer is our very first product when we bought Blockseer, when we went public. And it basically is a way of exploring the blockchain and looking at wallet addresses and the associated amount of crypto in each wallet. And then you can sort of track it back and forth and move around that whole ecosystem and see the transactions, the dates, the times, the amounts, and where everything goes. So a lot of this is really interesting to law enforcement and different law firms and accounting firms. And then the last piece on our Core Plus is our data analytics and forensics. So a lot of people don't realize this, but we do on average 1 to 2 projects a month over the year where we're working for accounting firms or law firms, law enforcement, whoever it may be, asking us for advice, evaluation. We do some technical due diligence. We do some crypto mining audits where we're asked to help out in some technical situations. So it's a nice piece of our business. It really keeps us on the edge of the technology, and we have sort of business to business following of companies routinely use it over and over. Getting a bit more into the Blockseer's team, just so people are aware, the team has a Bitcoin core team, which really works on the pool and the Bitcoin mining side of the business. You can see it sort of focuses Explorer, Petra, and Wallet Score. Those are the projects that it's really working on right now. And then we have our other Blockseer team with the 6 other engineers, and they're working on the Mine Manager, the mining pools, the Breeze, and the Freeze. So we have a strong team that's been growing. We're hoping to keep this existing team to double from sort of what we were at, 6, 9, 10. It'd be nice if we can get this up to 20 over the next few quarters. There's tons of other projects besides these that we would like to get launched and going. So we've got a lot to do here, but we've been making great progress on every part of our software development, especially some of just on our core business, which is our Bitcoin mining side. There's 6 people involved in our Bitcoin mining on a full-time. We have part-time people as well, but on a full-time basis. And as you can see, they really are focused in on the power and the network security side of ensuring everything works properly. As you can see in the slide, I also said that the Christine Lake data center has a capacity of about 2 exahash or 20,000 miners that are the S19 style. And this is just a calculation based on the power and the power consumption by the S19. So in the future, if there's a new model in S29 and it does double the hash rate, so it's 100 terahash now and it goes to 200, then it would be something like 4 exahash. So this is just the way the technology works. Just a little bit on our commitments and ESG and compliance. DMG's Christina Lake facility is 100% hydroelectric, so it's 100% renewable power. We are signatories to TerraPool, and we're working on a pool that is based on renewable energy. That's the foundation of people using that pool and mining on it. And as well, we are, as I said before, signatories to the Crypto Climate Accord with Argo as the first 2. And we really drove that concept of being a signatory instead of just a participant of the Crypto Climate Accord. On the social, early on, we started on COVID work protocols. We regularly have health and safety. But things that are really interesting is our partnerships with universities. So we work closely with cybercrime at SFU. We worked with the Sauder School of Business at UBC for many years doing MD cases. We hire actively out of local universities and colleges, a lot of our programmers and on our operational people, even of our marketing people who worked on these slides came out of UBC's program. So we're quite happy that we engage with the universities and colleges to find great new talent and train them up and become the new programmers, the new managers in the crypto world. There's not a lot of people, a lot of past history and experience in the crypto world.
Hey, Sheldon, I kind of want to jump in so we could have a little bit of time for Q&A. I think we're down to like the last 4 or 5 minutes.
Sure. This is actually my last slide. So just on the governance, we're standard governance, anti-money laundering, independent board. This was just another sort of our core and core plus in our partnerships. But that's it. I mean, this is it. I mean, my last slide, and I'll take some questions. Is about, why should investors be looking at DMG and what makes us interesting? And one is our exposure, as I've shown, the sort of glacier to Bitcoin mining and Bitcoin software and software services, and that we have a strong balance sheet, over $40 million in cash, and we trade around 2 million shares daily.
Okay, so in terms of, and thank you very, very much for the presentation, just to give some respect and access to the questions that did pop up in the feed. By immersion cooling, you mean you're immersing the motherboards in mineral oil and then pumping through a heat exchanger? That's what you're referring to? Someone asked for that
mineral oil. It's the fluid's not a mineral oil. It's a type of fluid. We purchased this fluid from a major manufacturer that creates this fluid, and there's different data centers use different types. But it's a type of fluid that is engineered specifically to remove heat from servers without doing damage to the components. So the capacitors and the cables and the plastics and the different components in there. But the concept of, yes, you basically take the fans off that are used for air cooling, you put them into a fluid, you pump cold fluid from the bottom through to the top of the server boards. That heat goes to the top, the fluid sits skimmed off, it goes into a cooler of some type, and then it gets pushed back in as cool fluid.
So obviously it's been a hard year for mining in terms of public opinion. The whole idea of carbon impact being kind of held forth as the banner. Yeah, you had both regulators and to some degree sort of mainstream public sentiment and the news cycle working somewhat against it. Has that represented an opportunity for your company since you are focused specifically on more environmentally friendly mining solutions, or has that been has it been a challenging year? Since obviously there was a lot of heat, not questionable whether all of it was warranted, but there was a lot of heat about the carbon impact.
It wasn't so bad for DMG. So we had a lot of investors and a lot of media questions coming to us about the carbon in, Bitcoin mining and the Bitcoin industry. We are lucky that we're in Canada and a part of Canada and in British Columbia that is 99% hydroelectric. I think there's very little carbon intense legacy infrastructure around. So we're happy to say that we're 100% renewable.
Yep.
And that helps. But there's another part to that renewable that's really important. And I've said this before. One is having energy that's sort of carbon neutral or doesn't have this sort of impact, and that's a lot of what investors are looking at. And there's particular investors that are really looking at sustainability and what is your carbon footprint. The other piece that I always want to talk about is where we selected to go. So we selected to go to an area in British Columbia that is not sitting next to a city. There are towns around us, but we selected an area that has a deficit in power usage. So it has a lot of power there. There's a lot of dams and there's a lot of power being generated, but there isn't a lot of load. And so we came as a new load into a very small area. I think there's about 4,000 people in the town next to us. And so, we brought in new load, new jobs into an area that is made for lots of load, but because the economy's changed over time and there's not as much forestry mining and things like that as there used to be, we've revitalized an area that was built to be quite strong and have lots of power that was running at quite a large deficit. And so there's this part of crypto miners where crypto miners don't try to go and sit downtown Vancouver or downtown Chicago or downtown someplace. They usually go to places where there's a need, an abundance or a need of somebody to consume power. And that's where we go to. And we go there naturally because it's cheaper and there's a lot of advantages to that over, sitting in an urban area.
Well, thank you so much for taking the time to speak with us today. Unfortunately, we kind of got to wrap it up. But I really appreciate you taking the time to speak with us. Your URL is on the screen, of course, and I hope people go out and check out and learn more about the project.
Great. Thank you for having us again. And we're very active on Twitter. You can find lots of information on our website. So it was great to be here again and looking forward to doing this event again in the future. All
right. Thanks, sir. Talk to you soon. Thanks.
Bye-bye.
And I'm just going to introduce, we have coming up, our next guest is Ben Gagnon, Chief Mining Officer for Bitfarms. Hello, Ben. How you doing?
I'm doing well. How are you?
Good. Thanks so much for joining us today. We've got a lot of content to go through. I'm just going to go ahead and jump off and allow you to do your presentation.
Okay. Thank you very much.
Thank you.
Okay. So welcome, everybody, to this Bitfarms corporate presentation. Just going to quickly cycle through these cautionary statements here before we get going. Okay, so what is Bitfarms? Well, Bitfarms is the latest evolution of the Bitcoin mining industry. Bitfarms is a pure play, publicly traded Bitcoin mining company that enables nearly anyone in the world to buy direct exposure to industrial scale Bitcoin mining companies and facilities. One of the fastest growing industries in the world is Bitcoin mining, and to invest with a trusted counterparty like Bitfarms is a pretty new and novel concept. Now, why is this important? Well, the adoption of Bitcoin continues to accelerate. And as the premier hedge against rampant money printing and inflation globally, Bitcoin serves as a very powerful tool to do that. But historically, in high inflation environments, having your revenue be based in the underlying inflationary asset puts you at an extreme risk of being unable to keep pace and preserve your purchasing power, especially over time. There is only one industry in the world right now whose revenues are 100% derived in Bitcoin and will always be, and that's Bitcoin mining. Bitcoin mining is the freest market in the world, or perhaps the freest market in the world. And as such, really only the best operators can survive and thrive in the long term. But setting up and operating a Bitcoin mine is not as easy as it used to be. When Bitcoin started, it was essentially looking like this, just one guy and a computer in a basement. But as time passed, people sought to get a competitive advantage with more computational power and newer technologies. It did not take long before custom-built machines were designed and custom facilities were built just for the purpose of Bitcoin mining. But the desire to gain competitive advantage meant that people often did this fast and cheap just to make it work. But all these inefficiencies that you can see here on the screen, the poor placement, the overcrowding of racks, the broken equipment down in the center of the row, the broken fans in the background, all of these inefficiencies mean less profit and less Bitcoin for the operator. As Bitcoin becomes an institutional asset class, it's going to require institutional operators like Bitfarms to provide the security and stability that any trillion-dollar asset class would have. So, meet Bitfarms. From our earliest days, our goal was always to try and do Bitcoin mining right. Doesn't matter if it's our financial structure and our publicly traded shares or our early focus on the environment, where we've powered about 1% of the Bitcoin network with green hydropower for several years. We do this across 5 advanced data center facilities in Quebec, Canada, where we achieve tremendous economies of scale as we go and produce new Bitcoins every single day for significantly below market value and put those Bitcoins into treasury for long-term price appreciation. What you're seeing here are facilities that have 5 years worth of engineering, innovation, and operational experience rolled into them. And they're all maintained by our proprietary management software, our 24/7 command center, and our staff to make sure that we have the most uptime, the most Bitcoins mined, and the most Bitcoin revenue possible. We have our own 100% owned electrical engineering subsidiary that designs and maintains all of these data centers in Quebec, Canada, and also helps us to evaluate further opportunities abroad, both in North America, South America, and elsewhere. And then we take these huge economies of scale to a new level as we expand out to 178 megawatts of renewable hydropower in the province of Quebec. And we wrap all of this into our publicly traded shares. And this is really where it becomes a very important thing, because when we're looking at investing in Bitcoin mining or Bitcoin, you have to ask yourself, why would you invest in a Bitcoin mining company when you can just invest in the Bitcoin? Well, and the answer comes from those 3 things: because our revenues are derived in Bitcoin, because we hold Bitcoin, and because we can quickly grow our shares, because we can quickly grow our share of the Bitcoin mining network. As such, our shares do function as a lever to Bitcoin itself. So if you believe that Bitcoin's going to go up, you should also believe that we're going to go up more, because our revenues are derived in that appreciating asset, because we're holding inventory in that appreciating asset, and because we can forecast that as Bitcoin price grows and as we continue to grow our share of the network hash rate, we will continue to get more and more of this. Now, there's, of course, reasons why this profit opportunity exists. One, there's a need to incentivize companies like us to come in here and provide the stability and service of the network. And 2, there's also operational challenges with operating facilities at scale. And it's why it's so important to choose a good operator to invest in if that's what you're looking to do and get exposure to, which is something that we focus on from the beginning at Bitfarms. Ever since our founding back in 2017, we have tried to do things right. We've built facilities properly, clean, high efficiency with good scale. We invested in our electrical engineering subsidiary very early on so that we didn't make these costly mistakes at the beginning. We've been able to expand on our facilities, building larger and larger facilities over time and more numerous facilities over time. And we also have been publicly traded since 2018 on the Toronto Stock Exchange and been audited by a Big Four firm for the last 4 years. So we are trying to reduce those counterparty operational risks, because it is not plug and play anymore to just turn on a Bitcoin mine, and expect it to generate revenue. This is something that we need to install and also maintain over time in order to get the most amount of Bitcoins and the most value out of all this equipment. We're also going to be scaling this much further past where we've already done it in Quebec. We've already announced our expansion into South America, our first announcement of an international expansion where we're going to be taking over the entirety of a power plant for 210 megawatt nameplate capacity and publicly disclosed just north of 2-cent cost of electricity. This is about 50% of our cost of electricity in Quebec, which will enable us to produce Bitcoin with the same equipment for roughly half the operating costs as we do so in Quebec. This will enable us to achieve much greater throughputs in terms of our scale, and also to extend the lifespan out of our Bitcoin mining equipment that we have in Quebec by cycling it out to this lower cost jurisdiction. We also have, as I talked about earlier, our Volta Electric, our 100% electrical engineering subsidiary, which is one cornerstone of our vertical integration. The electrical engineering represents such a significant component of our operations and our designs that it really does make a lot of sense to bring all this talent in-house so that we're not paying exorbitant consulting fees. And then we also have the speed and efficiency of responding to things quickly. We also have our own in-house repair lab, which helps us to maintain all of our equipment and keep it running in pristine condition and generating the most Bitcoin mining revenues possible. All of these operations are tied into our incredible exponential growth that we have planned and scheduled. You can see here we ended last year at just shy of 1 exahash. We quickly broke the 1 exahash barrier in 2021. We're going to surpass the 2 exahash barrier here shortly in the coming months, and quickly reaching levels of 3 and 8 exahash sometime next year. We're able to do this because we have a huge amount of infrastructure that we're building, both right now in Quebec as well as Argentina, and we're also further evaluating opportunities in North America as well as Europe and elsewhere. We have over 56,000 new generation Bitcoin mining units coming that are scheduled for delivery between the next few weeks, as well as through the remainder of 2022. And each one of these Bitcoin miners are capable of doing about 100 terahash on average, which means that this is, it's nearly 5.6 exahash worth of equipment that's scheduled to be coming. That's a multiple of where we are now, and it's already contractually secured. One of the other great advantages that we have here too is because of the recent pullback in mining economics with the China ban, we were able to take advantage of that lower time and negotiate lower cost prices on our existing contracts for new Bitcoin mining units still scheduled for delivery. And because of our recent uplisting to the NASDAQ, we're also now able to have lower costs of capital as we seek to achieve these greater levels of scale and finance all of our growth. This business is an incredibly capitally intensive business. And so having those cheaper access to capital is incredibly important to funding our growth and achieving the best return in our investment. As of right now, we have 69 megawatts installed. We are quickly building that out, and we'll have around a little over 100 shortly by the end of the year or at the beginning of next year. And that's going to quickly scale up to nearly 400 megawatts by the end of 2022 in order to take advantage of and monetize the full amount of those 56,000 miners that are still coming. As we introduce these new mining machines into our fleet, two things are happening. One, our hash rate is increasing, which means that we're able to produce more Bitcoins than we would otherwise. And two, our watt per terahash or our electrical efficiency is improving, which means that our cost to produce those Bitcoins is also falling. So we're producing more Bitcoins and we're able to produce them at lower costs, given the newer, much more energy efficient equipment that we're installing. In terms of production, we are one of the largest producers of Bitcoin by far amongst the publicly traded companies. We were the largest producer in 2020, and through Q1 and Q2 of this year, we are also the largest producer in North America in terms of total Bitcoins produced. Right now, we have, according to this sheet, approximately 1,840 Bitcoins in custody, valued at about 85 million as of a couple of weeks ago. And we will be putting out our August production figures here in the next couple of days, and we'll have an update to our new custody figure and the value of that shortly. In terms of a valuation comparison, there's a number of publicly traded companies that are in the Bitcoin mining space, but Bitfarms has one of the lowest valuations relative to its performance and relative to its computational power. You can see here Bitfarms compared to other producers of Bitcoin and where they stand in terms of a dollar per hash rate metric. And we are here at the low end, meaning that we have significant upside potential as we catch up to our peers on the valuation side. This is also true for enterprise value per terahash, which gets rid of some of the nuances in the accounting and provides more of a clear picture. In terms of our financial performance as a company, we've had an incredible last 2 quarters with significant growth driven by a couple of factors. One, introduction and installation of new mining equipment throughout Q1 and Q2, as well as increased Bitcoin price throughout all of Q1. And then the Bitcoin mining ban in the end of or the middle of Q2, which helped us to grow our gross mining margin and our revenues even further. So we've got great numbers for Q1, Q2, outpacing most quarters and most years before that by all metrics. And then we have incredible EBITDA numbers, and we should expect to see similar or better numbers for Q3 as well. In terms of our coin mining and our gross mining margin, this gets into the, how we're producing our coins for significantly lower market value. This is where we end up on the chart here. You can see that we're essentially at about an 80% gross mining margin, meaning that only 20% of the value of that Bitcoin needs to be sold in order to cover all of the operating expenses to produce that Bitcoin. So we're a very high margin business. And because of that, we are actually fairly de-risked. In order for Bitcoin price to really impact us as a company, we have to see significant pullbacks, much greater than 70–80% before it really does start affecting us as a company. And if we do see pullbacks, temporary pullbacks in price, what that means is that we're just simply earning more Bitcoins, even if they're worth less. So we do have a competitive advantage, and we are hedged on the downside through our low-cost operations. In terms of our financial position and capital structure, we have a small amount of insiders, around 15%. The majority are retail and institutional investors. And in terms of our cash and equities, our cash was just shy of $100 million. Current assets about $85 million, and the equity valuations were around $200 million. So huge amount of assets on the table here, huge amounts of distribution of our shares across a huge amount of investors who see the opportunity both in Bitcoin mining and more specifically in Bitfarms itself. And then finally, Bitfarms is managed by an incredible team of executives that help to deliver and oversee this growth. We have our founders from Argentina, Emi and Nico, who are overseeing the 210 megawatt power plant project in Argentina. We have our president, Jeff Morphy, who's in charge of almost all of the executive and corporate tasks for the company. Jeff Lucas, who is our new CFO from the US, who has worked with a number of NASDAQ-traded publicly listed companies, tech companies, and had tremendous performance and returns on those companies. Myself, I've been operating Bitcoin for 6 years. Benoit, who is a qualified master electrician and who runs our electrical engineering division and our operations. Nathaniel Port and Darcy Donnell, who do a lot of the accounting and the back-end work in order to make sure that we tick all the boxes for compliance. and all of our investors to make sure all of that's in line and providing the most transparency and the least amount of counterparty risk. We also have an independent board with 3 independent board members made of Pierre, Brian, and Andreas. So in summary, Bitcoin is a huge, huge growth industry, and Bitcoin mining in particular is going to outpace that. As Bitfarms is one of the oldest and largest Bitcoin mining operations in North America, with over 69 megawatts built out right now, and incredible pipeline for future developments past 100 megawatts and up to nearly 400 megawatts over the next 18 months. We have tremendous room to grow and scale beyond our current size and beyond our current share of the market. We've already deployed approximately 23,000 miners, and we still have 56,000 miners to come in several new locations to finish constructing. All of our facilities are passively cooled, which means that we have incredibly high energy efficiency ratings, and they're always maintained by our 24/7, 365 command center, our in-house repair labs, our proprietary management software, and our skilled technicians who help to ensure that we're getting the most uptime and generating the most Bitcoins for the least amount of money and the least amount of overhead. And we've been working on addressing these institutional check marks. We were the first company to go through the front door with the Ontario Securities Exchange Commission with a long-form prospectus. We're the only publicly traded Bitcoin mining that's audited by a Big Four. And we're listed on both the TSX and the NASDAQ, which means that we comply with 2 different reporting regimes. And finally, it's that strong management team with experience in all sorts of aspects of the business, whether they're data center or different jurisdictions, technology, finance, business growth, compliance, electrical engineering, development, code. All of these different areas are well represented within the company. And that brings the presentation to a close. This is Bitfarms, and thank you for listening to our presentation.
Ben, just one quick question before I let you go. I know you'll be back later on, but what do you think is the most important metric from an investor's point of view in looking at a crypto mining company?
I mean, there's a couple of different things that we would look at, and the Bitcoin mining companies are not all too, different. There are unique advantages, and unique competencies amongst the different providers. But what I would look for is, what's your cost to produce a Bitcoin? That's my primary one. How many Bitcoin are you holding on your balance sheet? And what does your pipeline for growth look like over the coming 6, 12, 18, 24 months leading up to the next halving? Are you going to be ready as a company to bear the halving that's coming in several years? I think those would be my primary things I'm looking for in terms of check marks. If you're looking just for a pure metric, I think the simplest one to understand is either enterprise value per terahash or market cap per terahash. And that's really trying to understand how is the company valued relative to its ability to produce Bitcoin. And you would think that the more Bitcoin that you produce, or if 2 companies are producing the same amount of Bitcoin, they should be valued very similarly, unless you take into consideration the other factors, like how much Bitcoin they're holding on their balance sheet, or what's the underlying cost to produce that revenue.
All right, Ben, we'll be hearing more from you in a little bit, I think. But Ben Gagnon is the Chief Mining Officer of Bitfarms. Ticker on the screen, URL on the screen. Ben, thanks a lot, man.
Thank you.
All right, our next guest, everyone, this is some dedication right here, okay? This is how dedicated he is. Let's get those banners off the screen, guys. Our next guest, Adrian Zadunchik, is coming to us from his car in Poland, from the side of the road. I hope that it's not a busy road. Adrian, there you are.
Yeah.
Oh man,
here,
I think this is going to work. All right, you're Adrian is the founder and the founder of the Birb Nest. Adrian, first off, I mean, props to you for I don't know where you're going, but you pulled over, you hopped online, and you joined our show. So this is gonna be fun. How you doing? How you doing tonight?
Yeah, I'm doing very, very good. I'm always excited to come back on the Benzinga shows, be it for the regular webinars, live streams. I'm always happy to be the guest for you.
Okay, so just to be clear, you're not driving. The car is not moving, unless maybe you have a Tesla. Do you have a Tesla? It's driving by itself right now. You're just in the back seat.
I'm in the back seat of my Audi RS7. People love to hear always about it. When I shoot some tweets with pictures, and watches people go crazy over that. That's funny.
Oh my goodness! All right, this is gonna be wild. All right, Adrian, do we have slides for you? I believe we do.
It's going to be screen shares. I do have a couple
Screen
of
share.
screen shares
Okay.
to show.
So go ahead and do that. You can share your screen.
Okay.
And we'll get them up on right now. And I frankly I'm impressed. I'm impressed at this stability. I shouldn't say this because I'm going to jinx it, but I'm going to say it anyway. Your connection right now from your car is more stable than some connections we've had today and yesterday. So knock on wood for that. And there we go. I see those slides. So we'll go ahead and bring up your slides. I see your screen share up right now. There we go. All right, Adrian.
Okay.
The floor is yours.
Yeah, I appreciate it. I appreciate the invitation. For everybody, my name is Adrian Zdunchuk. I definitely appreciate the pronunciation went well on your end. Congratulations. It's not an easy piece, to actually pronounce the Polish names, surnames. Polish language is said to be the second after the Hungarian to be of the hardest languages to ever learn. So this is definitely always impressive. My name is Adrian Zdunchuk, as I said, and I'm better known under the name, or should I say surname, nickname, whatever you call that, CryptoBirb. Okay, it's like the bird, but like the one that flies, but it's actually with the B at the very end, right? Because it's Birb. So it came from a piece of a meme, as a matter of fact, 4 years ago. I do have parrots. Those are like small, medium-sized parrots, cockatiels, to be frank. And I've always loved birds. I've always loved animals per se, and I always loved just some casual meme humor that is actually just going mainstream, if you will, on Twitter. All right, for the crypto community, this is something that memes have always been around. And for your better understanding for who I am, I'm 28 year old right now. I live in Poland. I come from Warsaw, born and raised. I do have this pleasure to be certified technical analyst, which is quite rare to be seen, on the crypto scene. Okay, I do trade Bitcoin and legacy markets. So it's not only cryptocurrencies, it's not only Bitcoin, it's not only altcoins and similar, but it's also going outside the crypto community, crypto space. I do trade commodities. I have actually not been too active in the stocks field, okay, but definitely commodities, real estate, other markets, monetary. The financial markets for the other currencies is something that I've been definitely focused on. For my main background, I'm a chemical engineer. I'm a master of engineering for the chemical technology. I do specialize in the polymer composites. There's been a lot of very practical good uses, for the graphene substances, just composites. So this is my kind of like a technical, I should say, scientific background. I did graduate also from the Warsaw School of Economics, from the project management department, with my thesis actually being about the technical analysis of Bitcoin, surprisingly to my supervising professors and the supervising professors, that took care of the thesis, because that is something that the technical analysis is something that, first of all, I use, something that I'm known for, and something that I have been using for accurate long-term predictions. Okay, which is exactly what I'm going to explain to everybody how it all works. Okay. Besides, I'm a founder and the leader for the Birb Nest. Okay, the educational platform for the investors, which was founded in 2017. We've been for the bull markets, for the bear markets. We've been, for the biggest FOMOs, for the biggest capitulations. We've been there, all done that, and we've been finding the pleasure in leading people to their financial freedom via the educational resources. Okay, so we're not fund management company. We do not manage people's money. We are best at educating. And besides, I'm also a co-founder for Yellowblock, which is a marketing media agency. And all that I share, of course, is for the educational purposes in here only. Okay, this is not a financial advice. I hope that goes without saying. And before I continue sharing some larger charts, I definitely want to start off by explaining what crypto is. Okay, because having the main focus topic for today being the crypto tutorial and tips, practices for the rest of 2021 for those who are new on the market, for those who are just joining, for those who believe they could improve, their knowledge in the field. I'm here to give you and leave some big takeaways for everybody, okay, on how you can actually succeed in Q4, because that's what's coming in the rest of Q3 and the Q4, the rest of the year 2021, because I do believe that this is going to be the wildest ride. Most likely the next couple of months are going to be the wildest ride you have ever seen on the cryptocurrency market, in my opinion. Okay, so starting off by explaining what is crypto and Bitcoin, for those who come from the external markets, from the different legacy markets, cryptocurrency, or crypto known as a cryptocurrency market, is a type of a financial market, okay, where the financial services also play the role, but this is focused around the trading, okay, and crypto is like this cherry on the top of a blockchain. And blockchain is a data transmission technology, okay? It is a way to transfer the data from one place to another, okay? But with this difference that if you, let's say, want to transfer money, wire transfer via the bank, then to transfer money, let's say me to you, I do have to go through the route via the bank. Okay, so there's the third party, which is literally on the very middle, stopping us, from connecting one to another face to face, let's say. Okay, there is always this middleman. And what is different? I mean, this has its pros and cons, of course. What we know for sure is that banks are not really efficient these days, okay, because of the large amount of data transactions, because they charge a lot of money for the data transfers. I mean, for the money transfers, they are very ineffective as well. Okay, there is an overall central bank industry, kind of like a major problem, which is inflating the economy too much, which may lead eventually to a huge major collapse, bigger than what we saw in the internet.com bubble, in the housing bubble 2008, and everything that we've seen so far. Okay, so this is a very thin ice that the banks globally are stepping on, and because of that, the blockchain is the answer. Okay, and it all started pretty much like before there had been definitely lots of works, from example from Hal Finney, for the BitGold, for the digital gold technology as well, which was sort of like an underlying, I should say, papers, behind or below, Bitcoin before it came out. And the entire Bitcoin's history as the main cryptocurrency native, word, the main focus player, in the cryptocurrency industry, being the representation as well for the entire blockchain technology. Okay, the Bitcoin as a concept was released up to the people outside on 31st of October 2008, which was exactly 2 weeks after the Lehman Brothers bank collapsed. Okay, this was the response from the people, a message sent to the bankers that there are better systems, and this better system, being the blockchain, actually avoids using the third party in the middle, and instead they have the third party standing, let's say, next to you and taking some fees and pushing the transaction. So they do not really interrupt. They actually just let you push through without interrupting in the process. Okay, and because it's a decentralized ledger, it's a decentralized system. Okay, it's the reverse. It's the opposite of what banks do. Okay, because the banks are about centralization. Okay, every transaction goes through the bank and then comes out of the bank. So what happens in here, for the blockchain, for the crypto representation, you would have the way bigger efficiency, because there are lots of miners, so-called miners, who actually push the transaction through, okay, for you, while earning the block rewards, while earning some rewards for pushing the transaction through with their computational power. Okay, and because of that, the system is way more efficient. This type of a technology is way more efficient, okay, in a way of the speed for the transactions, okay, where it takes seconds to minutes, let's say, instead of days and weeks. Okay, on top of that, it's cheaper, right, versus using the banks. And you can get as many transactions going on at the same time, pretty much like as possible. Okay, so having known, that the blockchain is already or has already been adopted by the banks themselves, right? So the biggest enemies kind of like have already adopted the blockchain technology out of luck, because they did see that there is no competition, okay, that they were on the losing side. And knowing of that, the Bitcoin and the other cryptocurrencies being more and more efficient, finding the better ways, to transmit data, and actually being more interesting concepts from the investment point of view, all this together have scaled up and extended and expanded blockchain, Bitcoin, and other cryptocurrencies to be extremely large market, okay, of a couple of trillion of dollars of capitalization. And the question is, okay, this is supposed to be the crypto trading, sort of like a webinar. So for those who are traders, for those who are starting, there's the very first question. Like, after having got to know, what Bitcoin is, then the question is, how can I invest in it? Okay, and then you have a couple of routes, couple of ways, if you will. Okay, you can invest in Bitcoin, and which means exchange your money or other assets for Bitcoin. Okay, in the private market, let's say, and in the public market, quote unquote free market. Okay, so the public market, is different than the private, deals, because the private deals are called OTC, over the counter. You can come, let's say, if I were the counter, over the counter, kind of like desk, you could come to me, come to my room, which is, of course, has to be fully legislated and regulated. And we can exchange the value. We can exchange the money for the Bitcoin, okay? And this is sort of like going over the counter. This is going personal. On the other hand, which is different, you have the option to go public, to go on the global public exchange, okay, to this free market, so that there is no one defined recipient, okay, for your value. It's actually more about having lots of investors, selling and buying the same goods, being for Bitcoin or be it for other assets, okay? And this type of markets, free markets, if you will, okay, you can differentiate between these, the two main players, let's say two main groups of CXs and DXs, okay? CX and DX, centralized exchanges and decentralized exchanges. So centralized exchange is an actual institution which gives and creates the market for you to trade with, okay? The decentralized exchange is a decentralized version of the centralized exchange, long story short, right? So there is no actual management who decides about your transactions, but it's fully, truly peer-to-peer exchange, but on a public market. So whoever gets better bid or ask, they win the transaction, they close the deal, okay? And while talking about the cryptocurrency, investments, let's give it a quick, just check for an instance for Bitcoin, okay? Hopefully the Bitcoin chart is going to play in a second. I believe it needs some approval from the team side, okay?
Waiting on you to share that. You're sharing the wrong screen right now. We're just waiting on you to.
Okay.
There we go.
Very good. Perfectly. So here we see, how, just for an example, Bitcoin's chart. This is a monthly Bitcoin's chart, okay? We can see a candlestick type of a chart, which represents pretty much like 4 values. OHLC, this stands for open, high, low, and close for a month, okay? So we measure with the candlestick, which consists of these 4, just pieces of information. You actually get to know the specific values, okay, throughout a certain time frame that here the monthly is. Okay, so we can tell the maximum price that some asset reached throughout the period. You can tell the, let's say, if it's orange in this, it's bullish, right? So it means that the open price was lower than the close price. So the market has pretty much just opened at this level, okay? Opened at this level, at one point reached the minimum value, okay? At the same time, throughout the month, reached the peak value and closed somewhere at the close level, okay? So this one candle represents this part of a price action, let's say, of the price history. So what you can see in the chart is an actual price chart for Bitcoin, which shows you the two scales, the price scale for Bitcoin and the time scale. Okay, so that you can measure the price history, the trends on the market, how the price of Bitcoin has changed throughout the years and decades, right? And based on that, you can apply something that is called technical analysis. I personally am a position trader. I do focus mainly on the long-term trades. And at the same time, I use technical analysis as not the sole, but the main source of information for me to make my decisions, to make my investment decisions. And the market technician, the technical analyst, is an analyst who uses the technical analysis, right, to figure out the upcoming price movements for a given asset, for Bitcoin, for gold, for dollar, whatever. And the question is, what is technical analysis then? So the technical analysis is the art. This is a study of a price chart, okay, which helps you analyze the chart in terms of something that is called a momentum, in terms of trends, whether the market is going up or going down or going sideways, right? And based on certain chart patterns, formations, some similarities combined, similarities in the price, outlook, combined with the behavioral, emotional decisions from the people, this is something that helps us as the market technicians, as technical analysts, to project certain prices in future. Okay, it's a bit of a guessing, of course. We do not have crystal balls, but the same way, like you can use and apply the technicals to anticipate certain market moves in the future. Like, of course, you can never guess with 100% certainty, right? But there is a main assumption that the trends tend to continue. It's like, the first Newtonian law for the dynamics, right? So which says that pretty much like when there's an object, okay, and and the object is not moving or it's moving, it doesn't really change its state, of movement. So if it's moving, it will be moving in the same direction until it stops, right? Because of some external forces. So here, this is the same kind of like a thing, the anticipation is that here, just for an example, this is an uptrend, the upwards trend. This was a downtrend, for the bear market of 2018. This was the prior uptrend, bull market of 2015 up to 2018 peaks. I should say 2017 peaks, because that was actually December. Okay. And, this is another bull market. So long story short, we can tell that there are, some certain tendencies that the Bitcoin is, going upwards more often than going downwards, or going downwards more often than going, upwards. So here there's an ascending tendency. This downside, it's more of a down, and here it's called a bear market. Okay, and what is definitely there to be known for everybody is that the technical analysis helps you analyze the trends, okay, in terms of the tendencies, in terms of the market specifics, the demography of the market structure per se, okay. And by applying the laws of statistics, the law of cyclicality of the markets, knowing that the trends exist, that it is not something that, is just a theory. The trends do exist. You can clearly tell there is a tendency for Bitcoin to go up, right, rather than to go down. The same way you can tell that here's the tendency to go down versus go up. So the trends do exist, and based on the trends, the same way, that the Newtonian laws apply to the physics in real world, the same way it applies in the financial market. So, can you really predict the future? The answer is that yes and no. Like, you never know what's truly going to happen because you do not have the crystal ball. But, when you when you kick your leg in a table's leg, well, you don't have to do it to know that it's going to hurt you, right? So by saying, okay, that if you kick the table, okay, with your leg, it's actually going to hurt you, will hurt you. So by some, in some sense, you are actually predicting the future. Okay, so knowing the lows, knowing the past history, knowing the past tendencies, the market structure, the market tendencies, you can anticipate certain price predictions in future. Okay, and it works mainly, well, because of our emotions. The technical analysis is a self-fulfilling prophecy. It's because we believe that it works that it additionally makes it work. It's just like with the superstitions, like black cats, crossing the streets. Like when you see a black cat, crossing the road, and you crash into a tree, it's not because of this poor black cat. It's because of you taking away your main, attention out of the road. Take your eyes out of the road and just focus on the cat. And it's you crashing the car, not the cat. Okay? So same way, you can then fall out of luck and by inability to accept your own mistakes and failures, you tend to blame the world outside. Okay, so what happens is you blame the cat. So here, because of that, you believe that it works, and then you believe that the black cat just actually gives you the bad luck. And it's not the bad cat, it's your lack of attention. But the belief is what usually makes it work. Okay, so here for the technical analysis, the more people use it, the more people study it, the more people see certain tendencies, trends. This is always very subjective. But the more people see and agree about some certain direction, the more chances are that the technical analysis is going to apply well. Okay, and we as human, tend to undergo emotional processes in our minds. Okay, which means that all the rationale that we have for knowing the numbers, for analyzing the charts, the trends, is disturbed by the something that is called perception biases. Okay, so here, knowing of that again, you can tell that we are definitely in the bull market, in the continuous ascending movement. This is definitely looking different than this. This is out of question. Okay, and for me, being the technical trader, the person who uses not fundamental analysis, but well, I do use other sources of information, just like on-chain analysis, to see through what's going on inside the blockchain. How many new addresses come up, like what is the activity of those addresses, to lock in their profits and so on. You can analyze also and project certain movements, right? Based on a fundamental analysis, let's say costs of mining, for costs of miners, the overall fundamentals of the Bitcoin are analyzed, and you can also use it. The same way you can anticipate the market reversals, which are the holy grail of the technical trading, and it does come from the sentiment on the market. And the main statement, as the practice shows, is that the crowds are always right in the middle of trends, let's say here, but they're always wrong about anticipating the extremes, which is here and here. We have the tendencies to over-exaggerate, okay, in either direction because of our emotions. So here, the more people join, I should say, the more market grows, the more mainstream people, the more new people it attracts, right? The more you see in the media that Bitcoin is breaking new all-time records, the banks that are also anticipating, and joining the party, that taxi drivers, like the anybody who actually does not daily focus on trading as their main career, they get absorbed in the market because of interest, because of emotions, because of fear of missing out. So knowing that the technical trading and overall investing and market cycles are caused, first of all, by the demand and supply fluctuations. When there is a bigger demand than the supply, the market goes up. When there is a bigger supply than the demand, that means there's more sellers, then the downside declines, are the main tendency. And, applying that combined with the human psychology, okay, this is something that 95%, some sources say, or 90% on average, traders fail at doing. Okay, so it may look simple because there is a thing called, first timers luck. When you join the party, usually you join late, right? You join somewhere on the top, and like because the media told you, the media like presenters are saying that Bitcoin is growing and so on and so forth. Okay, and you join first, and somehow you're making money. So this is the first timer's luck. But then when the dark time comes, right, and the later you join, the shorter period you're going to remain profitable. The later you come, the more euphoric you will be about it. Okay, the less clue you would have about it as well, and the high chances you lose money. So the question is, like, is the crypto risky? Yes, it is, because like I said, 95% or 90%, as other sources say, of traders, of cryptocurrency traders, of people who focus only on the short time frames, let's say not analyzing the monthly charts, but going, for the 44-hour charts per se, like here, like some micro movements, okay, some tiny daily fluctuations, the 95% of those people lose money. Right? So how is that possible? You have all the knowledge in there. You have everything you need, okay, and you still lose money. So the answer is the emotions. And because of that, exactly, we did create the Birb nest. I mean, I founded that in 2017 because the people demanded it. There was a need from the market to learn how to overcome your emotions and apply that in your trading, because the sore fact is, again, that 9 out of 10 people, okay, 9 out of 10 people are going to lose. So the question is, how are you going to make sure that you're going to beat? How you're going to make sure that you're going to be the 1 out of 10 who beats the rest of the market? Okay, because beating the market, beating the average returns is something that is also a holy grail. Okay, for traders. So the question is, knowing that the crypto is extremely risky, like I had the pleasure to actually have been quoted a couple of times in a Business Insider or Newsweek, as the analyst, as an expert in the field, where I was sharing my thoughts, my peaks about the market, and like giving you a very, very brief overview, to answer, is crypto a good investment right now, for Bitcoin? Then I want to let you know that we are slightly late, for everybody who's late, who's, joining right now at this very days, listening to this stream, webinar, speech, you have already missed out 3 years of your history, right? Or even like, the very final bottom, where the place where nobody wanted to trade it, okay, when every single news media paper was saying, that Bitcoin was going to zero. Every bigger bank, was saying that Bitcoin is worthless, that it's never going to recover. So crowds are always wrong at the extremes. Okay, remember about it. So when the crowds get over emotional and they offend you because you have different opinion, then it means that they are aggressive because of their exposure, right? And they're aggressive here and never want to hear about Bitcoin pulling back ever upwards, because they've lost all the money because of their joining late and lack of interest to learn. So same way, people get extremely aggressive when you say, when you have the contrary opinion, but because the crowds are always wrong at the extremes, when you counter trade what the crowds tell you, what the inexperienced traders tell you, that's a very successful trading strategy. Okay, so having the Bitcoin in there, which is the main player, having also Ethereum on side, which is the biggest, the next biggest player. I was actually hosting, like the webinars, and I do print my daily, blog reports for the market outlooks. Ethereum is also likely, to pull some decent numbers, some decent returns. Bitcoin most likely has, in my opinion, some 2-3x, 200-300% upside potential. I personally expect Bitcoin to range around the peak time, which is, in my opinion, late stage of Q4 this year. Okay, I do expect Bitcoin to trade somewhere between $90,000 and $120,000. So it's about 2x from here. Okay, so it means that it still has its 100% upside potential. And because Bitcoin is the leader and it attracts and absorbs the capital, when the Bitcoin tops out, this entire capital just spreads across the market, just like you spill the milk over the table. Okay, and then As the result, because the market is filled with the liquidity, with traders, with the money, okay, then the Ethereum is the next biggest player, which can absorb the volatility and the people running away from Bitcoin, and then all the rest, okay, is pumping, which leads to these so-called alt seasons, the altcoin seasons. Altcoin being the alternative coins, alternative to Bitcoin, okay? There are so many projects that try to compete or improve what Bitcoin is missing, okay? Thousands and thousands of coins. If you go to the coin market cap, okay, to coin market cap, then you're going to notice right now that there are so many cryptocurrencies, okay? So global crypto market, as it says, it's $2.18 trillion. It is a lot of money. It is, okay? So what it tells you right now, that there are 405 registered listed exchanges. There are 11,552 cryptocurrencies listed. This is a lot. Okay, this is very lot. So Bitcoin and Ethereum, whenever Bitcoin, just pumps heavily throughout the quarter four, Ethereum mimics that. And then just like this milk spilled, across the table, the capital is absorbed by the other subsequent altcoins, pretty much like just down the list. Okay. And high returns that are known for crypto also come with the high risks. So it is a very important thing to understand that, just like, the article I gave for the Business Insider, where I literally revealed my personal, 10x, 100x peaks. That is, the firm network, just to take case in here, or the linear finance, okay, or the Starterra, okay, which is a great Polish project, or the Radix DLT XRD, okay, or the Synapse network. So these all are potential 10x, 100x period peaks for me personally. Whether I'm right or wrong, I'm going to pay the price for the risk. If I'm wrong, I'm going to lose money. If I'm right, I'm going to earn money on that. Okay. And what is more important is that these high peaks for the potential returns, they come with the high risks. Okay. So just take these alternative coins, and these DeFi aspects, the centralized finance projects that the firm network and the rest of the mentioned is, okay. There is also like NFTs. If you go and search on Twitter, you're going to literally have like so many NFTs, which are so irrational right now, okay. Like the market is full of, JPEGs, like literally funny pictures that, like the people are buying for some crazy money. In my opinion, some of this money is probably coming from the money laundering, just like it probably does, but it's not typical to crypto. The money laundering actually happens on the cash as well, right? So it's not only crypto. The argument that you often hear that, okay, you don't deal with crypto from usually coming from the banks, that's because that there's money defraudation. So guess what? There's biggest money depredations coming in cash as well, right? So this is completely invalid argument. But you see different like GIFs, like JPEGs, literally pictures that are worth millions and millions of dollars. And people tend to get aggressive whenever I say here for the price, and guess what I get? I get hate. I get very bad, death wishes in Twitter. Okay, I get, very aggressive response from people who claim otherwise, and they have to claim otherwise. They have to believe differently because they usually are overexposed. They have put too much money in something that they can afford to lose. Okay, so these NFTs, like for the non-fungible tokens, which is an amazing technology, okay, part of a decentralized blockchain like ecosystem, this has insanely beautiful and bright future. For now, it's taking the pictures. For now, it's just the pictures, because that's what is easy about it. But in future, you're going to be able to monetize and tokenize a real estate, for an example, or buy an island. Okay, and with that, you can have amazing, beautiful future where you can tokenize it and buy a piece of a land with your digital money, with Ethereum, with other cryptocurrencies. But then, with this high stage of irrationality, I believe that it has to collapse, and it has to collapse. And because of that, closing, with the main sort of like takeaways for everybody about the risk management, things that are keeping you safe, is that you Number one rule, you must not invest more than you can afford to lose. Okay, you have to diversify your investments as well. Okay, you should be getting the knowledge and gathering the knowledge on how to build a sustainable portfolio. Okay, everybody should have their own portfolio strategy. Okay, everybody has different lives, has different emotional baggages, responsibilities, has different stories, has different family connections, has different issues and stages of the life, and everybody should have their own personal strategy for the portfolio management. And with that said, do not invest more than you can afford to lose. There is this popular 2% risk that you can afford as well for a position, right? So that whenever you put money in a position, you have to make sure you do not lose more than 2 to 5% out of your entire capital. Because if you go all in at the very peak, usually because of lack of experience, then you watch it go 95% down. Crypto can go up 10x, 100x, but then it will go down by 95%. Okay, and I want to.
I think that's a great place to wrap it up, Adrian. That's really good advice. Anything that can go up 100% can also go down 100%. We all see about the winners, the people getting rich on Twitter. No one sees about the losers because they don't post about it. But Adrian Zadunchik, aka Birb Nest, Crypto Birb, joining us from committing to us from the side of the road in Poland. I know it's late. Adrian, thanks a lot for coming on today.
I appreciate it, and it was a pleasure. Happy to be here.
All right. Before I bring on our next speaker, I just want to take a second. Maybe because it's like the middle of the day. It's Wednesday. It's like the middle of the week. It was dark out where Adrian was just coming to us from. So I think I want to take a second and let's just stretch a little bit. Let's just shake it out. All right. Just shake it out. Here, I'm going to stand up. You can do some stretching. Okay. Just got to touch your toes. Okay. Let's all just stretch a little bit. Just stretch, all right? Let's wake up. Let's wake up. We are coming into the heart of today. Our next speaker, we're building on the theme of miners, right? We spoke to a couple miners earlier. We're bringing you more miners. Our next speaker is the CEO of a mining company that you all should have heard of, I would assume, frankly. Hut 8 Mining, ticker HUT on the NASDAQ. Jamie Leverton, there she is. Jamie, are you loose? Are you feeling awake?
I'm loose. I'm awake. It's
okay.
In Toronto.
Excellent. Thank you for coming on today. Guys, do we have Jamie's charts? Yes, we do. Let's get Jamie's charts on the screen. Jamie, I'm going to keep stretching, and the floor is yours.
Thank you, Spencer. It's great to be here. For those of you who are just getting introduced to us at Hut 8, I am Jamie Leverton. I took over as CEO here at Hut on the 1st of December last year. We are a publicly traded Bitcoin miner. All of our operations are located in Canada, so I'm coming to you from our headquarters in Toronto. We trade on the Toronto Stock Exchange as well as the NASDAQ. So I'll just take kind of 10 or 15 minutes and walk you through an overview of who we are, and then we'll have time for a little bit of Q&A. So if we can just go to the next slide, please. Disclaimers, of course, very important in an industry that's volatile, as we just heard from our last speaker. Next slide, please. So this is just a really quick snapshot. I mentioned we're headquartered in Toronto. We currently have 2 active mining sites, both located in the province of Alberta, which is within Canada. It's in the prairies. Our largest site is in Medicine Hat, where we have 67 megawatts actively in production. And then our second site is about a 2-hour drive away from Medicine Hat in Drumheller, Alberta, where we have 42 megawatts actively in production. So a total of 109 megawatts in production. And we are currently working on our third site, which will have approximately 100 megawatts at that site as well. So that'll bring our total power to 209 megawatts. We expect the first 35 megawatts of the new site to be live by the end of this calendar year. From a self-mining perspective, we currently have 1.37 exahash in production mining Bitcoin today. We also have a hosting component of our business where 13 of our megawatts are used to host 2 strategic clients. And then this year, we also started to put our Bitcoin balance to work. So we have the largest stack of self-mined Bitcoin of any publicly traded company in the world. The latest balance we announced was 4,242 Bitcoin, of which we use 1,000 Bitcoin to earn yield in through our relationship with Genesis, and then we have another 1,000 Bitcoin earning yield via a relationship with Galaxy. So not only do we have a large stack of Bitcoin, but we use a portion of that stack of Bitcoin to also earn revenue paid out currently at about a 4% rate of interest. So between the hosting line of business and the yield that we earn from our Bitcoin, it allows us to fund some of our self-mining operations and then, of course, stack more Bitcoin. The other thing that we have recently announced is we are beginning to mine Ethereum. So we entered into a strategic purchase of CMPs from NVIDIA, enterprise-grade chassis from Dell, and the team is very, very busy in the field right now in Medicine Hat, unloading those chassis, getting them plugged in and hashing. And we expect to have 1,600 gigahash up and hashing, mining Ethereum by the end of September. Although we will continue to settle even those GPU mining activities in Bitcoin as we continue to look for creative ways to grow that Bitcoin balance, which we believe in so strongly. So that is an overview of us by the numbers. You'll also see we've got some expectations laid out on where we are growing our exahash to. So we've ordered another exahash of equipment from MicroBT, which will deliver this fall. And so that'll bring our total of mining of Bitcoin between the exahash we use for Bitcoin mining and then converting the gigahash that we'll be using for Ethereum mining. That'll bring our total by the end of this calendar year, which is also our fiscal year, to between 2.7 and 3 exahash. And then we're looking to double that again in 2022. So very high level overview of who we are. Next slide, please. That's me. So I told you I joined the beginning of December after I have spent over 20 years in the more traditional technology space in Canada, working for a variety of tech companies that you probably know, including IBM, BlackBerry, Bell Canada, and then I've spent the last 4 years in the data center space with both Cogeco Peer 1 and eStructure data centers. And that's enough about me. Next slide, please. So this just talks about our growth through market cycles. So we were one of the first publicly traded miners to list originally on the Toronto Stock Exchange, the Venture Exchange, and then we graduated to the TSX last year. So this just shows how our power capacity has grown and continues to grow since we began, and then again our hash rate, how our hash rate has grown over the last number of years, and now adding gigahash as well as we look to create a bit of a diversification strategy so that we're not completely dependent on the economics involved in Bitcoin mining. We have the ability to offer some diversification, and that gives us some downside risk protection as these economics are quite volatile. We don't control all of the inputs. So by having a hosting side to our business, earning yield from the Bitcoin on our balance sheet, and being able to mine alternate blockchains using GPUs, it really gives us the ability to weather a variety of different market cycles. And we think that's certainly in our best interest and in the best interest of our investors. Next slide, please. And this just shows, based on the market conditions when we released this deck a couple of weeks ago, what we expect to be earning in Bitcoin per day based on the exahash and gigahash by the end of September. And then what we're looking forward to as that next exahash of equipment comes on by the end of Q4. Next slide, please. This talks about how much we love the province of Alberta, which is where our operations are located, as I mentioned, and where we will also build the third site. Alberta is well known within Canada for being our most energy-rich province, traditionally a very dominant player in the oil and gas space. The province of Alberta has been making incredibly significant investments as well into renewables. You can see some wind turbines in the background there of our site in Medicine Hat. They're building out massive solar farms within the province as well. So it's a great province or location from an energy perspective, but then it's also a fantastic climate. Alberta is very, very flat, as you can probably tell by the pictures. There's not a lot of humidity. Winters are very long, very cold. There's a lot of wind in the province, and that allows us to take advantage of free air cooling. So the environment does the work of cooling our equipment for us, meaning we don't have to spend extra power or extra money to cool the equipment. Our data centers are container based, as you can see in the photo, so we can actually open up the sides of the containers to allow that natural airflow to run through the containers and keep the miners nice and cool. And of course, they perform very, very well in this environment, which allows us to really maximize the productivity of the equipment. We're also unique in that we run our own facilities, so it's our own staff running these data centers 24 hours a day, 7 days a week, and we do our own on-site repair and maintenance of our equipment. Really, again, just looking to drive that maximum uptime of the miners in the field directly. Next slide, please. And again, we've been around since late 2017, early 2018, and so we have a long history of investing capital into our infrastructure, both from a power perspective, a data center or container perspective, as well as the mining equipment. So we have a fleet of equipment that we're constantly investing in. We brought new equipment from MicroBT in last June, and then again, we ordered more in January. We made the NVIDIA investment in the spring, and then we ordered another exahash from MicroBT just at the beginning of this summer, again, delivering in Q4 of this year. So we're constantly kind of making those investments on a regular basis. We also use one of the most conservative depreciation schedules in the industry. We use 2 years to depreciate our miners. So what that means is our older generation of mining equipment is still very actively in production. It's very, very profitable, and it's been fully depreciated. So we're able to really manage our balance sheet, manage our deployment of capital, and we think that gives us a great perspective as far as constantly investing in our fleet over time. Next slide, please. As we talked about, we are hodlers at heart. So we have been holding Bitcoin on our balance sheet really since we started. Originally, we would sell Bitcoin, as much Bitcoin as we needed to fund the operations of our business. Anything left over, we would keep on the balance sheet. And in the current environment, we actually haven't sold Bitcoin since early in January. We've been able to really grow that balance significantly during this calendar year, which we're incredibly proud of. And as I already mentioned, we have the most self-mined Bitcoin on our balance sheet of any publicly traded company, which of course means that Bitcoin got onto our balance sheet at a price point significantly below what you would pay in the retail market. Next slide, please. So our growth strategy, really quite straightforward. We are expanding our power, we're growing and optimizing the fleet. We are mining both Bitcoin and using GPUs to mine Ethereum, but as I mentioned, continuing to settle in Bitcoin as a long-term store of value. We are now able to generate a fiat revenue stream from the Bitcoin while we hold it on our balance sheet, really believing that over the long term, Bitcoin will continue to appreciate in value. And then we also have the hosting side of our business, which gives us a nice committed, stable cash flow as well. Next slide, please. So as I talked about, we are building out a third site. We're very, very pleased to have been able to negotiate an incredibly aggressive rate at 0.027 cents Canadian, plus or minus 10%, and that is an all-in rate. So we're incredibly excited to get that site built out. And as I mentioned, we do expect the first 35 megawatts to go live towards the end of this year. Next slide, please. So I think I've talked about this. I didn't mention our pool strategy. So we use a North American mining pool strategy. Foundry is our dominant mining pool for Bitcoin mining. And then we also are working with Luxor as our secondary Bitcoin pool. And that will be our primary pool used for mining Ethereum. I talked about the investment we've made in NVIDIA CMPs, specifically for that Ethereum mining purpose, and then our relationships with Genesis and Galaxy earning yield on the Bitcoin we hold on our balance sheet. And then our new site is very proudly being built with another great Canadian company, Validus Power, which we're excited to get up and running. Next slide, please. So this just shows the blue line represents our market cap as of the date we pulled this, and the orange line represents the Bitcoin on reserve. So really just showing our dominant position as far as Bitcoin held in reserve, and our market cap not quite reflective of that Bitcoin balance when you look at it in this view versus our peers and how they're holding Bitcoin on balance sheet. Next slide, please. And our management team. So I took over, as I mentioned, December 1st. Shane Downey is our new CFO who joined us beginning of March. Jason Zalewski joined as our head of technology beginning of February, as did Tanya Woods, our general counsel, EVP of regulatory affairs. Sue Ennis joined a couple of weeks after I did. Thank you again for that, Sue, to run investor relations and corporate development for us. And then in the March timeframe, we brought on Ronnie Yu to head up our power and sustainability for us. So we're incredibly excited by the team that we have around the table, and really look forward to continuing to drive a growth mandate. Next slide, please. This just goes into our financials a little bit. Next slide. All of this, of course, is available on our website, both the deck and more detailed information about our financials, which we released in Q2. We're very proud to put up our second consecutive record for highest revenue in our history in the second quarter. We continue to see growth from the ancillary lines of revenue that we have in our business, as I've spoken about, and really proud to continue to be able to grow that Bitcoin on our balance sheet, of course. Next slide, please. I'm not going to get into that. If you want to go into the details of our financials, please do look them up on our website or, of course, in SEDAR. And then we also include in our deck a little bit more about the economics of mining, a glossary of terms used in our space. For those of you that are new to the world of mining, please do check it out, as it can help bring you up to speed on how miners work, how miners make money, and the inputs that you can use to kind of look at our business holistically. And I will leave it at that from a presentation perspective. If there are any questions, please let me know. Of course, don't hesitate to reach out to us directly as well. I'm the only Jamie Leverton on LinkedIn or Twitter, so you can reach out to me directly, or Sue is always available as well as our head of investor relations.
Thank you so much, Jamie. We do have a lot of questions. Frankly, I'm hesitant to ask too many of them because you're staying on with us for our next panel. So let me just pick one arbitrarily.
All right.
Okay. How will Ethereum moving over to proof of stake affect your mining of ETH in the future? We'll stick with that.
Sure. So the mining with GPUs, Ethereum is currently the most profitable thing to mine using GPUs or CMPs, which are the cards we purchased from NVIDIA. But if/when Ethereum goes proof of stake, and I think we could have a lengthy debate about what that will ultimately look like, both from a timing perspective and some of the nuances involved in how that transition is going to take place. But if there is a hard fork and it goes proof of stake in the short term, we would just move to the next most profitable token or crypto to mine, which currently, or the last time we ran those numbers, was Ethereum Classic.
All right, it's great. We'll do one more. Jamie, what is your opinion on paying up 12 to 15% for 110? What is that? 110 TH units versus 80 TH units, or 110 units versus 80 TH? Sorry, I don't really. That question is too technical for my. I shouldn't have asked it if I didn't know what I was going to say. So KCCom, sorry, KCCom. Regardless,
reach out to us directly with your technical questions.
Jamie Leverton, don't go far. Don't go far. We're gonna have you back on in just 1 second. It is time for the moment of the day where yesterday I said this was the moment of the day that I am most excited for. Right? Justin and I were kind of previewing today's slate, and I said this is the panel that I cannot wait for. Our crypto mining panel. Jamie, who you just heard from, will of course be back, as I just mentioned. But we've got Fred Thiel, we've got Ben Gagnon, we've got Sheldon Bennett. And this panel will be moderated by our very own Catherine Ross. So Catherine, there she is. Hello, Catherine. I know it's late for you, so thank you so much for staying up late.
Oh, that's my favorite, time of the day, and I love moderating, so I'm here.
Okay.
How are you, by the way?
Doing great. I don't want to take up too much more time because this is a exciting thing. So let's have you introduce everyone. We'll bring them all on, and I'm going to get out of here.
Yeah, we're gonna do it a little bit differently. So first of all, thank you for watching, and we hope that you're enjoying the show. And I hope that this is very knowledgeable for you guys. And I have an amazing list of speakers and panelists, and here they are. They're gonna introduce themselves.
Oh.
Hi everyone. Hello. Okay, so we have a lot of discuss, right? So I'm just gonna, go ahead and ask you to introduce yourself. Let's start with Fred, because Jamie was just talking. So Fred.
Hi, I'm Fred Thiel. I'm the CEO of Marathon Digital Holdings.
Short, sweet. Sheldon.
Hi, yes, I'm Sheldon Bennett. I'm the CEO of DMG Blockchain Solutions.
Ben.
Hi, I'm Ben Gagnon. I am the Chief Mining Officer for Bitfarms.
That's a Chief Mining Officer. That's awesome. And Jamie.
Jamie Leverton, the CEO of High Mining.
Yeah, that was very short. I love it. So we're just going to, go ahead and discuss. With this panel, we decided kind of to dive into what crypto mining really is and how we can make money and what this thing is all about, because obviously crypto mining has been in headlines for a very long time. So we're going to start with obviously what is crypto mining and how exactly it works. And I think we have I think Sheldon wanted to discuss that.
Well, thank you. I think any of us could explain what crypto mining is and how it works, since we all do it. And in the past, I used to give conferences in person, and I would talk about what crypto mining is, and I would start talking about, cryptocurrency from, cryptography and integers and mathematics. And I would look up, 20 different people would be looking at me going, what is this about? I'm not at a university lecture on mathematics. So, the kind of simple way to say it is cryptocurrency or crypto mining is a process where we use a lot of compute power to solve a cryptographic puzzle. Turns around and it's what we call proof of work. It does work, and in solving that puzzle, we we've completed something, and at the end of it, a block is posted, cryptocurrency is minted or created to pay for that block or that work that's done, and transaction fees are included in there. And it's a really simplistic way of saying, miners, crypto blocks, transactions.
I'm sorry, I thought we lost you for a second there. Yeah, we lost you. You said in a simple way, and we lost you.
You see how boring it is explaining the mechanics of a cryptographic puzzle in a block? even the internet doesn't want to hear it. But let me say it a different way.
That is not.
Okay. Let me say it a different way. When you think about crypto mining, just think that a lot of power is used, a lot of math is used, right? And this is called proof of work. We're going to talk about that in another question. The proof of work is really replacing in a financial transaction. And so right now, when I want to do a transaction, it goes through a bank. I trust the bank's going to do what I say. I put $1 in to a bank. I trust that when I come back tomorrow, I can take $1 out. So a lot of people talk about crypto mining and cryptography and Bitcoin as an automation of trust. We trust the algorithms. We trust the technology is going to do something for us. And a simplistic method of thinking of this is crypto mining is really about automating trust. But in automating trust, we're using power of proof, right? So we're not doing this for nothing. And we're transacting back and forth with a little friction because there's little getting in between us with this proof of trust. And so I think about crypto mining. What is it? It's using technology to automate trust that was actually done by people in the past. So we're just embracing technology in a new way. So it's a simple way to think about it.
Very well put. Ben, could you walk us through the difference between Bitcoin mining, Ethereum mining, and any other crypto mining?
Sure. There's not too much difference between Ethereum proof of work mining and Bitcoin mining. Really, the only big difference right now is the hardware that you're using to do the actual mining operation and how the payments are calculated. Effectively, it's the same process that we're doing. We're both processing transactions. We're both securing the coins that are in people's wallets, whether they're Ethereum or Bitcoins. And then we're getting paid to secure that coin in people's wallets and getting paid to make those transactions safe and secure and make sure that those transactions are valid transactions. The only real difference does tend to be in the hardware and the rules regarding change. So with Bitcoin, what we have is a commoditized mining industry. The hardware has been commoditized. The price is very, very transparent and flows with market profitability and price. And because we know that there's not going to be any changes or any major changes to the protocol in the next 4, 8, 12, 16 going on, we know that the value of this equipment is going to track very, very predictably. The big difference is with Ethereum. Ethereum does have an agenda of changing quickly and rapidly through innovation over time. And so with that also does come changes to the underlying economics attached with Ethereum mining, and does attach some volatility to the actually mining hardware that you're using to conduct the Ethereum mining. Other than that, it's pretty straightforward. We have ASICs for Bitcoin. We also have ASICs for Ethereum, and we have other hardware that can run Ethereum too, like GPUs and FPGAs and other sorts of equipment. But essentially, it's the same hardware and it's very similar math.
Okay, thank you. Jamie, this is the question that Sheldon suggested you're going to answer, but this is
thanks, Sheldon.
You're in the prep call, but I'm interested in that as well, and hopefully the audience is also interested in that as well. How do miners make money?
Well, I actually think Sheldon and Ben both touched on it. You can almost think of miners as the Mint and the Visa MasterCard. So we process all of the transactions on the Bitcoin network, and we get paid a fee for processing those transactions. And then because we are the Mint, if you will, we bring new Bitcoin into existence through our mining activities, and we receive what's called a block reward in exchange for doing that work. And currently we receive, if we are to be the successful recipient of a block that pays out 6.25 Bitcoin. So over time, we know that the last Bitcoin will be mined in the year 2140. So it is pre-programmed. And between now and then, transaction fees will increase as a percentage of a miner's revenue over time, and the block rewards will decrease. So that for in the year 2141, a miner's revenue will all be from transaction fees.
Okay, Fred, could you talk a little bit about who is making more money right now and why? Is it Ethereum miners or Bitcoin miners, and why?
Well, let me start by saying we don't mine Ethereum, so I'm most probably not the most educated person regarding the economics of Ethereum mining. But when it comes to Bitcoin mining, it's obviously a huge industry. By the nature of the way proof of work operates, we as miners have to invest hundreds of millions of dollars in CapEx for mining equipment, infrastructure, and power to operate our mining operations that then validate all the transactions on the Bitcoin blockchain. And depending on the price of Bitcoin, the revenues, the daily revenues in Bitcoin mining can be between $30 and $60 million a day. What a lot of people don't realize who aren't in the industry is that there are a finite number of Bitcoin mined per day. It's 900 per day for now. At the next halvening, it'll be 450, and 4 years after that, it'll be 225, and so on. So the more people that come into the mining industry doesn't mean that there'll be more Bitcoin mined. It simply means there are more people all fighting for those 900 Bitcoin. And so with the drop off in mining in China, all of a sudden, those that remained mining had a greater share of those 900 Bitcoin a day. Now that miners are coming back online in Kazakhstan, and you're seeing more miners come online in the US, you're also seeing a lot of very large companies that are very well capitalized out of the power sector and other areas coming into mining. You'll see an explosion of Bitcoin mining hash capacity, which will essentially lower the revenues for every existing miner today unless they grow their capacity in the same direction. So for example, we're increasing our hash rate from 2 to 13 exahash over the course of the next 12 months. If it was a static market and you had the same amount of global hash rate going on, in theory, you could say we'll grow our revenue by 6 times as many Bitcoin as we're producing today. But we fully expect the global hash rate to be about 180% higher than where it is today by the end of next year. So it's not a linear kind of calculation for people. So making money in the Bitcoin mining world requires lots of capital. It requires being able to tie up power at the right prices, and then being able to continue to grow and have the capital to grow. And, it's a business where I think longer term, really the big, well-capitalized companies, either the power companies that move into the business or the large enterprise miners like ourselves, Riot, and others, are going to be really the only people who can afford to be in the business, because it's just the margins are going to get fairly compressed over time.
Okay, yeah, thank you. That is a little bit depressing, but that is true. Ben, could you? Yeah, I'm sorry. Someone.
I'm just going to add to what Fred said. Maybe another way to think about it is there's about 330,000 Bitcoins created in a year. If you just use a number like $50,000 of Bitcoin US, you have something like $16 billion of newly created or newly minted Bitcoin. And then if you look at the cost in general of a Bitcoin miner to create a Bitcoin, so the energy cost and operations, you probably have about $5 billion of cost to make $16 billion of new revenue or new capital into the industry. So Bitcoin miners are sitting on sort of $11 billion of capital that's coming to the Bitcoin miners, whether it's the public companies or the private companies, but in general as an industry. So when you think about this from like a potential being a shareholder of the industry, you have to think, if you take away the cost of creating a Bitcoin, you look.
We're losing you again.
How much is generated to this kind of $11 billion.
We lost you a little bit, but you're back.
Oh, I was just saying at the end of the day, about $11 billion after cost is created in Bitcoin companies, whether they're public or private.
Oh, okay. Ben, are you comfortable talking about Ethereum mining in terms of comparison of who made the most money and why in, let's say, August? You're muted. I think you're muted.
Sorry, comparing Ethereum and Bitcoin mining revenues for August?
Yeah.
I don't have the numbers off the top of my head or in front of me right now, but I'm fairly confident that Bitcoin mining produced significantly more amounts of revenue than Ethereum mining. This should have always been the case and should always be the case as we move forward. One thing I think that is lost upon people as we do have halvings occur and as the amounts of total Bitcoins that we're mining do reduce over time, this is largely offset by the exponential increases in underlying Bitcoin price. And so while we are seeing smaller amounts of Bitcoin in terms of revenue derived in Bitcoin, if you're looking at revenue derived in US dollars or RMB or yen or whatever currency you're using, those are continuing to increase over time and will continue to go even further still as we move over towards $100,000 Bitcoin and beyond. So that's a really, really positive part about this market. We have fixed operational costs as miners. It does not cost us any more to operate, 2 exahash or 1 exahash at 30,000 Bitcoin than it does at 50,000 or $100,000 Bitcoin. The only difference is our gross mining margins and our profitability. That's the only difference. And so as Bitcoin price continues to appreciate, we have that fixed cost. It's all upside for miners. And mining today is a significantly more profitable business than it was, 8 years ago, back when the block reward was still, 25 Bitcoin. This is a very, very good time to be in the industry. And as we have the institutional adoption into Bitcoin, I think what we're also seeing is institutional adoption into Bitcoin miners specifically, because mining is one of the best ways that you can actually turn your Bitcoin investment into more Bitcoin. And it's the reason why is because our revenues are derived in Bitcoin. We're one of the only industries in the world where our revenues are 100% derived in Bitcoin. And as we chase this inflation rabbit, all other businesses whose revenues are derived in USD, they're going to have trouble keeping pace with trying to preserve their purchasing power in a rapidly inflating environment if their revenues are based in that inflationary asset. For us, with our revenues based in Bitcoin, as inflation continues to take place, all that inflation automatically applies itself to greater profitability on the Bitcoin miners. It starts working into our power purchases, where our power contracts now cost less because the dollar is worth less. And it starts automatically feeding all that profitability over to us, both in our fixed operating costs being reduced in terms of a purchasing power, valuation, as well as that increase in the value of the underlying asset as well. So Bitcoin mining is, I'm sure, much more profitable than Ethereum mining now, and will continue to be for the foreseeable future.
Fair enough. I haven't found, actually, unfortunately, I haven't found any information on Bitcoin mining for August, but I guess this is because we are just in September, on the very first day of September. But I did find information about Ethereum, and Ethereum mining revenue figure for August actually is accounted for $1.65 billion. $1 billion, and it represents the growth up by 60% compared to July. And you know why? Do you have guys any idea why that happened? Because even though we had Ethereum London hard fork, right, and the transaction fees were supposed to go lower, but do you have any idea why that happened? Why the revenues still grew? I think you probably know the answer, but it's
mostly just underlying price of Ethereum. it's the only thing that's driving those revenue figures. So correct. People are speculating on the London hard fork and what can happen with Ethereum POS and 2.0. This is something that I think people are overestimating. It's something that's been promised by the Ethereum Foundation for 5 years, that it's months away. It is not months away. It's never been months away, and it's going to be continuously kicked down the road for years, because there is an incentive by the Ethereum Foundation to continuously delay. If they ever reach Ethereum POS 2.0, and it's not everything that everybody has always dreamed it to be for the last 5 years, the valuation will fall to zero quite instantly. And so the incentive is going to be to protect the underlying investments that's already been made into Ethereum by kicking the can down the road and continuously delaying. I don't think Ethereum mining will stop anytime soon. And the more that they can hype the the future promises of Ethereum, the better Ethereum mining revenues will be as well. But this is something that's going to continue a long time, and it's a game that they've played for 5 years.
Jamie, you look like you wanted to say something.
No, I was just going to add, I mean, Ethereum's having an incredible day today. Like we're seeing price appreciation in Ethereum just on the day, far exceeding what Bitcoin is doing. And we're seeing that more and more regularly, where Ethereum is kind of diverging from Bitcoin performance and increasingly having these days of outperformance, which of course directly goes to the profitability of Ethereum miners. Mining Ethereum also uses significantly less power. So the operating expenses involved in mining Ethereum are significantly less than those for mining Bitcoin, which speaks to the underlying profitability of the activity itself. And I was nodding along with Ben because I absolutely couldn't agree more that proof of stake is going to continue to get kicked down the road, which is great for Ethereum miners for sure.
So I'm gonna just give you the answer, guys. The fact that Ethereum mining revenue went up compared to July is because of the huge interest in NFTs. I'm sorry to say that, but this is obviously Ethereum price, but at the same time the NFT craze. So this is something that influenced the price, the revenue a lot. So the next question is something that I expect we're going to be talking for a while. Is Bitcoin Mining Council, right? So back, I think that was May, back in May, when the one and only Elon Musk decided to stop accepting Bitcoin for Tesla vehicles because he said that Bitcoin mining, hurts the environment in just an imaginable, in a bad way, in a really bad way. So this kind of started the conversation of the crypto mining and the environment, right? And right after that, here it is, North American Bitcoin Mining Council. And fortunately, we have representatives of this council here today. So I don't think there's any order. So just whenever, or whoever would like to speak first. So tell us about the concept of council. Why in the first place that happened, and this particular council was created. So as to why.
So I can start. Oh no.
Go ahead, Jamie. No, go ahead.
Thanks, Fred. Really, the core principle behind the council, and it's not just a North American council, it is a global industry-wide council. It's open to any Bitcoin miner. And we've had really great participation coming from around the globe, which is amazing to see in such a short period of time. But really, the purpose of the council, and we declare it on the website, was to come together and have a collective voice to educate, to be transparent, to talk about the benefits of Bitcoin and Bitcoin mining, really as a collective. Because prior to that, we were each trying to counteract this narrative as individual entities, and we didn't have a collective voice to challenge this big collective kind of negative narrative that came out on the back of Elon's tweet. So really, that was the purpose of forming the council.
I was listening to one of the conversation on Twitter's that I think was led by Michael Saylor. And I love the idea that someone actually said it out loud. Instead of doing this as competitors, right, and competing with each other, it's actually a great, as you said, a collective, right, a great way to come together and to decide what's best for everyone. And that's just going to make the industry better. So yeah, that is actually pretty crazy if you think about it, that everybody comes together and work like that. So
Catherine, I would just like to jump in there. We're not, as a council, we're not collectively deciding on any sorts of actions at all. I mean, all we are is putting out information in a transparent and clear manner. And I think there is an important call to do that, because what we've seen against Bitcoin time and time again, and I think the ESG narrative is just the latest attempt to throw FUD and to throw some misinformation at Bitcoin to try and drive the price lower. We have seen organized disinformation campaigns against Bitcoin, and we're not going to compete against organized disinformation if we're not organized. So what we really need to do is we need to counter that organized disinformation campaign with an organized informational campaign. And I think that's here what the council is doing. We're collecting this information, we're calculating it, we're producing reports, and we're providing transparency to the industry so that people can clearly see that we're not causing the harm that these articles and these journalists are, claiming with hysterical articles that we're doing. None of the data is agreeing with them. And many of the sources that they're using as a basis for those articles, digeconomists primarily, the math is incredibly bad, and it does not track real world events. When the China mining ban happened, the digeconomist index, which is the premier index for tracking electricity consumption and pollution, remained flat at all-time highs as the network curtailed 50%. His estimates stayed at 100% the same, and they flatlined there for a little while. And if you go back on digeconomist today, we're at all-time highs today, despite being at significantly lower levels of network participation than we were just several months ago. And because of demand, we're actually using much more energy efficient machines, prioritizing the energy efficiency over the older stuff. So the underlying data is awful and couldn't be more wrong, and has been proven wrong time and time again with these results. So we need very organized campaigns against this disinformation.
Well, yeah, thank you for clarifying that. That is very important actually to know. What is what kind of power, alternative power, is used the most when it comes to alternative sources of energy for crypto mining? I think you've mentioned that, or not yet.
Well, there's
I think
clearly an even fairly good mix of wind.
I'm sorry,
solar,
Fred.
hydro.
You're breaking up a little bit. Sorry, you're breaking
Sorry,
up.
I think there's a. Yeah, unfortunately, I think I'm having a bandwidth issue.
Yeah. I'll jump in for Fred since he's having
power
connection
mixes.
issues.
Yeah, please go ahead, Ben.
I mean, the power mix is pretty well distributed. I think pretty much every energy source on the planet does have some Bitcoin mining component attached with it, whether that's nuclear, hydro, gas, coal, wind, geothermal. I think every power source on the planet is represented pretty well. The real thing is not really about the power source, but it's about the economics attached to that power source, which has led to a lot of hydro because there's very little operating expense attached with hydropower, as well as a lot of flare gas and wasted natural gas, because that is a huge component of the North American energy mix. But they're all very well represented.
Yeah, I think adding to what Ben said, probably hydro is where a lot of Bitcoin miners are going. And it makes sense. And I think we've all spoke about this before. When you look at hydro, just look at aluminium. When you look at the amount of power that's needed to create aluminium or aluminum, depending on where you are saying it, it takes a massive amount of power to transform bauxite to power to cut your costs. The cheapest is hydro. So I think that's where we're going to go.
Yeah. Okay, that was good. We lost you just for a second, but you're back. Okay, so I think the final question about the council is, what should we expect? And I think Ben actually put it very well, that the main idea is to provide information and to make sure that this is correct, accurate information, right? But is there anything else we, as just observers of the crypto industry, or investors and or traders, should expect from the council? And can we be a part of that too, or should we be a part of that?
Well,
Jamie,
the council's. Sorry, go ahead.
Oh, no, Fred, go ahead. I'll ask Jamie a little bit later.
Just going to say that the council's mission, as Ben said, is to educate and share information. That's the extent of it. So we're just a group of miners who are publishing our data and trying to educate the marketplace regarding the types of power we use and what our objectives are, or our goals and commitments are going forward. That's it. So, that's public information. It's not a decision-making body. It's not a lobbying body. It's simply a group of industry players who are deciding to share information because we're trying to combat, as Ben very eloquently said, the FUD that exists out there, especially in regards to energy. So it's just, we'll be publishing data each quarter. on how we're progressing along our shift towards more and more renewable energy. The data we've published to date says that we're about 65% carbon neutral in our energy mix and continuing to grow. And I think, it's a group of people who really just want to educate. So I think if investors are interested in learning more, go to the website, see the reports we publish, but it's not like we're going to be holding meetings or conferences to debate topics. We'll continue to do quarterly, Twitter Spaces events where we share our data and bring on some experts to help educate the public. And those are great for people to attend.
I hope that Jamie did not get upset because we lost her for a second there. Hopefully she'll come back. But let's talk about exodus of miners from China. Oh, hi, Jamie. I was worried that you got upset.
No, that was not a protest vote. That was I needed power desperately. My apologies.
Okay, whew, that's okay. So yeah, the next question is the exodus of miners from China. Sheldon, could you tell us about why do you think that happened? Why would China need to ban miners in the first place? And then how that impacted the rest of it?
Yeah, I'm not the best at government policy in China, but
conspiracy theorist. I need conspiracy
there's a lot of different theories. One of the most common would be that China has its own digital currency that it wants to support, and probably wants Chinese patrons to work within the confines of their own digital currency. The other is maybe they're reacting to international pressure about the amount of coal being used, and there's a lot of talk about coal being used by Chinese miners, although there's a lot of them that use hydro as well. So there's a lot of disinformation, or at least not very much data on what's correct there. But at the end of the day, a decision was made. It's being pushed through or enforced. I don't know what word you want to use. And you're seeing this exodus of miners out of China into other jurisdictions, North America being a big one, Canada and the US, but you also see it in Russia, Kazakhstan's another big one, parts of South America, just jurisdictions that are open and welcome to miners coming into their jurisdictions and operating. For North America, I think everybody will agree on this panel, but I could be wrong. I think this is a good thing. And I've said this a few times. When you look at the hash rate and you look at the use of Bitcoin, you find this disproportionate amount of hash rate being controlled or built or run or managed by Chinese miners versus the amount of transactions, how much they actually use Bitcoin. And that's because it's been banned in China for usage. And so I think it's a great thing that the hash rate that, is the infrastructure of Bitcoin and the uses of Bitcoin, which is happening in more Western countries, not all, but in general, we're using a lot of it, has come together into, countries that are creating the hashing or, providing the infrastructure and using the Bitcoin.
Jamie, I know Sheldon touched a little bit on that, but how do you think this particular ban of mining in China is going to reshape the entire industry? Are we going to see bigger players, including like international players that Sheldon mentioned, or what kind of influence it's going to have, or already having on the industry?
I think the biggest impact we already saw in the dropping of the hash rate by 50%, and the rest of us obviously have benefit from that. But I think broadly, it's good for the industry. I mean, Bitcoin lost half its hash rate and didn't flinch, so it speaks to the resiliency of the network. It just continued to operate as planned. And I think the decentralization is good. To Sheldon's point, we probably had an over-concentration of hash rate in China. And so getting it more broadly distributed globally is again, a good thing for Bitcoin overall.
And I think sorry, go on, Fred.
Just to comment on what Sheldon said and Jamie said, I think China's objectives here had more to do with foreign exchange controls than anything else. China today, if you read what's happening in the papers, kids are only allowed to play video games 3 hours a week. Industries are being directed to redirect where they contribute their profits. The for-profit education industry has been shut down in China. People aren't allowed to make a profit in educating kids because they want to equalize the abilities for children in the countryside to have the same benefits and rights and privileges and opportunities as the kids in the cities. And so they're trying to create more of an even society using central control to do that. And one of the key issues that China had was currency control. There was so much money leaving the country via Bitcoin that they first stopped the trade in Bitcoin. And then, of course, if you're mining Bitcoin, you're earning Bitcoin, people can buy that Bitcoin from you and then move their funds offshore. So the prohibition of mining of Bitcoin had more to do with currency control than anything else in China. It happened to be convenient that it also allowed them to say they're shutting it down for a smaller carbon footprint for the country, but really it was about currency control. And that's one of the reasons why, as you look at the shift of all that hash rate internationally, you know, the US today is still less than 20% of the global hash rate. And yet you have most probably over 50 or 60 exahash coming online in this country over the next 12 months. And it will still be under 20% of the global hash rate, most probably even then. So that shows the fabulous nature of how Bitcoin operates. It is a distributed network. No one country or even group of countries can control it. And it really will operate even with somebody who nearly had 50% of the global hash rate tried to shut it down. So I think that really speaks to the strength of the Bitcoin network, both technologically and also from the industry participants.
Thank you for that insight. Yeah, that was actually a very, very well put thought. And I think this is going to be our last question. Supply chain issues and, what kind of issues crypto miners experience, because there are a lot of equipment involved. I think this was something that Sheldon was very worried about, but I'd like to start with Ben because, yeah, he's been silent for a while now. So can we talk a little bit about supply chain, how reliable it is in terms of equipment, and how should the supply chain be distributed? Are there supposed to be like local players to make sure that there's necessary equipment involved? I think you're muted, or maybe just quiet. Very quiet. Probably something with the sound. Maybe, yeah. No, we can't unfortunately hear you. I'll ask Sheldon meanwhile. Okay, I'll come back to you.
Yeah, we'll give Ben a chance. You can butt in anytime you want, Ben. your audio working. But the supply chain is an issue, and again, it's an issue for crypto miners because we need chips. I mean, chips are the biggest part of our industry to build new servers and efficient servers. But we also have the issue of COVID, and we have all the global issues of supply in trade, sort of geopolitical between China and other countries. And I'm in Canada, and we have our issues with China, and other people in the US, and they have their issues with China. And that's where our production comes from, mainly China, Taiwan, but the companies that own it, Bitmain, MicroBT, Gagnon are mainly Chinese companies, and they sort of control the manufacturing of Bitcoin mining equipment. So you have, one issue is what's happening in the supply chain, i.e. raw materials to make chips. And it's not just us. You saw, things about GM and Ford talking about having chips to make cars. Our chips are different, but there's a supply chain issue. And then two, you have companies, and Ben alluded on this earlier, that price the equipment based on how they see the revenue of that equipment being. And so you have this surge in price because the amount of money that can be made with Bitcoin mining equipment has surged as well. So you've got sort of two different things going on here. So you have difficulty making the amount of volume that's being demanded from market players that want to buy it. So that's a raw materials issue. And then you have this escalating price of Bitcoin that's increasing the price of the equipment. And then you have us companies, private or public, trying to figure out how to order and purchase and get the stuff running to get our ROI, or return on our investment for this equipment.
Yeah, I would take a slightly controversial perspective on that. I think actually there's a glut of hardware today. The shortage is transformers, switch gear, hosting capacity, and power. As an example, we have hundreds of thousands of miners coming inbound, and luckily we tied up capacity for hosting long ago. So we don't have a challenge there. But if you look at the Chinese miners trying to come into North America, they're out negotiating for power contracts and infrastructure and transformers, high voltage transformers are 14-month lead time. Mid voltage transformers, 12 to 10-month lead times. Switch gear, 12 to 18-week lead times. Those are much greater issues today than the hardware issues are, because everybody's trying to come in and build infrastructure. And a lot of those transformers actually are manufactured in China as well. And to Sheldon's comment about COVID and supply chain, that's affecting it. But as we look at the marketplace today, the single biggest impediment to people deploying miners is not miners; it's everything else.
That's a good point, Fred. I mean, it's true. Everything's affected. The price of copper has gone through the roof.
Yep.
And so, what you're talking about also brings the migration, right? The infrastructure there has been turned off, and that infrastructure is not, I guess, for technical words, certified. It's not approved to be used in North America or other jurisdictions. So you can't pick up a transformer from China that was working and bring it to Canada or the US and drop it in and use it.
Right.
So that has to be manufactured. So part of this migration problem is an infrastructure problem to turn all that stuff on if it's coming into North America.
I think we don't have time, and probably Spencer is going to come just in a second. Hopefully, Spencer.
Damn right I am, Catherine. Damn right I am.
Hello, Spencer. So, first of all, thank you guys so much for taking the time and participating in this panel. That was very valuable for me, and I hope our viewers also enjoyed that. Spencer, would you like to say something?
Yeah, no, just thanks to Ben, Jamie, Fred, Sheldon, Catherine. I mean, how many times do you get a group like this on the screen at the same time? So thank you guys so much for the conversation. We appreciate it. I know our chat, our viewers, they appreciate it. So again, thank you. Thank you all so much.
Very welcome. Thank you.
Thanks for having us.
Thank you.
All right. It's 3:30, everyone. So again, thanks to that panel. Seriously, I mean, I'll just say it again. But how often do you see a group like that, executives from four of the largest, frankly, Bitcoin miners, crypto miners, on the screen at the same time? You don't see very often. You might see one, maybe two, four. Let's go, guys. Smash that like button. I haven't been too active on the on the liking call to action here today. Let me just do a quick check. How many likes are we at? I don't know if I have not been super diligent on that. We are at 302. Oh, we're trending lower than we were yesterday. We're trending lower than yesterday. Let's get the pace up a little bit. Get that pace up. All right, that's enough of that. That's enough of this. Enough of thank you, Aaron. Our next speakers here, I think they are. I see Max, and I see Brendan. So, okay, guys, when blockchain technology was introduced so many years ago, of the many theoretical uses that were hypothesized, one of those uses was finally a way for individuals in the creator economy to monetize themselves. If you've built a following on social media, that's great. There are some avenues available to monetization. You can have a newsletter, you can have a Substack, a Patreon. But frankly, the monetization infrastructure, particularly within the social media landscape or ecosystem, is not really there. This company that we're bringing on right now is trying to change that. We're bringing on Brandon Hampton and Maxwell Gross, the head of talent and the COO, respectively, of Superbid. There they are. Brandon and Max, how are we doing today?
We're great, Spencer. How are you?
Was my assessment of what you're trying to do correct?
Yeah, actually, we could probably leave right now. You already hyped us up enough.
Okay. All right. Thanks to Brandon and Max for coming on today. No, seriously. All right. We have your slides. Guys, let's bring the slides up, and I'm going to step out, and I'll let you guys do your thing.
Awesome. Thanks so much, Spencer. First of all, I want to say that we're super, super happy to be back here at Benzinga. 2 months ago, actually, we were live with Robert and Ryan and Logan on Moon or Bust, and we had a super fun time chatting with them there. So thank you guys for having us back. We're big fans of Benzinga. We actually love what you're doing to bring crypto into the mainstream. So now, let's get started. My name is Max. I am the COO of Superbid. Actually, I graduated from the University of Michigan Engineering School and worked in the aerospace industry for several years at Boeing Defense before I decided to pursue opportunities in the cryptocurrency space. I'm here with our head of talent, Brandon Hampton. Brandon, why don't you share some info about your background?
Sure, thank you. I did not work at Boeing. I actually have been in the influencer marketing space, which was alluded to about helping people, namely creators, native social media influencers, celebrities, artists, athletes, monetize. I was rated #1 by Forbes magazine as one of the most engaged brands on Twitter back in the day. I went on to build a network of over 36 million followers across all of social media. I've spent over $50 million on influencer marketing for influencers and brands to connect with each other. I have some of the most famous brands and famous clients in the world that I've done business with. And this next step here, I've been in crypto since 2013, merging the two worlds together as one of the very first influencers myself, understanding what an influencer needs and what tools that they need to be able to monetize, taking advantage now of blockchain and NFTs as a way to monetize.
Yeah, so you all might be wondering why we even have a head of talent over at a cryptocurrency company. But as Spencer mentioned previously, we are a social media platform, and we're going to be getting into those details further on in the slides. But today, overall, we're going to be talking about 5 main things. We'll cover all of the details about our concept, and we'll describe how it actually works. I'll present our proof of concept and actually past data, which validates our product. I'll also run you through a little bit of our journey as a company, and we'll review some of our past successes. We'll also take a look at the benefits of Superbid for both vendors, who are the creators on our platform, and then users, and how we actually set ourselves apart. And then finally, we'll take a look at some never before seen photos of the actual product that we've built itself and what to expect for our big launch, which is occurring this month. So if you want to jump to the next slide, I think that we can start here by basically explaining what is Superbid. It's quite simple. We are actually the first of its kind NFT platform, which allows users to actually take the most unique moments of their lives, convert them into NFTs, and then auction them off on our platform. Superbid enables you to create, to buy, to collect, and sell these moments, which are actually in the form of photos and videos, as NFTs. Now, unlike a normal NFT platform, Superbid's actually catering to the mainstream, allowing users and creators to build their own profiles, not only build up their brand, but also to acquire real life moments from real people, which is where we as a company actually see the true value of NFTs progressing into the future. For our launch, we're mainly focusing on selling NFTs from celebrities with the goal of selling only the highest quality NFTs, attracting the mainstream, and subsequently encouraging organic growth of creators to come to the platform in the future, who will eventually be able to freely create profiles and freely run auctions for their moments at will. Now, I keep referring to these moments, these sellable moments, and you might be wondering what these actually are in the context of Superbid. A moment is actually a never before seen photo or video from your own photo gallery, a unique memory which hasn't been seen to the public, which can actually be converted to an NFT and then sold by you, by the creator. What's more, as I mentioned, is that we're actually launching this whole concept this month. And for users, you'll be able to acquire these NFTs, and then celebrities will actually be able to take part in scrolling through their photo galleries, picking the best ones that they've never shared before, and then going on Superbid and auctioning them off there. What's really unique about this is if you take a step back and think how creators are actually monetizing their lifestyles is typically through your standard social media platforms like TikTok and Instagram. Now, instead of relying simply on ad revenue for the content that you create, before making that post on Instagram, you can actually come to Superbid. You can take your photo, you can take your video, you can post it on Superbid, convert it to an NFT, and then instantly monetize that content. So it's a super cool concept, which has never been done before. We're kind of taking advantage not only of the influencer market, but also the NFT market, bridging those worlds to create this super simple, efficient product. If you jump to the next slide, I'll just give you a quick rundown on how it actually works. The process of participating is also extremely simple. So for a creator, you'll simply enter our app, you'll create an account, you'll upload your photos and videos just like you would on Instagram, as I mentioned, and our platform will automatically convert those photos and videos into NFTs once they're auctioned off. And then when the auction closes out, you're paid out in cash. And then whatever you've generated appears in your own wallet on the blockchain. Now, the Superbid token, which is currently available on the market, is something that you can not only buy, but it's something that fuels the entire ecosystem, the entire transactional system of payments within the app. Jumping on to the next slide, I'm going to explain to you why we're pursuing the NFT space even to start. For starters, the proof of concept for our product has already been validated through a well-known NFT platform, which is called NBA Top Shot. NBA Top Shot actually sold over $675 million of NFTs in less than a year. These NFTs were mainly focused on specific moments from basketball games, from basketball players, and we're kind of taking this concept and bringing it to the next level, allowing people not only to build their brand, like I mentioned, through creating their own profiles on Superbid as a social platform, but also taking any moments from their life, anything and everything, and being able to sell it on Superbid. Not just something that's related to your career, but it can be something that is memorable and important in your life. So, some of the examples that I like to give are for a musician, for example. If you're looking to monetize your content through Superbid, you could take photos and videos from a backstage concert, which have never actually been seen before by the public, and you can convert them to NFTs and sell them on Superbid. You can take videos from a backstage studio session, which have never been seen before. You can take those videos, sell them on Superbid. You can even take an image of lyrics that you created, convert that to an NFT, and then sell it on Superbid. For an athlete, you can take footage of a locker room after winning a game and sell it on Superbid. You can take footage of your coach giving you a hype speech before a game. You can even record yourself after scoring a touchdown and then convert that to an NFT and auction it on Superbid. For actors, you can take footage and photos from a behind the scenes set that hasn't been seen before by the public and just give people a little snippet of your personal life. It can be anything. So moving on to the next slide, beyond the proof of concept, the evidence of the market growing is very clear. Now, we are approaching this from two angles, taking advantage not only of this NFT market, but also of the expected growth of influencer-related marketing over time. Superbid is probably the newest breakthrough entry in the growing NFT market, which actually grew in valuation from $250 million in 2020 to over 2.5 billion in 2021, and the year isn't even over yet. Now, the demand for items from celebrities also is there, which is not only evident through the previous sales from celebrities, which were described on the previous slide. Grimes and Steve Aoki and Eminem, these guys have sold their NFTs for millions of dollars. But also, the demand is there due to the simple fact that out of all participants in the NFT marketplace currently, 69% of those people are buyers and 31% are sellers. So there's a large market gap there, which we're looking to fill. Next slide. Now, before jumping in and explaining the benefits of Superbid for users and creators, I actually wanted to take a second to acknowledge the beautiful image that you see in the background of this slide. This image was actually taken in June when we launched a promotion in Times Square on one of the world's largest billboards. So around this time period, you may have potentially heard about us because we sponsored Logan Paul, one of the world's largest and most influential influencers on social media, in his fight against Floyd Mayweather. And subsequently, we officially partnered with him, and he's going to be doing auctions on our platform. Now, since that time period, since we actually started, we've garnered several other partnerships from people like Amanda Cerny and Natalia Janoszek, who's actually a Polish actress that garnered worldwide recognition thanks to her role in 365 Days, which was one of the most world's watched Netflix movies in 2021. Now, we cannot mention any other names, but there will be numerous other household names coming soon to Superbid, which we'll eventually introduce to the mainstream over time. We even went as far as partnering with a NASA contractor named Astrobotic to literally take our tokens, put them on a ledger, and send them to the moon. You might think that this is crazy, and it is kind of crazy, but it just goes to show that as a startup, we're not afraid of doing things that have never been done before. We're not afraid of being noticed, and we're not afraid to be launching these mainstream activations to garner attention around our product, especially as we near it in the coming weeks. So I'm actually going to let Brandon take over from here and describe the benefits. He's also going to be running through just some images that haven't been seen before by the public of the app itself, and then we're going to talk about what to expect for our launch.
Sure. Thank you, Max. Great job. So you can actually go back one slide before we get to those. So one thing that's important is we have additional components of things. If you realize this for a second, there is no place for a celebrity or influencer to sell items on the internet. Crazy and preposterous that that's true, but if you are one of the talent that we have signed, you're not going to go sell your product on eBay because it's not going to get proper recognition. You're not selling your old items on Poshmark. You're not going to StockX or GOAT. What you need is a dedicated platform that allows you to sell items. Now, when we realized that this was the case, we thought, what were the opportunities? Well, there's NFTs, so you have your digital assets. You have physical goods, so think about a soccer player selling an autographed soccer ball, or you think about a big shoe collector selling a one-of-one pair and auctioning them off. Influencers, celebrities, athletes, artists, lifestyle bloggers, there's no place for them to do that. So we created this marketplace. Now, the core of every product is going to be the core of every product is going to be an NFT. So everything has a digital ownership aspect component to this. So if you're buying a autographed football from an NFL player, you're purchasing an NFT and it comes with this physical item as unlockable content. If you're purchasing, which we will sell on our site, meet and greet with celebrities and influencers, you're purchasing an NFT ticket that will allow you entry into this event. So you're not only going to be able to buy digital assets, but you're going to be able to buy physical goods and real life experiences that are tied to digital ownership so that they can be memorialized and authenticated. Next slide. These are the first look slide at our platform. If you recognize the one on the left probably looks a lot like Instagram and it looks like a lot like TikTok. We wanted the content and the way that it's positioned to be familiar. We wanted people's profiles to look exactly as they do on other platforms, but with the functionalities that we have, which are very different. On the right side, you'll see one, it looks exactly like OpenSea might look. You have your digital asset, your creator, the name of the asset, the bidding history, and of course, things like rarity score and otherwise. And then the last component is the way that we sort of explain this is you're looking at an Instagram feed that has OpenSea-like technology that also allows you to engage and purchase content like you would on a platform like OnlyFans. Now, what we're doing is we're sort of meshing these three together, and the mass market opportunity here is allowing influencers to create content to control their own destiny with how they monetize. Right now, they're waiting for the next brand deal. Influencers, celebrities, they don't get big salaries and have all this money waiting for them all the time. They don't get to work extra hours and get extra brand deals. They're sort of at the mercy of others. This creates an independent revenue stream where they do what they do best, which is creating valuable content, and they can sell it. People can sell 50 copies of a photo. They can sell 25 copies or 3 copies of a video, or a more expensive one-on-one NFT can be owned by a person who's able to then redeem that for a physical good or an in-person experience. Next slide, please. With our celebrity partners, we're going to be able to reach over 100 million sets of eyeballs just from the beginning. We have an existing community between Telegram, Twitter, Instagram, of over 20,000 people. We have over 7,000 token holders that have sort of organically found out about us. We have not started, really other than Times Square and the Logan Paul and Floyd Mayweather fight, really dabbled into any marketing. We've sort of been building the organic community, building the infrastructure, building the technology, and it's ready. We're launching this month, and people will have the opportunity to come on board and purchase moments from their favorite creators, and they will be able to own these as digital assets. And now one other thing that I'll mention, and it kind of dabbles into something that we're not supposed to talk about, but I'll talk about it a little bit. because I can't resist, and I think it's a massive add value. The difference between something like this and the difference between the other platforms that exist for NFTs is that you have to be a crypto purist, and you really have to understand blockchain and the technologies around blockchain in order to go on and actually purchase a digital asset. So you knowingly are purchasing an NFT. You know that you're purchasing a digital asset. But on our platform, you might not know the difference. So just as there's a Binance, difficulty level for an exchange, for example, and then you have Coinbase, who's more user-friendly, mass market. You have TD Ameritrade, who is a little more complex for sophisticated investors. And then you have something like Robinhood. Well, now you have platforms like OpenSea and Rarible for the sophisticated crypto investor. For the mass market, you have our platform. There will be crypto capabilities, but we'll also have fiat on-ramps so that people can come on using dollars and purchase NFT moments on our platform.
Thank you so much, Brandon. That's perfect. If you guys have any questions, you can always reach out to me. I dropped my email there. You can also follow us on Twitter for any of the most recent updates coming up in the future. And if you do have Telegram, this is the place where we're typically answering most questions from community members. So you're welcome to join there. All of the information is found on our website. Last thing before we go, for people in the chat that are from Superbid watching right now, can we see some emojis? Can we see some Superbid likes? Let's see it, guys.
Right on. Superbid.io. Find our Telegram, Twitter, Instagram. Follow along because we have a lot of cool stuff dropping.
Awesome, guys. Thank you so much, Max, Brendan. I'm seeing some emojis in the chat. A lot of enthusiasm here. Super exciting space. We are in like the top of the first inning of this stuff. We got a long ways to go. Very exciting stuff, guys. Thanks so much for coming on today.
Thanks, Spencer.
Thanks, sir. Appreciate you.
All right. I do want to take a quick second if I have time. Actually, I don't know if I have time. Nah, I'll wait. Our next speakers are already here. And what we have coming up next is an exclusive conversation with eToro. And the person asking the questions needs no introduction.
Hey. Yes, he does. He always needs introduction.
He does?
I'm Jason Raznick, the guy you just cut from your show on Fridays. I looked for your calendar invite to show the team how you do calendar invites, and it wasn't there. So I had to go backwards.
Yeah. I opted. Google gives you the option not to alert people when you cancel a calendar invite, and I opted not to alert you about that. So,
oh, you should have alerted me. Why didn't you alert me?
Because I didn't want to have this conversation right now.
Why? Why do you want? We have an amazing guest coming up, Yoni, the CEO of eToro, but he's going to tell you, don't avoid conflict, don't avoid conversations, Spencer. It's not how you want to live life.
You're right. You're right.
Why would you want to hide that you dropped me on because I didn't come on the last 7 weeks, or maybe another reason you dropped me? I don't know. But either way, that was silly of you. See, Spencer.
Okay. In any case, Jason, we've got Yoni from eToro, the founder and CEO. Let's get Yoni on here. And
all right. So let's go. Get the ticker symbol on there. The SPAC ticker symbol. It's not fully converted. I see in that bottom toolbar. Let's get that ticker symbol on there so people know what we got going here. Yoni, welcome to the Benzinga Crypto Festival. How you doing today?
Well, I'm doing great here in New York. We're very happy to see crypto markets continue on the longest rally ever. People forget how short 2017 rally was to understand how strong this rally is continuing. Well, still recovering from a correction in May, but great to see ETH almost touching 4,000 today.
Yeah, no, ETH is. Now, do you guys, I have some interesting stories for you. You guys are going to, if you're tuning in, you're going to freak out by the end of this interview because I have a couple of interesting stories that I promise you. You know what? I will send you guys a refund of $10 or something if you paid, but maybe you did. If you don't think this is the most amazing interview ever, because I promise you it is. I promise you. Just take my word for it now, and now let me prove it. But do you have are you biased to ETH or Bitcoin? What's your take?
Generally, I'm very biased towards Bitcoin and ETH. They're roughly roughly, I'd say together, more than 80% of my crypto holdings, and they're playing 50-50, really depending on the day. But by the way, everybody, since eToro is a social investment network where you can actually see the portfolios of everybody in the network, you can actually look at eToro.com and search for Yoni Assia, and you'll see the breakdown of my entire both crypto and equities portfolio and my stellar performance as well.
Wow. Okay. So we can all see that on the eToro platform, all your holdings?
Yeah, of course. It's been there. You can see actually my track record, I think for the last 9 or 10 years. So the concept of eToro is we have today 22 million registered users from 100 different countries who can trade commission-free stock trading and cryptocurrencies. And everybody can actually see the performance of everybody in the network, and then can follow and collaborate and communicate with one another, seeing the portfolio allocations and how many stocks and crypto each holds, and then use our patented technology called Copy Trader to automatically copy the most successful investors in the network.
Okay. We're going to take it back to the beginning of eToro. What did eToro start as, by the way? Wasn't it more Forex?
So first of all, we'll go even more back in time. So I've been passionate about capital markets since I was 13. Very lucky to get some shares from my father to my bar mitzvah. And I was also a programmer when I was in high school. So I've always been passionate about the intersection of capital markets and technology. I've been doing both ever since. And I founded eToro together with my older brother because he used to make fun of me that I have an accountant fetish. I used to sit across multiple screens with charts and Excels and looking at lots of numbers. And Ronen, my brother, always used to say, this sounds like a super exciting world, the world of capital markets. But when I look at the actual user interface of what you're doing, it's horrible. So that's how we started eToro in 2007. We started with a vision of opening the global markets for everyone to trade and invest in a simple and transparent way. I always believed that our generation, Generation Y, is going to look for a different user experience in the market. And we started basically hacking the user experience of people trading in the market, starting with a very visual interface to make it just simpler. What we've noticed then is when we started our brokerage back in 2008, when we launched, which is a very interesting year to launch a trading platform during the global financial crisis, is that the most active feature on the platform was actually the chat. And what people were asking each other is, what are you currently trading? So that's how we realized, and this was, if you think about it, 2008, really the beginning of social networking, of Twitter and Facebook emerging. And we thought, let's take this concept and let's combine between a social network and the ability to actually see what people are doing. So you talk to real people, you can see their track record, you can see their portfolio allocation, and then you can either learn from them, talk to them, or just automatically copy their trades. And throughout the years, obviously, we've constantly adapted our business to what's happening in the market. So it was social networks. Obviously, we went mobile first very early on. So we went mobile first in 2015, inspired by Facebook. But we were very early also to Bitcoin. So we started.
That's where I wanted to go. So you were, because that's where I was going with. Tell your Bitcoin story. There's an article on Benzinga about it. So if you type in Yoni's name into Google space Benzinga, you'll see the story. But tell the story of Bitcoin with you guys, because you went to your board and you wanted to see how how you custodial it Bitcoin. So you guys bought some, and tell the dollar amount and what it is today. And yeah.
So I started thinking of cryptos, I would say before Bitcoin. I started writing in my blog about a concept that's now our nonprofit called the Good Dollar, where I wanted to create a better and more transparent money system. So when we noticed Bitcoin back in 2010, and I always say there's 3 sort of technologies or ecosystems that I immediately fell in love with. One is capital markets and the stock markets, the first trade I did. The internet and BBSs when I was very young, and sort of helped me understand how this entire world is connected and information connects. And then the first time I experienced Bitcoin, this was when you actually had Bitcoin faucets. back then. This was you could just enter your Bitcoin address and you would just receive some Bitcoins. I used to mine also in 2011, and we got so excited with the technology, especially because we were running a fintech company, so we understand how broken financial services back system in backend is. We were super excited by the technology and the fact that you can actually send money online to anywhere, to anyone, anywhere around the world on a system that's decentralized and open source. And we got excited about it and actually started buying crypto to eToro at, I think it was, the first rate was at $5. So I have these still emails from Mt. Gox of us buying Bitcoin for $5, $10, $15, $20. I think all in all, we bought probably about 3,000 to 4,000 Bitcoin back then. And then we launched Bitcoin trading in 2013. And as sort of crypto winter, the first crypto winter of 2013, post Mt. Gox failure started, we had a very intensive dialogue where I was very much pushing for Bitcoin. And some of the board members thought we should focus on equities and that Bitcoin is a fad. I've seen that happening with social networks before. And we had to really insist to make sure that we keep our Bitcoin in cold storage. But we bought, I think, about $50,000 worth of Bitcoin that at the peak.
How much?
We bought about $50,000 of Bitcoin. Okay.
Yep.
I think at an average price probably of 10, somewhere $10 to $20. And at the peak, I think that was worth about $30-40 million.
Did you guys hear that? $40,000 worth of Bitcoin. At the peak, it was worth $35-40 million. I mean, Yoni didn't even have to raise capital. He did, but $35,000 to $40,000 worth, and at the peak, $35 to $40 million. And I don't think you cashed out of it. I think you guys just held on to it, if I recall.
Well, it was more important even than cashing out. It was the basis of how, in the rally of 2017, really during the peak rally, and people sort of don't appreciate how within these rallies, right? So when every time Bitcoin hits an all-time high, the amount of people flocking into crypto back then was just intense. We grew 100 times from the average of January 2017 to the peak day in December 2017 by the number of funded accounts opening in a single day, from 200 funded accounts a day to 20,000 funded accounts a day. And the only way we could actually serve that surge of customers who are coming to eToro to buy Bitcoin was actually just selling them the Bitcoin we held, right? Because back then, this was like at the peak of 2017, all of the exchanges shut down new registrations. Most of the exchanges were on and off during peak times. You couldn't trade. You had a lot of errors back then. The system was really just maturing. And the fact that we had a balance sheet and enables us to also go into new crypto, so hold a balance sheet in ETH. We launched Ethereum on the platform when it was $6. So the first quotes of ETH on the platform is at $6. And then we started adding more and more cryptocurrencies. Today we have about 30 crypto assets on the platform. But it's amazing to see some of the people, even just the last 12 months, we've seen people buying Cardano. And people just seeing absolutely amazing returns on Cardano over the past 9 months, which is quite amazing. I'll just put a disclaimer there that having seen that sort of from the seat of seeing hundreds of millions of transactions in eToro, the fact that people were in time in a specific asset, and this is a risk disclaimer for you, Jason, doesn't mean that it's easy necessarily to make money in crypto or that all other assets will grow in time. So past performance doesn't necessarily indicate future performance.
I mean, have you lost any of these picks?
You mean have I personally ever lost in a trade in crypto?
Well, I mean, these returns are right. I mean, do you guys have your own coin yet, eToro?
No, we decided since we're in the process, since we have a lot of shareholders as we raised money in the traditional way of VC, and since we've announced and we're very excited about the transition from a private company to a public company through a SPAC merger, that the right thing is to make sure that we understand where the equity value is, and that's for the shareholders of eToro. We did open our nonprofit, the Good Dollar, which is a currency on its own, but it really does promote financial literacy, financial inclusion, and potentially UBI, or financial equality, through a blockchain-based universal basic income system. But that's a whole different story.
Got it. I would love to hear about the Good Dollar more, because we do financial literacy here in Detroit high schools. We can talk about that more. Maybe the Good Dollar is something that we show off, because
anybody in Detroit can just go to gooddollar.org, get a free mobile wallet, and then every day claim good dollars, and then basically through that educate themselves about cryptocurrencies, start sending and receiving, inviting their friends to receive more good dollars. So we created a cryptocurrency where anybody in the world can open a wallet and just every day just claim good dollars and get good dollars.
That's sweet. I would show the screen right now, but maybe the producer has to do it. They just tried to do it. They put the link, but I wanted them to actually open the site so someone can see it and we can click on it. That's sweet. When did you guys start that?
So as I mentioned, I started a blog post back in 2008 about this, about the fact that there's a need for a transparent money system where you could actually see different transactions. So if you have transparent money system, the world could be fairer and money can be doing more good. And then created a concept which only later on I realized is similar in essence from an economic point of view to universal basic income, which basically said that the people who have the least actually need to receive more interest rate, not less interest rate, right? So in the world of interest rates, if you're rich, you're actually your money is making more money for you, and you don't need to work anymore. And if you're poor, you don't have any money to generate interest rate. So out of that model, we just created a range of smart contracts. So it's all based on ETH, and on Ethereum, and on decentralized finance.
Okay, so now we talked about but the one thing I didn't get still, in the first days that you and your brother started the business, the first days, I'm talking about the first 2 months of the business, first 4 months of the business, what was it? I know you said they were chatting about positions, but did you have a brokerage then in Israel? Like, what was it the first 4 months? I mean, because I know this thing, I mean, this has been a rocket ship, and I feel like the rocket ship is just beginning. So, but I just want to know the first 4 months of what it was, or the first 2 months. What was eToro? I know what your vision was. Your vision was to open up trading and investing to the world, because you've been so passionate since you're 13. Your parents had to steal the newspaper away from you to stop trading. They wanted you to play sports because you couldn't throw a baseball or something. But what I'm just want to know.
No baseball in Israel, so that's not the case.
What'd you say?
Close enough. But
okay.
When we started, it was really a desktop app. So you actually had to download back then software to your desktop, which made it very simple to look at the markets. We started with currency markets. You can trade the euro versus the dollar versus the yen, and we just visualized it in a very simple way. We showed the map of the world. We created different visual ways to basically trade the markets. So we created a lot of different screens which tried to explain to people how to trade in a very visual way. So that was really how we started. We said we want to simplify trading, making it as simple as possible for more people to understand it.
Okay.
And then as time progressed, we realized two interesting things. One is you need to simplify access to capital markets, but to a point where you don't stupefy them, right? So people need to still understand that markets are serious, and that you need to manage your investments properly. And I think that's where we sort of fell in love in the concept of social trading, because if you see other people and you see their performance, and today we have 1 out of 1,000 investors in eToro becomes a popular investor who's being copied and actually gets paid to be copied by others, right? So just to explain that concept quickly, our top popular investor started with eToro, I think it was when he was 25. Now he has track record of 9 years on eToro with an IRR of north of 40%. So on average, generating more than 40% returns a year for the past 8 or 9 years. And today he has 30,000 people copying him. So every time he trades, that trades in the same proportion, same time, and same price, and 30,000 other accounts at about $150 million are right now copying him. And he gets paid from us for being copied. And we have 1,700 popular investors on the platform who are all copied by users from all around the world. So we wanted to bring the sharing economy, the same as Uber for taxis or Airbnb for hotels, to the concept of portfolio management, so people can really see that there are talents out there. I know both of us, Jason, believe we're both passionate about capital markets. There are a lot of naysayers out there saying it's impossible to beat the markets. It's impossible to generate significant returns in the market. It's not impossible. It's possible. I've done it myself. You can see my track record, but we have a lot of successful investors. I'm not saying it's easy or simple to be a successful investor. I'm saying that if you devote the time, if you educate yourself about the markets and you understand the risks and you're willing to take risks, you can generate nice returns over time in the markets, especially both in stocks, but definitely in crypto.
Yeah, and one of the things that I find interesting, I'm a fundamental guy mostly, and there's certain areas that I'm an expert in, and so I call it informational edge. I guarantee in certain parts of the market, I will destroy most people. I say anyone because I really believe that. But
you could open an eToro account and talk the talk and see whether you can walk the walk and not talk the talk. Other people can see your performance over time. What are these areas you should specialize in, Jason?
No, you're right. No, I'm good at catching trends like SaaS software businesses. Okay, I was good at when they sold off Twilio. I mean, just 100% gainers, 1,000% gainers. Before, back in 2002, I was the first guy invested in the online dating business. The JDate was a public company. Yahoo had personals. I was like the guy who had every stock that was an online dating business. Should have kept them all. Match.com was around then. But there's informational edges. And that's where eToro can be so freaking useful, because you can find guys who outperform the market, but you can also see sector performance. And that's where it can become so substantial. Because I'll tell you right now, Yoni, if you said, Jay, hey, what would you do in the pharmaceutical space you think that's going to grow? I would say, Yoni, I have no idea what the pharmaceutical space is. I know I take Zithromax when I have a cold. That's all I would say. I'll take a Z-Pack, And so to your point, people have specialized knowledge in certain areas, in my opinion, and instead of technical. So eToro serves such a important part of this economy in terms of learning the markets and following success. I'm going to talk for one thing. I like golf, so what do? I watch good golfers and I copy their swing. If you like making money, follow good traders, good investors. I'm really good at SaaS businesses. I need to get my account in eToro, obviously, so you can follow me, right? And Yoni's really good at, knitting. So if you want to learn to knit, you follow Yoni. But so that's what you guys.
I'm good at tech stocks and crypto historically.
No, you're not just good. Yoni is absolutely. Look at the record. I mean, Yoni. There's a reason eToro is $10-12 billion SPAC value, and I believe it's just the beginning. So I want to just take people to where we are today, because we only have like 8 more minutes or 7 more minutes. But will you talk to us a little bit about your most recent quarter? You gave your earnings updates and your revenue. Maybe talked about the growth. If you guys are listening to this show right now and you're in your car listening on Sirius Satellite, pull over, sit down in your seat, because when you hear these numbers, you're going to fall off your chair. I know the numbers, so I'm not going to fall, so I'm good. Go ahead, Yoni, take over.
So we did have tremendous growth over the past 18 months, which significantly scaled the business. We had an amazing 2020. So in 2020, we've grown the business. Total commission grew to over $600 million in 2020. And that was 147% growth year over year versus 2019. In the first half this year, we already generated in the first 6 months more than $700 million in total commission, more than 500 in net trading income. We added last year. We were very excited seeing 100% growth in the number of new registered users into our social network. So we grew from 2.5 million registered users in 19 to adding 5 million registered users in 2020. And then the first 6 months of the year, we already added more than 5.2 million registered users. There's definitely a perfect storm happening right now. If you think of what we've built, which is a social network for investors around both stocks in the US, in Europe, around the world, as well as cryptocurrencies, we're just seeing a perfect storm of markets at all-time high, retail participation in the markets at an all-time high, crypto rally 2.0, which is now the longest crypto rally that we've ever seen. Also sort of, I would say, to some extent, very much supported suddenly by institutional money, something that we haven't seen in 2017. So now every single bank in America has a digital assets in a blockchain lead and their own blockchain and crypto sort of thinking around the markets. So we've seen from Q2 this year to Q2 last year about 120 to 140% growth year over year. So definitely a great progress this year after significant growth last year as well.
So were you profitable?
Yeah, we've never focused on profitability. I very much believe in growth. I think growing the company is the most important KPI because I see this huge secular trend. If you think about Generation Y and Generation Z, and you think about the rest of the world, so not only the US markets, our biggest market is Europe. So in the US, 51% of households own stock. In Europe, it's an average less than 15%, and the majority of those still don't own US stocks. In Asia, it's less than 10%. So I think there's a huge available market to open the global market still to hundreds of millions of people who can participate in capital markets, just like I started when I was young, and to basically open up their first trade on platforms like eToro. So I definitely am a big believer in growth and keep on investing in growth. Having said that, we've been very responsible in how we manage that growth, and we can never expect outliers like crypto rallies. So over the past 4 years, 2017, 18, 19, and 20, we actually generated more than $400 million also in EBITDA profit. So we've been able to significantly scale the balance sheet of the company, but really not because we focused on profits, just because we managed the company responsibly, and every time a significant rally happened.
Yeah. How many people do you have working there?
We have 1,500 employees worldwide. Okay. We have offices, I think, in 10 countries now.
All right. Okay, because we have 4 minutes. The numbers aren't amazing, but I know you're a big vision person. Where do you see this going? Do you think you're in inning one? You're just getting started? Where do you see eToro as a company? Guys, if you want to look up eToro on the tickers, NASDAQ, it's FTCV. F as in Frederick, T as in Tom, C as in Charlie, V as in Victor. Yoni, where do you see you guys going over the next 2 to 3 years?
So you can actually see that in the pipe presentation on investors.etoro.com. We expected to end the year with 1.9 million funded accounts, funded brokerage accounts. We're now at the end of Q2 surpassed roughly 2 million. So we expect that number to grow to over 6 million by 2025. We expect revenues will do. Total commission this year will be, we expected to be about $1 billion. So we did 700 for the first 6 months. Yep. And expect that to grow in parallel at a bit of slower rate than the growth of users. So if we expect 2 million to 6 million at a bit of a slower rate as we're bringing more and more customers from more countries and expanding our business in the US. But if you want to talk about like the big picture is if you think about financial services, even in the US, right? So Morgan Stanley bought E-Trade, Schwab bought TD, Robinhood is US only. It's a very US, so US financial services companies cater to US customers, and you see the same all around the world. So in Germany, you see German companies catering to German customers. You see in the UK, in Australia, we're regulated today in Europe, in the UK, in Australia, and the US, expanding also to the Middle East of Asia. In our long-term vision, people all around the world, Generation Y and Generation Z, are going to expect the same user experience. And we can leverage technology, AI, and user experience to just build a global digital investment platform for that generation, which just gives better tools and a better ability to become successful investors. And if the market itself is hundreds of millions of accounts over the next 10 years, I truly believe we can reach tens of millions of accounts in eToro, growing that significantly. So
eToro, in your mind, is not even close to the top, and it's like the beginning stages. And
we're definitely seeing a huge secular trend, which we believed in. Social people trading on social and talking on social networks about what's happening and learning from one another. That's definitely, I would say, at the peak of our culture. What's happening over the past 6 months of people realizing retail investors have a voice in the markets, and they can talk about what they're doing in the markets, and they can beat Wall Street in some cases.
All right, so now we're just doing a quick rapid fire. You got like 10 seconds to answer. I'm just looking at some of the chat questions. Any opinions on Cardano?
I think there's a very interesting trend happening in sort of the Ethereum competitors. I think staking is interesting on Cardano, and no doubt that the smart contracts that are going to launch on Cardano in the next 2 weeks could be a game changer, but we'll have to see how traction and usage actually becomes significant on the Cardano network.
Okay, the next one was, what was the next one? I have to go back to that. BEXT, I don't know that one. So do you know that? I don't know.
I didn't follow that. So
yeah, okay, good. Okay, and then the merger vote, when does that happen? Do you know?
Well, we are in progress of the SPAC merger completion, but we haven't announced a date yet. So when we'll announce it, we'll make sure all of your listeners know the date.
Okay, got it. And then wait, there was one. Oh, Canada. Canada. Are you guys in Canada? Do you plan to expand to Canada?
We hope to. So we are looking now at Canada. We're available at 100 countries and are putting a lot of efforts to scale our business in the US. So we've seen outsized growth in the US, with funded accounts in the US growing from 6% to 12% of total. So very focused in the US, and potentially the next stage after launching equities in the US and in scaling in the US would be looking at Canada as well.
Yeah, and I see people asking questions. If you guys go to Google and type in like Benzinga eToro, you could see reviews you wrote on it. If you have questions on customer service stuff, was it like support@etoro.com or something?
Yeah.
So support@etoro.com. When a company is going through such growth, but I know their customer service, they try to get back to everyone.
We had to hire 500 people this year. Just the first 7 months, had to hire 500 people just to support all of that customer growth. We definitely know that sort of in the peaks of March and May, when we just scaled, we had to bring in more people to give better service, but we have great people all around the world now giving white glove service to our club members and to our customers from all around the world.
Okay, well, maybe my last question. How do you do all those countries? Aren't there different languages and stuff?
We're in 24 different languages.
How?
So most of the European languages, I had to learn how to say social trading and commission-free stock trading in 20 different languages, from Philippines to Vietnamese to German to Italian to Spanish. And we're regulated in many jurisdictions. And by the way, we're the only global broker-dealer offering commission-free stock trading and crypto for customers from 100 different countries. Again, most of our competitors always are very local.
So like on that stuff with all those different countries, in those countries, do you have the exchanges that are in that country?
Yeah, we support, I think today, 17 different exchanges on the platform. So you can buy European equities, Hong Kong equities, and we constantly are adding more and more. There's always a rally somewhere. There's always interesting stocks to see somewhere. And I do believe our world is becoming global. and people from Germany, Australia, US, Latin America all learn from one another.
Yoni, hitting home runs, making this company grow, all these countries. Spencer, I feel like we got to go like run faster or something, or go out and exercise, because this guy in all these countries, I mean, it's absolutely incredible. And congrats on the success. Thank you for coming on the Benzinga Crypto Festival. We'll hopefully have you on again. The 35,000 to 35 million, those are the kind of things that, Yoni does. And check out the company FTCV, because I think it's very interesting, and you're hearing it from the CEO himself, who is as passionate as ever to grow this company. That's one thing I do know. So,
and I'll just say I know Yoni is a beast, because last time we spoke, it was like 4:30 p.m. on a Friday his time. And if you know anything about Israelis, 4 o'clock on a Friday is like most of them are at work, and he was at work. So that's when I knew Yoni was a beast. So Jason, Yoni, both of you, thanks a lot.
24/7 like the crypto markets. Thank you very much, Jason. Always a pleasure to see the passion. Thanks, Spencer.
That's it. All right. Thanks a lot, guys. All right. Let's keep this show going here. Our next guest, I see him here in backstage, is trying to speed up the payments and transfers process. Pour rocket fuel on it, if you will. There he is. Peter Jensen. He is the CEO of Rocket Fuel Blockchain. And Peter, how are we doing today?
I'm pretty good. How are you doing?
Doing well. Excited to have you on here. The payments and transfer space in crypto and is inefficient, shall we say? So please tell us how you're helping to make that space more efficient.
Yeah. Thank you so much for having me on here today. What I wanted to do, I'm Peter Jensen, the CEO of Rocket Fuel. We are traded under the stock ticker symbol RKFL, Rocket Fuel. And what I wanted to do today is to give you an overview of what it is we're doing, and then give you my perspective and predictions on the market, and a little bit of input as to where I think people could invest and see some great returns. So I'm going to go through a couple of slides, if that's okay. Does that work okay, Spencer?
Yep.
Can you see my slide?
I'm going to bring them on there. There they are.
All right, cool. So first, a little bit of overview of what we do. So we are a blockchain-based payment solution. And so we allow e-commerce merchants to accept payments either with cryptocurrencies or bank transfers. We support all the exchanges and a lot of banks and all of that. So sometimes it helps just taking a look at it. If you go into any merchant site, you can buy, this is one of our customers, you can buy a ticket. And if you see in the upper right-hand corner, whenever you're ready to pay either with a credit card or something else, PayPal, for example, you have the option to either pay with a bank transfer or with a cryptocurrency. And then we have a little window, comes up, similar to what you do with Amazon, where you can choose, do I want to pay from Coinbase or OKCoin or an exchange or a wallet and so on. You click pay, one-click solution, super easy. And one thing that we're focusing on is it needs to be super easy. Today, with QR codes and so on, it's not really so easy that my mom can figure it out. It's really for the early adopters. If we want full adoption, it needs to be as easy as Amazon. So in addition to that, we have a dashboard for both our merchants and consumers. So consumers can, and this is nice for tax season, you can go through all of your purchases over the year, and you can see who you paid and so on. And the same for the merchants. They can see everything that is going on in their store. Who are my customers? What are they paying with? Are they paying with Bitcoin or something else? And lots of other data. I just wanted to give you a quick overview of what we're talking about before we go into some of the details, because most of the commotion around cryptocurrencies has been around investing in cryptocurrencies. But now I think we're getting to the next wave, which is really using the technology as a utility, and payments is one area of that. And you can say, why is that? What is the problem here? The problem is that we have a very inefficient system today with credit cards that invented 40 years ago before the internet, and it has all the security problems as you know, and therefore it's as I said, inefficient. What are the problems? Well, merchants, they pay very high fees, 3, 4, 5, up to 10%, as people know. And if it was just working, but it's not, there are chargebacks, there are declines, there are cash flow issues, and there's plenty of studies on the left-hand side of this slide that shows issues with cart abandonments and money spent on fraud and all of that stuff. So any merchant that you talk to, they don't like the current payment system. If you talk to the consumer, it's not really efficient either. If you go to any website, I mean, today, I think I have 30 different accounts. When I go to a website, I want to buy something, they want me to create an account, and then I have to enter my credit card, and then when I'm ready to pay, I go through it. Oh, now it wants my CVC code, and then I give it the CVC code, and if I'm unlucky, then my bank calls because they have all this fraud and so on. So finally, my transaction goes through, and then after a couple of days, I see this news story in New York Times that says yet another merchant got compromised. So I end up with 30 different accounts. I wonder if it's my credit card, my information that has been compromised. And I'm mentioning all these problems just to say that it is an inefficient industry today. It's just old architecture, and the good news is we have new technology that can make it so much better. So what we have done is, and I'm not going to go into details, but obviously we have developed a solution based on blockchain that addresses all of these problems. And of course, we think we're geniuses, but a lot of it has to do with existing technologies like blockchain, cryptocurrencies, and others. But of course, you need to put it all together in a nice package. So with that, that is a very quick overview of what we're doing and our solution. And we don't have time to go into detail about it now. But what I do want to talk a little bit about, and maybe I should do, I have one more slide on the team, because a lot of people ask me about the team, and what we have done is we have spent some time building a team of people who've done this before, proven track records. This is my 6th startup. I sold a company to IBM last year, sold companies to Cisco. I'm based in Silicon Valley, and the whole team is here in California. So we've done this before. We've built and sold companies before. Doesn't guarantee success, but usually, as I said, the second time you do something, it's more likely to succeed, or at least make fewer mistakes than the first time. We have a seasoned CFO, our chairman and founder, and the man behind this whole idea. He has been spending 20 years in the payment industry and has a lot of successful merchants under his belt. So that's a little bit about the company. Now, if you think about the industry, and I think this is really, really exciting, it's all about investing, right? And I've been in Silicon Valley for 25 years. And once in a while, there is this, I'd call it perfect storm, where, because if you think about the really successful companies in Silicon Valley and all over, they have a couple of things in common. First, you need to have a large growing market. Then you need to have a market that is dysfunctional, that has a lot of problems. And then you need to have a technology that has the potential to solve all this problem. Large growing market, payments is very big. Anyone looks at that. We're all making payments every day. Problems, I mentioned some of them. Those of you who are in payments, you know it's a big problem and it's old fashioned. And then you have the technology like blockchain. And if you look back, I view it, the best example I give is with the introduction of mobile, where you had an old industry like the taxi industry with a lot of intermediaries in between. And at least the taxi companies were intermediaries. And a technology like the mobile phone just gave room to Lyft and Uber, and they could basically revolutionize this whole space. You go back to the internet, again, plenty of examples of Google and Cisco and whatever you have. Electric vehicles as another good example. And then you have the current markets that I talked about within finance and payments. Again, large market, big problems, great technology. So I think that the blockchain technology is going to be just as big as the internet and mobile technologies, in that it will change and disrupt many, many different verticals. And just like in the late 90s, we had no idea what the internet would bring and all the billion-dollar companies that would be created. And it's the same thing here. We're just scratching the surface, and we're still creating billion-dollar companies based on internet technology. And that's what we'll be doing for the next 20 years on blockchain technology. This is just beginning. That's why I'm excited, because I want to just be a part of that and ride that wave. Now, a couple of last final thoughts here. As I mentioned, the first wave, the last 10 years, we've been spending time investing in cryptocurrencies as an investment, as I mentioned. The second wave, which has started, but I think it's gonna, I mean, it's not that the first wave is over, it will continue. But what we're seeing now is that crypto will be used as a utility and infrastructure. So if you think about it, we're passing an infrastructure bill now. Currencies and payments, they're infrastructure today. And if you want to have a competitive country and a competitive economy, you have to have an efficient infrastructure. So there's, and if you think about it, it's always been a good idea, even from the old railroads. If you invested in infrastructure, it always paid off. Whether you invested in the railroads or Cisco or all the others that provided infrastructure to a certain industry, they did well. So we are in that space. We're basically the infrastructure for payments and the financial sector. In terms of the second wave, payments are happening today. People are paying with cryptocurrencies today. We have many customers and merchants that can see how, just like commerce is moving from brick and mortar online, they're now seeing payments going from credit cards and other ways to crypto, and it's just starting now. I believe, and this is my prediction, that the real fast acceleration and the general adoption is going to happen when the national banks issue their own digital currencies. So imagine when the US central bank issues a digital version of the US dollar, and all the kids in university who come out of university, who already today have their wallets on their phones, they're being asked, do you want your salary paid in US dollars, fiat currencies, into the bank account, or in the digital version of the US dollar directly to your phone? It's going to be a no-brainer for them. They're like, I already have that wallet. I don't want to go down to the bank, set up an account, pay all the fees, just give it directly there. So when the central banks are going to issue their own currencies, it will validate this whole space and it will explode. Now, I happen to think that it's going to happen in the US sometime next year. And why? It's because it's already happened in many other countries around the world. China is, as we know, ahead, and they're moving very fast. And I think a couple of other large countries are going to follow. My prediction is maybe the UK and Europe, because they're outside of the EU. And we know what the Chinese want. They want the Chinese yuan to be the dominant currency and replace the US dollar. And I don't think we can let that happen here from the US. And therefore, the US central bank is going to be forced to move relatively soon. So that's the second wave, where we use crypto as a utility and infrastructure. Now, then you may ask, what should I invest in? So 10 years ago, a lot of you, or 7 years ago, or 5 years ago, a lot of you said, which cryptocurrency should I invest in? Should I invest in Bitcoin, or should I invest in something else? It didn't matter at that time, because no matter what you invested in early, made a lot of money. And that's how it usually is. Go back to the internet. Whether you invested in Yahoo, who didn't, I mean, they all became big companies. It was just one got bigger than the other. There was Yahoo, there was Google for internet search, there was Microsoft, all of these, they all became big billion-dollar companies. And that's my point here, is that my point is you should think about, do I want to continue investing only in crypto, or do I want to diversify and also invest in infrastructure built on blockchain and crypto? And if I do want to do that, of course, we are one option, of course. But the key point is here, invest early. If you invest early in the infrastructure that takes advantage of crypto, then I don't think you can go wrong, because we're all going to be big. It's just a matter of how big we're going to be. So invest early and then invest broad. Invest in more than one company. So if you want to invest in Rocket Fuel, well, if you're a retail investor, you can buy our stocks online, and that's easy to do. If you're an institutional investor, as a startup, we're always raising money. So feel free to contact us. So with that, I'll turn it back to you, Spencer, and answer any questions that you may have.
Thank you so much, Peter. I'm just checking through the chat right now, and it doesn't look like we excuse me, let's get that screen off there. Doesn't look like we have any questions. So yeah, I think we're actually right on time, amazingly.
Well, there you go.
Peter Jensen, everyone, is the CEO of Rocket Fuel Blockchain. And Peter, thanks a lot. Please, please, please make the space, make payments, make transfers more efficient, because it's slow.
It's slow. It's not working well.
So, yeah.
But we've gotten used to it, just like the old days with the taxis, right? We thought, yeah, this is how it works. It's okay. You have to stand out in the rain and wait, and the wife is mad at you because the taxi doesn't show up. We didn't know there was a better way. And it's the same thing with payments. There is a better way. And we'll know in 5 years when we look back and say, wow.
All right. Hey, Siri, remind me in 5 years. Cool. Siri's going to do that. Peter, thank you so much for coming on today. Appreciate it.
You're welcome.
All right. Our next guest is backstage. Before I bring him on, I believe we have a quick intro video to play. So let's roll that, producers.
Meet the ByteDEX. Join the future. ByteDEX is a huge ecosystem consisting of Byte Exchange, Byte Wallet, ByteW, ByteDEX Token ByteChain, and ByteDEX communities. Byte Exchange is a next-generation hybrid crypto asset exchange. Byte Exchange does not keep your wallets in the exchange. Your wallet, your crypto, your exchange. Byte Wallet is a decentralized crypto asset wallet we designed for you. With this wallet, you can make transactions by connecting on Byte Exchange or connect to the best swap exchanges in Ethereum, Binance, Smart Chain, and Tron networks. ByteDEX token is the main crypto trading unit of the ByteDEX ecosystem. Offers commission discounts of up to 300%. Earn rewards from Byte Exchange's net income by staking ByteDEX tokens. Take a next step by keeping ByteDEX tokens in your wallets. ByteDEX brokers. If you are a good crypto expert, then give crypto trading service to crypto lovers. ByteDEX Token Launcher, a new global launch base for blockchain projects. Promote your project to the world with ByteDEX. Deliver your project tokens to the world. ByteDEX Stake, the best place to use ByteDEX tokens. Let Byte Exchange work for you. Earn an annual income from other crypto assets like BTC, ETH, TRX as well. ByteDEX OTC, an amazing feature that you can use directly to trade any crypto asset, whether not listed on Byte Exchange. Put your crypto asset on sale and deliver it to buyers with ByteDEX assurance. Step into the future with ByteDEX. Follow us.
All right, let's bring on the CEO of ByteDEX now, Ismail. Do we have him here, guys? We do. Yes, we do.
Yes, I'm here.
How are we doing?
I'm fine, and it is late night in Turkey. And how about in USA? I think it's the afternoon.
Well, yeah, we appreciate you staying up way past your bedtime, certainly, to come out with us today. So, hey, producer team, I believe we have some of Ismail's slides, so let's get those up on the screen if we can. And I'm gonna step out, and Ismail, do your thing.
Yes, thank you very much. My name is Ismail Köseoğlu. I know it's hard to pronounce for English speakers, but I am the CEO of the Bytex Technologies company. And Bytex is a huge ecosystem, as says in the video. And this ecosystem formed by Byte Exchange, Byte Wallet, and our blockchain system, Byte Chain. And also, we have a new approach of the Bytex communities. So we are here to change something in the exchange working flow. Actually, what Byte Exchange targets, I have to tell you a well-known story. The story is, you know, that about the crypto asset ownership. When the users sending their crypto assets to exchanges, they are also sending their ownership to exchanges as well. Actually, no one sending crypto assets from somewhere to otherwhere. What happens on the blockchain? We only change the ownership of a token. So what happens in the past? Lots of exchanges have been hacked, and lots of users' information has been leaked. But we can a new way to change this. So there is some of the new projects. Actually, they are doing well in the crypto ecosystem. They are trying to decentralize the centralized exchange features, but it's very long way and it's very hard to achieve these goals. And most of them are trying to achieve these goals for years, but there is a simple way how we can keep user funds insecure. So actually, what we are doing, it is very simple. We are just dismissing the centralized wallets from the exchange, and we are let users can be able to use their own non-custodial wallets, just connecting to our exchange. So just think that you have your own wallet, and you have your own private keys, and you have your own mnemonics words, and you just connecting to our exchange, and you are trading. And when your trading is finished, you just go away. So at that point, users have full control of their crypto assets, and they're never giving their ownership of their crypto access to no one. So it is basically what we do in Byte exchanges. We are just giving a safe environment for the users to make their trading. And also we are providing them really good comfort and good infrastructure for trading. But we never keep their wallets, and we never keep their tokens, and we never keep their private keys. Actually, this is the main innovation, what we are doing in Byte exchange. So I'm from Turkey, and what we lived, maybe some of you have been heard, 3 or 4 months ago, this second biggest exchange owner has run away from the country, and more than $110 million has been stolen from the Turkish users, and just the owner has been fled away from the country. And it was just easy because the ownership of all of the tokens belonged to exchange. So now, at the time while we are announcing our project before we start, I was writing the white paper of this project, and actually what we see, the Turkish market was more than about $15 billion in 24 hours market cap. Now, what happened? We lost nearly 99% of our market cap to other exchanges, just because we couldn't keep our tokens secure in a good way, actually. So the other thing, what we do in the Bytex ecosystem is Byte Wallet. Byte Wallet is a non-custodial wallet which is directly connecting to our exchange, and users can be able to keep their tokens in the wallet, and they can just connecting to our exchange, and they making their trade, and just easily. It is very easy used wallet, actually, and everyone can use. Especially most of the wallets have lots of features, but what we understood that in the crypto sector, especially the newcomers, really don't have any knowledge about the how to use a DEX wallet. And when we look to our community, we are getting lots of questions about how to transfer tokens just in the wallet, or how they just going to save their private keys and etc. So we keep our wallet very easy use at first stage, but we are going to implement more features in the future. Just when our community get used to using how the DEX wallets can be essential for our Byte exchange as well. So I think we have a video about our Byte wallet. Can you show it? Can you find it? No? And also, so I want to tell you some features about the our Byte exchange. Byte exchange is a community-based exchange. So what is a community-based exchange? We are going to elect community leaders from our communities from different countries, and they are going to take tasks on our company board. And also we are going to give 20% of the net income generated from that country to our community leaders, and they will going to use these funds to develop our communities in different countries. So at that point, I would like to mention some important things. The first one is, in the crypto sector, every token or every project says that they give importance to communities. But actually, when we look to in real side of this, we see that the communities have no real, they are not a real part of this. So we think that communities must be an active player on the crypto projects, and they have to be a real partner in the project. So we are trying to achieve this in our project, and we are trying to keep them in our project as well. And especially this project is belong to them, and they are going to govern this, and they are going to earn from this. So at that point, we have a staking program on Bytex project. So what we think that we can share our net income of up to 50%. We are going to share net income of this whole ecosystem to our community. So they are going to just.
Hi there, Ismail. I just wanted to let you know that we do have the video queued up for you. Sorry about the late response. If you'd like to play it, we can play it for you now.
Okay, thank you. Thank you, Justin.
Okay, I'll go ahead and jump off for a second.
Okay.
For the future.
Pelo futuro.
Pour le futur.
भविष्य लिए.
Por el futuro.
Für die Zukunft.
Pentru viitor.
Gelecek için.
Bytex.
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 Bytex. Bytex.
Bytex.
Bytex.
Yes, this was a great video prepared by our community, and actually this is what is the community, and because our community is a real part of Bytex project. So everyone in different countries, I'm just saying that you can be a community founder in your country, and we are going to really provide you a great support while creating Bytex communities in your countries. So actually, with this opportunity, what we are trying to do, Bytex is going to be a local exchange in every country while keeping its presence on the global. So this will make us very great, very big in a very short time. So we believe this, and we also, who is watching this video and who is listening this talk, I'm saying them, just join Bytex, and you can be your community founder in your country, and we are going to support this. So Byte Exchange and also Bytex has a big and great ambitious goals in the global, and we are going to achieve this. And we have a great team, nearly more than 60% is working on this project, They are in different countries, from Indonesia to India, from China to Europe, and even in the USA. We have a great team, and we are working all together about to achieve our goals. So at that point, again, I would like to say that anyone who is watching this video or who is listening this talk, we offer them to create ByteX communities in their countries, and they are going to create their own board, and they can be the main facilitator of the Byte exchange in their country. So this will be a great opportunity, and this is a new approach for crypto exchanges, and we think that is going to be the future of the exchanges, which is non-custodial exchanges, and which is community-based, community-driven exchanges, and now we are representing this. Actually, for the second phase, this is the first phase of our project, and we are going to start our next phase in the beginning of 2022 with the launch of ByteChain. ByteChain is a dual layer chain, and we are going to decentralize every transaction on the Byte exchange, and we are going to register every transaction on the ByteChain as well. So this will be also another a new innovation in the exchange. This is the first thing in the actually in the world, and we are going to achieve this. And our team is working now on the ByteChain, and also what we want to do is we are going to create ready-made DeFi products on the ByteChain, and we will make ByteChain as a Google Play of the crypto system. Everyone can be able to create its own DeFi project very easily, and we are going to support them. And so lots of projects will emerge on the ByteChain. So we are going to create a new ecosystem and new place for DeFi on the ByteX ecosystem. So just wait, and we are going to launch it in the next year. Very soon. So when I look to my notes, I also want to tell you some about our token. It's the BEX token. BEX token is our main token. It's like the other counterparts like BNB, OKB, and the Gate token. Is that exchange tokens, but BEX token is not only an exchange token, but it's an ecosystem token. So every part in our ecosystem is going to be used, and it's also there's lots of tasks that's going to be carried on. So now BEX token is listed on 7 exchanges, including the swap exchanges as well. And we just launched about 10 days ago, and it is now new in the market. And actually, we are in a good position now, and we are looking forward to get a great return of the for the investment in the BEX token as well. So our community is also supporting our token in very good and very strong. With the launch of the Byte exchange, which is we are thinking to launch our exchange in this month. Actually, we had some problems with the smart contracts, and we are going to renew it. But we think that in this month we are going to launch our Byte exchange. So when the Byte exchange launch, BEX token will have much more things to do, and it will be needed so much more. And also we had to have some burning sessions, and now nearly 70% of the token has been burned, and we are going to burn it in the future because it's a deflationary token, and it's very nice and good token in TRC20, ERC20, and BP20 as well. So when we look the whole ecosystem in the Byte exchange and Byte wallet and the Byte chain and the ByteX community, and in addition to BEX token, we are just about to creating a new era for crypto exchanges, because we know that there is lots of infrastructure problems. There is lots of bad UIs on the global stage, and actually there are lots of fake volumes of the crypto exchange transactions. But we can do it better. and ByteX can achieve all of these goals actually. And this is all about. In a short time, I am telling about about our project. So if you have any questions, I'm happy to answer about them.
Hi there. You certainly have a lot of people ring in just showing their general support and love for the project. Where do you think all of the enthusiasm and hype is coming from, Ismail?
It is coming from being honest, I think, because from the starting until now, we are very transparent and we are directly in communication with our community. And actually, I'm every day in my community. Not like just I'm not just behaving like a CAO. Actually, I'm behaving a member of this community, and every question has been answered. And maybe more than thousands of questions, thousands of requirements, inquiries has been answered. And we have a direct connection, and we have a great support. And we also volunteered members in our community, and they are really great persons. And they are supporting our project actually. So what we see about this, people want a warm approach against them. They are just saying that don't take our money, just answer our questions. What you are doing,
right? And is this a movement about sort of self-custodying your assets? Is that kind of the solution to the example? I did hear that story. About the exchange in Turkey, I believe. Is this a matter of self-custodying and having more control over your assets that way through cold storage, or how would you frame that?
Actually, there is two big problems in this case. The first one is the newcomers in the crypto sector has really no knowledge. Actually, even they don't know how to use a wallet.
Right.
So, because they never also questioned where they're trading. Every time, for years and years, they just look for the projects, and they're examining projects. They are looking to teams. They are looking the white paper. What at the end, they never question where they trade off this crypto assets. This is the problem. So now we are telling them it is also important. Yes, the project is important. The white papers are important. But the places you are trading this crypto assets is also important. So it is the first time they are understanding that when they send the crypto assets to a centralized exchange, means that the ownership of the transfer, they transfer their ownership of the crypto assets to centralized exchange. And this is most of them heard this first time. Do you know what is the problem? You know the banks, and most of the people trust in banks, because they have rules, and the government also has the rules, and they think crypto exchanges as like banks, and they on the underconscious they think that crypto assets has been trusted because they are similar to banks. But actually, in crypto sector there is no laws, especially in Turkey there is no laws. And now most of country, maybe we heard or not, I believe that in the most of the countries. This is happening the same. Also, think that you are investing in you are keeping your funds in a centralized exchange, and one day you are waking up and you see one news that that centralized exchange has been hacked. Actually, who knows? Who knows if it's really hacked or not?
Right. That's true. That's true.
The only way for this, users has to learn how to keep their funds in their wallets, and we have to give away them to use their wallets. Just go there. They are going to trade, and they go away. I'm an exchange owner, and I'm going to take my commission, and it is all. I don't want to keep their funds. I don't want to take responsibility of keeping the funds in my exchange as well. And the main thing, what is the important thing? Actually, this is a very important point. Look, we are doing builds in blockchain sector, and the creator of the blockchain, there was one or two important points. The first one is the decentralization. The second was the leaderless, no leaders. The third one is no need to trust.
Right.
But now you have to trust to someone to exchange, an exchange owner. This is not a blockchain thing.
Right.
Anything centralized, and anything, if you want to feeling a trust to someone, it means that it is not related to blockchain. It is something different. And Bytex is a strict to blockchain, and we are very strict to blockchain ideology. And now we are going to change this soon.
So there's we're just wrapping up here. So we're just about out of time, but there's so much enthusiasm here. To where is your community talking the most? Where do you want people to go to begin to follow your project and learn more about your project?
Actually, we start our private pre-sale, and the pre-sale stage, we didn't make any marketing. We just tell our friends that we are going to start a project, and we have just beginning to sell our tokens. But on the ICO process, we made a global marketing. And actually, we didn't use a general marketing stage like the other centralized exchange, but we used a viral approach on the marketing. And also, Benzinga was one of our partners in this marketing process. And also, we like your style, and you are also really good media. But we think that not a direct marketing works in the crypto sector, because people want to learn about the project from others. They want to hear from you, not
a Telegram group. Do you have Telegram group, Twitter? Where are your people on Discord?
We have Telegram group, and we have a good website, and also we have different stages like Twitter, Instagram, and most of the social media we are using. But in 10 days later, we are going to open our own forum. And this forum is very important, because what we face in Telegram, actually, there are lots of scammers, and there is lots of people that you don't know the identity. They are just making food, and the project is not going on the right way. Yes, Telegram is a main. It's a main platform for crypto projects, but it is not necessary. We think that our forum can be a good opportunity for our users with a clean and healthy way to communicate with our project and with the developers and also founders.
Okay, well, thank you very much for joining us today. We really appreciate you taking the time to explain. Obviously, there's a lot of heat around this project. People are very enthusiastic about it. We have the URL up on the site. I'm just going to go ahead and introduce
you have to join you have to join our project.
Yeah, absolutely. I'll come and check it out. Everyone should go take a look at it.
Okay,
well, thank you very much.
Thank you very much. Bye-bye.
Of course, bye. Good talking to you. I guess next we have Ben Samaru, who is the co-founder and CEO of WonderFi, coming up. Hello, Ben.
Hey, Justin. How are you?
Good. How are you doing today?
Yeah, I'm doing great. Yeah, it's been an awesome day of presentation. So glad I can be here to wrap it up.
Yeah, absolutely. It's been a lot of information. I'm going to go ahead and right over to you, Ben, and thank you for joining us.
Right on. So yeah, I'll try and keep it as quick and simple as possible. I'm sure people are kind of overloaded from information about all of the great projects that have been presented today. So I'll tell you a little bit about WonderFi and myself and our team. We've been building in the crypto space really going back to 2016. We've been involved with companies like Hut 8, the biggest Bitcoin miner in North America, Galaxy Digital, which many people will be familiar with, Argo Blockchain, and so on. So we've been in the space for a long time, and now we're working on accessibility in DeFi. So that's what I wanted to talk about today. Some of our backers are Kevin O'Leary, Sam Bankman-Fried from FTX and Alameda, and then a name that's probably lesser known in the crypto space, Josh Richards, is an investor and social media influencer who has 40 million followers across his platforms, and I'll share more about why that's important as we kind of move through the presentation. But we've got some really significant people behind us to help us make DeFi more accessible. And I'll just give you a heads up, like, not going to be selling you on DeFi. I think people have probably done an excellent job of doing that, or most people today here are sold on that. Just going to focus on the problem of accessibility. And really the reason for that is all this great technology that's being built at the protocol level, with a lot of the people that have presented today, is amazing. But if the technology is not accessible and usable for your average person, it just doesn't matter. And that's not a knock on anybody working in the space. I think it's just something that for people that have been heads down in the space for a year, 2 years, 3 years, 5 years, you forget that when you step out of your circle, 99% of people aren't going to know what you're talking about when you talk about DeFi, and probably around the same number when you talk about crypto. So I think it's really important for us to kind of zoom out and look at what the average person's knowledge level is. And so I think we come back to the reason why crypto and why DeFi are important. And I think, again, it's really important in our view to keep this top of mind all the time, because there's these major problems with traditional finance. It's so many people in the world that are unbanked or underbanked, and that's not just people that are in developing countries. That's in North America, in the United States. I saw a stat recently in New York City. I think it was either 10 or 12% of people don't have bank accounts, and so that's a staggering statistic. And the income inequality and sort of the wealth gap continues to grow. I think everybody here knows this, but I think it's just really kind of important for us to keep that in mind as we're building in this space, that everything comes down to being able to propagate this technology so that it can really be used and move people off of kind of the legacy technology that that the majority of the world is using right now. So our mission with WonderFi, as I mentioned, really is to create better access. It's all about accessibility, and I can't emphasize that enough. Like I said before, if this technology does not get does not become usable for your average person, it doesn't matter. So I'll touch on this a little bit more. Our kind of high level view of this is education is the first piece, and that education is, people within the crypto space look at education differently than people outside of the crypto space. People within the crypto space are extremely, diligent, educated about the technology. The level of knowledge is incredible, as a lot of deep diving on white papers, and a lot of people are have backgrounds in software development, coding, can really understand that side of things. But again, for your average person, it's so far gone from what is accessible or useful for them. So I think when we think about education for people in the crypto space and people outside of the crypto space, it's completely different. So I think the education piece is very important if we want to get this technology out to many people. And then the second part is simplifying things. So I think we're in the early adopter stage for DeFi right now, where almost all the usage is from people that have experience in the space. And so their needs are a lot different than people that are going to be more part of the majority, like early majority market segments, who are, they're not going to care about looking at 40 different protocols and yield farming, spending their whole weekend doing that. They're just going to want some exposure to this. Oh, hey, I can earn a few % on my asset instead of a fraction of that in my bank account. Let's see if I can do that. And if you can provide a way to do that, in a few clicks, then this starts to matter to people past that, past that early adopter segment. So I think don't want to go into all the details on the slide, but basically, I think if we zoom out of the experience that a lot of people probably attending today and a lot of the presenters have within the crypto and the DeFi space, for your average person, the moment that they look at a DeFi product or protocol, it's extremely confusing for them. There's a lot of, there's a reason why there's so many resources online for people being able to navigate how to do different things within DeFi. And there's, a lot of time and energy that people spend helping to, make it more cohesive so that you can, so that you can achieve what you're trying to do within DeFi. So it's a really fragmented space. It's really complicated. Everybody knows these problems. And I think they're really key. So what we're doing is really making a simple point of access and really honing in on what people care about, because what we're finding is from doing user testing as we take people through a lot of the applications within DeFi, and when I say people, again, this is people without any experience in crypto. Basically the reaction is, oh, hey, this is cool, but I don't know what to do with it, and I don't know why it's important. So I think, again, that's a challenge that comes with every early technology, where you have people that are so passionate, the core community that's building, and so the level of knowledge gets so higher and higher and higher. And as the technology develops, you're catering to those people with that high level of knowledge. So it basically estranges people that want to get in more and more, until you have something that comes in and really makes it accessible and sort of levels the playing field. So that's what we're focused on, and that's what that's what we think is really important for this space to get to a significant level of adoption. So I'll talk about, I mentioned some of our backers earlier, and it's for a really specific reason, which is that in our view, even if you solve these problems I talked about here through an app, and it's seamless, it gets in the hands of somebody that has no background in crypto, and they can understand why I need to use this, and they can do it really easily. It doesn't matter if it can't get in it doesn't matter if you can't get people to download that app. And so again, on the point of accessibility, it comes through the user interface, which I talked about, but social media really is the most valuable currency today. If you can't get something in front of people, if you can't get a new technology in front of a large segment of people, it doesn't matter, because it's still not going to get meaningful adoption. So we're really focused on, again, on accessibility, as I keep mentioning. But with WonderFi, we have this unfair advantage, which is some of the biggest names in finance, in crypto, and in social media behind us. And these aren't paid promoters. Like these are investors in the company that are aligned on our accessibility mission, and they all have different reasons for getting involved. So Kevin O'Leary, who a lot of people are familiar with from Shark Tank, he's a traditional investor. He's just looking for ways to earn interest on his assets, and it's as simple as that. And DeFi provides him that opportunity. He's an investor in FTX, in Circle, and WonderFi is his third venture that he's invested in. And I'll talk just for a moment about Josh Richards.
We've actually got it. We just got one more minute, Ben. We got to wrap it up.
Yeah, sounds good. I think the reach of these people is extremely important, because it does help to get the message out. And again, it's a lot of companies in the space are spending a lot on marketing to get their product out. But I think having people aligned, really focused on the accessibility mission is extremely important, and it creates a lot of consolidation opportunities. Just with the last sort of 15 seconds, I think WonderFi, we just completed a public listing. We're publicly traded on the Neo under the ticker Wonder. So that's a great way to get exposure to the DeFi space for institutions, or even retail investors that don't want to hold assets. They just want to invest in the traditional way.
Well, thank you so much for taking the time to come and speak with us today, Ben. We very much appreciate it. People can Google, and I suggest we all take a look at the project, of course. We've had such a wonderful outpouring of content today, and I really appreciate your participation.
Absolutely. My pleasure.
Thank you, Ben. You take care. So, hello, Spencer.
Hey, Justin, we're not done yet. We actually have a surprise speaker coming on.
Are you going to sing
right
for
now.
us, Spencer? No, it's a surprise speaker.
That's what
Okay.
it is.
I was hoping for something a cappella. That would be an awesome way to end it.
No, those days are long gone, Justin. But before I bring him on, I just want to do one thing real fast. I mentioned yesterday, and I don't think I mentioned it today, as a matter of fact. So let me do this. Our next in-person event is soon. It's actually next month.
Yeah.
Can you believe it? Next month. It's like 6 weeks from now, October 14th and 15th, the Benzinga Cannabis Capital Conference. It'll be a hybrid event, part virtual, part in person. I'll be there, so you can meet me if you want. And
Yeah, hybrid event. No pun intended on the cannabis thing, huh, Spencer?
Pun definitely intended. Pun definitely intended. But let's roll the trailer we have, AT, if you're still there. There it is up on the screen, bzcannabis.com to learn more how you can attend the next Benzinga, as we call it, the CCC, Triple C, Cannabis Capital Conference. Looking forward to that. And now, Justin,
Yes,
let me bring on our surprise speaker we have today. This is someone who is a builder at Benzinga and super, super into crypto. And a couple months ago, he took it upon himself to make our own token, Zincoin. And John G.
Wow.
Can we bring you on? Do we have John G? We have John G.
Hey, guys.
Hey.
How you doing,
John.
How you doing, Justin?
Good. How are you?
I'm doing pretty good. You guys
John?
are long at it. Is it 16 hours and 2 days of content?
More than
We could do this every day, John. This is all we live for. To continuously talk blockchain every moment of the day.
So John G made for us. He made Zincoin.
Yeah.
You made Zincoin. Explain what Zincoin does.
Sure.
And I think also, can we share your screen? Let's do that.
Share my screen real quick. So let me, we got some stuff up here. Let's see. So yeah, Zincoin. So Brian's another builder here at Benzinga. He handles a lot of our customer support. He's also really into crypto. If you haven't seen him, he's a host on our Moon or Bust show. So I definitely recommend checking that out as well. We have a lot of crypto content all the time here at Benzinga, so definitely check that show out. It's Monday, Wednesday, Friday, I believe, 2 p.m.
That's it.
So definitely check that out. So Brian and I had a conversation about like how we could basically create our own token. And so we went and launched our own a smart contract token on the Ethereum mainnet, an ERC20 smart contract called Zing. And so you can just kind of follow along. We've been doing this on video, so you can see us kind of like talking about the details of how we do this, and then on to like deploying to the test net. So we went through and used the different like open source technologies out there that allow you to basically launch your own smart contract in a way that someone like myself and developers just kind of learning it can figure out how to do it and actually launch their own contract. And so we did that. We launched the Zing token, and this is a video of the actual launch day, going through and actually launching the token. So you could watch us live. I believe it was June 18th, launched the Zing token. I mean, it's actually still sitting up here in my MetaMask wallet. So you scroll down here, There's a billion Zing just sitting in my MetaMask wallet.
Damn, billion. So
a billion Zing.
What,
I wanted to be a billionaire, so I made a billion.
What is the real world? I can't talk anymore. Use case for Zing coin.
Yeah. So, I think it's very interesting. All these tokens, so like you have these meme tokens come out. There's other tokens that like represent basically the proportion of like how you can vote in these different decentralized autonomous organizations. There's always like very interesting use cases of tokens coming out. And one of the use cases that I think apply pretty interesting to what we do here at Benzinga, we build a bunch of products. So you can see here on the left, we have this mobile app. We also have, which I should have pulled up, a pro.benzinga.com product. So if you go here, we have our real-time news feed and a bunch of different tools that help you like access the market data. And we have a large community of people on there chatting, figuring out how to like access, find opportunities in the markets and use our tools to do that. So what Zing can be, actually similar to our good friends Voyager, they have a loyalty program. So we could easily do a very similar program as a loyalty token distributed on a technology like the Ethereum network.
That sounds awesome.
Very cool.
Yeah, and so we're actually giving it out for free. So if you come here and go to this page, benzinga.com/Zing, and join Zinger Nation with your email, you can get 1,000 Zing. And so I believe we've given away so far 50 million Zing. There's a number of different ways to earn Zing through our mobile app currently. And you can get 1,000 Zing for just entering your email here on this page, benzinga.com/Zing, and you'll get an email to tell you a little bit about what we're doing with Zinger Nation and Zing. And you can download the app. You'll get another 1,000 for downloading the apps. You can see here, we used to be 10,000. If you were an OG early person getting in before our launch date, you were rewarded 10,000 Zing, but now it's 1,000. So you get 1,000 for entering your email, and then another 1,000 for downloading the app. And then we have Zing for like referring other members. So you get 100 Zing for referring other members. And there's all different types of other ways to earn Zing. So you can actually earn Zing for referring members and then reading articles. Let me go to article to actually claim.
So Jay in the chat's asking how you claim Zing. Jay, it's up on the screen, man. Benzinga.com/Zing. Right there. That's how you claim your Zing.
Let's go sign up, put in your email address.
I haven't done this yet. I probably should do this.
Yeah, you definitely should. Like,
I know I did. I'm pretty sure I did. I don't.
Yeah, I think you did. I pushed people pretty hard. Like, you should join. And so we have this. So another thing that we've been doing as a part of the Zing is people have been submitting trade ideas. So we're pushing to like get people organized, build community around just information around stocks, contribute information to like help people just communicate and collaborate around different opportunities in the markets. And Zing is a token that we can use to. This person got 20 Zing tipped their way for creating a great fundamentals and technical analysis here on this Disca stock. Mitch did this. I'm not sure what this is, but you can come in here and click and see what's going on with the stock, read our news, and tip Mitch some Zing for sharing some great information that might help you find some opportunities in the market. And so you can scroll through this feed and see a bunch of different opportunities. I actually found some interesting ones myself by going through this in the crypto world. So it's been a pretty cool working on this project and figuring out ways for people to earn Zing. And soon we'll hopefully have ways for people to kind of expend their Zing a little more, access to premium type products in our app and potentially pro. So we're figuring out exactly the details of what we're trying to do, but those are the opportunities in some sort of like reward type token for what the Zing represents. So
very cool.
Super cool. John G and Brian. Don't want to leave Brian out.
I'll say one thing too. I want to make sure it's clear because this is a question I get a lot. Because a lot of people, that's good. So actually, the last guest, Ben from I'm very bad with names. Ben from Justin. You just talked to him.
Yeah,
wait, Bytex.
Look at that from WonderFi.
No.
WonderFi.
I'm sorry, WonderFi.
Yeah, WonderFi. So Ben from WonderFi. I thought he brought up a great point. Because a lot of people are at all different levels of education on what cryptocurrencies actually are and how they function, and it's a very interesting, journey to get through understanding exactly what this is and what it means. Like when you go to Coinbase and you're buying your tokens, they have your tokens, and so it's like there's that knowledge of okay, they hold your assets versus like I can download this wallet and hold the assets or myself, or in this case with MetaMask, I'm holding my tokens on my MetaMask wallet in my Chrome browser. And so there's like these levels of education and onboarding. And that's another thing I think that Zing can become is helping people get educated and learning about cryptocurrencies in general. Because a lot of the questions that I've been getting from people who claim they're Zing is they want to get it in their wallet. And it's cool that there's a lot of people that understand that far, at least, that they have a wallet and they can hold their tokens in a wallet. There's other people that don't ask me that type of question. That it seems like there's a decent amount of people that are new to crypto. A lot of people tell me in the app, say, hey, I'm new to crypto. The people love our content. They've learned a lot from it.
Right.
And so that's what we're trying to do. We're going to get better educational funnels in here to make it easier for people to learn. But one of the important things to know with Zing right now is it says in my app, I have 18,570 Zing, but the Zing app is actually not a wallet. So it's not there. It's something that it's currently centrally held, and the actual tokens exist in one address here. So it's an important thing to know. I just want to make that clear about Zing and hopefully prevent like 100 emails coming to my inbox, people asking, can I have Zing in my wallet? So it's something that, we're not allowing that right now. I think this is more of like a marketing angle that would potentially be at some point could have a wallet where you can hold it yourself. But, this is just where we're at right now. And I wanted to make that clear.
All right, John G. Fun fact, John G was named the most valuable Zinger last year.
That was unexpected. That was a cool day.
So, John G, thanks a lot. The guy built Zing Coin. We had to bring him on here to talk about the project. Thanks a lot, John.
Thanks for having me, Justin. Thanks for having me.
All right.
Good seeing you.
One last thing before we end the day is we are at 390 likes right now. Actually, 391. Can we get to 400 likes in the next 10 seconds when I end this stream? Real quick, the winner of today's Slido, the free 1-year subscription to Benzinga Pro, David Wells. David Wells, we have your email. We'll be emailing you, sir, to redeem your 1-year subscription to Benzinga Pro. Congratulations, David. Oh, man, Justin, I so badly want to end this show, this stream, and get out of this room where I've been all day for the last 2 days.
With a song?
But I can't do it. I can't do it until we get to 400 likes because we're right there. We're right there. Crypto Morning Show says, I got you, Spencer. Thank you. I've had a lot of fun the last couple of days, Justin. I know you've probably had a lot of fun as well. What was your biggest takeaway from our first ever crypto festival?
I love how the first day we were focused on more kind of 10,000 foot view market stuff. We had Tim Draper here. We had Pomp here. That was really, really cool. I love the panel of tokenization. I love that one. Today we went into a pretty good deep dive on mining. That was really pretty neat. We almost had like a little mining track, and then a lot more. Starting out the day with Ben from BitBoy, had a lot more hands-on kind of market information and some projects that people were really pumped about too. I think it was a really good mix and tons of information. I mean, some shows kind of peter out in the second day if they're 2 days long. This one went straight through 8.5 hours of content 2 days in a row.
I'm doing some math in my head right now, so hold on a second. 1, 2, 3, 4, 5, 8.5 hours today. Plus 8 hours yesterday. And we're at 400 likes, which means we can end this show. So thank you to all of you for hanging out with us today, yesterday. We are back to our normal programming tomorrow. All the usual shows you've come to know and love. Thanks to Justin for co-hosting with me. Thanks to all of our speakers, our presenters, everyone in the chat, the events team for putting this together. And with that being said, that's a wrap for the first ever Benzinga Crypto Festival. Everyone have a great rest of your day. We'll see you tomorrow.
Thanks for joining us, guys. Take care.